दारू तो डिवोर्स तैनू लेना पऊगा जे जट्टा मेरे नाल रहना।
सुन जट्टा जेड़े तू ड्रीम देखदा है, फिल्मी जे मेरे नाल सीन देखदा है। सुन जट्टा जेड़े तू ड्रीम देखदा है, फिल्मी जे मेरे नाल सीन देखदा है। कुछ शर्तां ने पूरे तां जरूर होणगे जे मेरा मन लेगा कहना। कहंदी दारू तो डिवोर्स तैनू लेना पऊगा जे जट्टा मेरे नाल रहना। कहंदी दारू तो तलाक तैनू लेना पऊगा जे जट्टा मेरे नाल रहना।
कहंदी दारू तो डिवोर्स तैनू लेना पऊगा जे जट्टा मेरे नाल रहना। कहंदी दारू तो तलाक तैनू लेना पऊगा जे जट्टा मेरे नाल रहना। भुੱਲ ਰੱਬ ਰੋਮਸ ਆ ਪੱਕਾ ਤੇਰੇ ਨਾਲ ਕਦੇ ਇੰਜ ਨਹੀਂ ਤੇਰੇ ਤੋਂ ਜਾਂਦੀ ਬਾਹਰ ਮੈਂ।
ਭੁੱਲ ਰੱਬ ਰੋਮਸ ਆ ਪੱਕਾ ਤੇਰੇ ਨਾਲ ਕਦੇ ਇੰਜ ਨਹੀਂ ਤੇਰੇ ਤੋਂ ਜਾਂਦੀ ਬਾਹਰ ਮੈਂ। ਅੰਡਰ ਸਟੈਂਡ ਪੈਣਾ ਕਰਨਾ ਤੈਨੂੰ ਵੀ ਬੰਟੀ ਮੰਗਣਾ ਤੇਰੇ ਤੋਂ ਲੰਮੀ ਕਾਰ ਮੈਂ। ਤੈਨੂੰ ਪੈਣਾ ਏ ਵਿਆਹ ਦੇ ਪਿੱਛੋਂ ਘੱਟ ਕਰਨਾ ਯਾਰਾ ਬੇਲੀਆਂ 'ਚ ਬਹਿਣਾ।
ਯਾਰਾ ਬੇਲੀਆਂ 'ਚ ਬਹਿਣਾ।
ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਡਿਵੋਰਸ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ। ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਤਲਾਕ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ। ਟਾਈਮ ਨਾਲ ਚਾਹੀਦਾ ਏ ਬਸ ਮੈਨੂੰ ਘਰੇ ਵੇਟ ਬੂਟ ਵਾਲੇ ਹੋਣੇ ਨੀ ਡਰਾਮੇ ਵੇ। ਹੋ ਜੂੰਗਾ ਮੈਂ ਲੇਟ ਕੰਮ ਪੈ ਗਿਆ ਜ਼ਰੂਰੀ ਕਹਿ ਕੇ ਚੱਲਣੇ ਨੀ ਮੇਰੇ ਕੋ ਬਹਾਨੇ ਵੇ। ਮੈਥੋਂ ਚੋਰੀ ਬਾਦ ਕੱਢ ਜੇ ਤੂੰ ਆਇਆ ਕਰਕੇ ਤਾਂ ਕਲੇਸ਼ ਪੱਕਾ ਪੈਣਾ। ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਡਿਵੋਰਸ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ। ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਤਲਾਕ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ। ਹੋਰ ਤੇਰੇ ਤੇ ਪਾਬੰਦੀਆਂ ਨਹੀਂ ਲਾਉਂਦੀ ਬਸ ਹੈ ਵਟਾ ਤੂੰ ਛੱਡ ਦੇ ਨੀ ਮਾੜੀਆਂ। ਰਾਮਗੜ੍ਹ ਭੁੱਲਰੋ ਤੂੰ ਆ ਜਾ ਭਾਵੇਂ ਕੱਲ ਨੂੰ ਵੇ ਖਿੱਚੀ ਬੈਠੀ ਜੱਟੀ ਤਾਂ ਤਿਆਰੀਆਂ। ਮੈਨੂੰ ਨਹੀਂ ਉਹ ਮਹਿੰਗੇ ਮਹਿੰਗੇ ਗਿਫਟਾਂ ਦੀ ਲੋੜ ਮੇਰਾ ਤੂੰ ਹੀ ਸੱਚੀ ਗਹਿਣਾ। ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਡਿਵੋਰਸ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ। ਕਹਿੰਦੀ ਦਾਰੂ ਤੋਂ ਤਲਾਕ ਤੈਨੂੰ ਲੈਣਾ ਪਊਗਾ ਜੇ ਜੱਟਾ ਮੇਰੇ ਨਾਲ ਰਹਿਣਾ।
in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the Snam model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, 600. Today, 100, and we see it going down to 50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling costs of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick. It's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the U.S. and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah. So for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. This headline from the Bloomberg Professional Service. President Biden is expanding Russian sanctions to Nord Stream 2. That headline crossing moments ago on the Bloomberg. Worth repeating, President Biden expanding Russian sanctions to Nord Stream 2. Developing story coverage coming up right here on Bloomberg. Equities lower across the board as President Biden announces those sanctions against Nord Stream 2. New penalties hitting additional elites. S&P 500 now down by 0.8%. We're off session lows, but bottom line is pushing further into correction territory amid the rising tensions and a cyber attack on several Ukraine government and bank websites. The S&P lower by 31 points. We've got the Dow down 168, a drop right now of 0.5%. Nasdaq lower now by 156, a drop there of 1.2%. 10-year yield, 1.96%. 10 years down 6/32. Spot gold up 0.5, 19.08 the ounce. Crude now up 0.3%. West Texas Intermediate, 92.21 a barrel. Brent is at right now at 96.86 for a barrel of Brent. Well, plenty of debate about the size and frequency of the Fed's next move, with the decision coming March 16th as policymakers deal with those Ukraine tensions and inflation. Elsa Lignos is global head to RBC, global head of FX at RBC Europe Limited.
You know, at the moment, you've had material upward revisions to inflation since the tail end of last year to where we are today. And while they'll be very mindful, like I said, of the risks and geopolitical risk premium getting baked in, they can't ignore a domestic inflation problem at home.
And again, 10-year yield right now, 1.96%. After the bell today, we will be hearing from eBay, NetApp, Booking.com, and Hertz. S&P down 32, down 0.8, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, we are streaming on YouTube. It is Wednesday, February 23rd, 2022. Carol Masser, my co-host Tim Stenovic, is off today. Joining me is Bloomberg Markets correspondent Kriti Gupta. And Kriti, we've been bouncing around a little bit, certainly on the equity trade.
Yeah, it is messy. When we were supposed to get that technical correction, a bounce back from it, well, here we are, another down day.
Yeah, exactly. So we're going to talk about that. We're going to talk about that headline Charlie just mentioned, President Biden expanding Russian sanctions to Nord Stream 2. So we will get the latest on that. We will be hearing from the Ukrainian foreign minister. Also, it's not just a ground war, Kriti. It also is a cyber war. So we're going to have the details on that.
Yeah, I mean, no surprise here. Check out the stocks that are actually in the green. Palo Alto, CrowdStrike, that defensive trade showing up in cybersecurity.
I love it when we kind of see news and it impacts the markets directly. Also, Andy Kurtzig, founder and CEO of Just Answer, has nearly 300 employees in Ukraine. We're going to check in with him how they are managing and what steps they are taking. And also, we've got most read on Bloomberg today. I love this story about Goldman.
Yeah, fascinating stuff just in the kind of crux of the issue when we have so many labor issues across sectors.
Right, exactly. All right, all of that to come. First up, of course, you are listening to Bloomberg Business Week, brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, let's get to that market drivers report. Let's set the Business Week agenda on this busy Wednesday. And joining us right now, we have with us Bloomberg News cross-asset reporter Vildana Hyrick and also Bloomberg Markets senior editor Mike Regan. So, Mike, just quickly set the tone. What jumps out for you in today's trade?
Well, it's definitely still sort of a wait-and-see period, it feels like, to see how bad this Russia-Ukraine tension actually gets. I think you were right to key in on the cyber warfare potential of it all. We did see a noticeable sort of move lower in equities when that news hit that the banks and government websites in Ukraine had been targeted by denial of service attacks, presumably from Russia. So I think that is sort of an escalation of the tensions that should be on a lot of investors' minds, particularly if, it's not just Ukraine that Russia decides to target. if they could perhaps, send some warning shots across the bow of the U.S. With some sort of denial of service attacks. And, that's the type of thing, Carol, it'd be tempting to just sort of sell technology stocks because of that, and buy the security stocks like you mentioned. But it's just the type of thing that could really, I think, potentially affect any sort of sector. I mean, the Colonial pipeline hack of last year is still pretty fresh in a lot of people's minds of the type of thing that, it really could be anywhere if that were to come. So I think that's really sort of underscoring some of the nervousness we're seeing today.
Yeah, Vildana, hop on in here because we hear so much about these geopolitical tensions. We've heard about just kind of this hawkish pivot from the Fed, kind of spooking investors as well. But sometimes it's as simple as the technicals. Walk us through what you're watching.
Yeah, and I think you put it in a really great way, saying it's just been really messy trading because it has been really hard to find a constant for the market. Like today is really emblematic of a lot of what we've seen, which is we opened higher and then by noon we are reversing course. And so yesterday we saw the S&P 500 closing in correction territory, meaning it's down 10% since its last record high, which was at the start of January. And so a lot of people are just looking at charts and trying to parse through support levels. So this is something that I've been looking into, and investors are just trying to figure out where things could potentially stabilize or if there's just further, we could expect stocks to continue to sell off. So for a lot of technicians, actually the picture isn't looking so great. I talked to somebody at Piper, the strategist over there, Craig Johnson, was saying that the S&P 500 is living on the edge, is the phrase he used, because it is trading below its 200-day moving average. And he's keeping his year-end price target for the S&P 500 at around 5,100. But he said the backdrop really is deteriorating quickly, and so his confidence in his year-end price target is also deteriorating.
Mike, this is a tough environment where we have things thrown at us on a daily basis that certainly impact the trade. I've been watching the VIX in terms of the curve, and we understand that if this situation with Russia eases, the markets will settle down, right? But we just don't know if and when that will happen. It's the same thing with the Fed. We know the Fed's going to raise rates. We just don't know how aggressive and what's going to be the trajectory. There's a lot of questions out there that make it tough for investors to really trade this market, especially longer term.
Yeah, what's fascinating.
Do we have Mike?
There we go.
Come on in, Mike.
Carol, if you look at sort of your standard playbook for how markets react to geopolitical tensions, everyone will tell you, well, there's often a very sharp drop, but it usually resolves itself pretty quickly. And that geopolitics rarely cause major corrections or bear markets. I think what's different, though, and what is really key this time is that some of the sort of ripple effects of these tensions, higher oil prices, higher industrial metal prices, higher wheat prices even, all of that is feeding into sort of the bigger concern of the markets, which is this inflation and what the Fed will do to tame it. And I think you're right in that we would really need to see some sort of signs that this inflation is there's an inflection point in inflation and the Fed's reaction to it. And given all the comments from the Fed officials since the last meeting, Raphael Bostic yesterday being the most recent, it doesn't seem like any of this is enough for them to blink, to sort of change their outlook for interest rates. It takes a lot to cause the Fed to pivot from sort of a chosen direction.
Yeah.
And so far, it doesn't seem like these geopolitical tensions are really enough to do that, because they are sort of exacerbating that price shock, that inflation shock that the Fed is trying to counteract. So it is a tricky market to navigate for sure.
Makes our life interesting, that's for sure. Vildana, thank you so much. Vildana Hyrek, cross-asset reporter at Bloomberg News. Mike Regan, our senior editor at Bloomberg Markets. Let's get to the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot. And Creedy, today's number is 18. Moderna reaching a distribution deal with Adium Pharma to market its COVID vaccine in 18 Latin American countries. The shots will be supplied from Moderna's plants in the U.S. and Europe. Latin American countries have relied heavily on vaccines produced by AstraZeneca, Sinopharm, and Sinovac in domestic campaigns, while also ramping up the number of messenger RNA shots produced by Pfizer in recent months. So, yeah, these deals go on. Just a reminder that we're in a global pandemic.
Yeah, we should also mention that Moderna is one of the worst performers today, and they're reporting earnings tomorrow.
That's something to keep an eye on. All right, let's also keep an eye on world and national news. Doing that for us, Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. Russian President Vladimir Putin says he remains open to diplomatic solutions concerning the situation in Ukraine, but in a video address to his nation, Putin argued the security of Russia's citizens is not subject to negotiations. His comments come as we learn that President Biden is leveling new sanctions today. He's imposing new penalties against the Russian company behind the Nord Stream 2 pipeline, as well as its corporate officers. The UN held a meeting today concerning the situation where Ukraine's Foreign Minister Dmitry Kuleba urged a united response to Russian aggression.
What is happening right now in eastern Ukraine, where Russian tanks are rolling in, and along the Ukrainian borders, where Russian forces are amassed in enormous quantities, must be a concern for everyone.
Ukraine's Foreign Minister Dmitry Kuleba will be interviewed on Bloomberg today at 3:40 Wall Street time. Well, the threat of extreme wildfires may increase by 14% this decade, and the damage will be more than most communities can manage, as we hear from Bloomberg's Amy Morris.
The report from the UN Environment Program shows that even if there are deep cuts made to greenhouse gas emissions, wildfires will be more intense and destructive. But UN researchers say many nations are still spending too much time and money fighting fires and not enough trying to prevent them. Communities are not ready for what wildfires are expected to bring in the next 25 years. Researchers say fires are changing because we are changing the conditions in which fire occurs. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. It's just a reminder. I do feel like these are the kinds of days that, headlines are going to keep coming, right, when it comes to Russia and Ukraine. I'm sure you do. You're watching the markets. You're on TV. You're on radio. You just have to kind of keep an eye and just get a feel of, what might be coming or what does come and just look to see what impact it has.
Yeah, and you know what's surprising is we do see these headlines. And in the early moments of this crisis, you did start to see kind of traders react to every single headline. Now it just kind of seems like there's this fatigue, this exhaustion kind of baked into the market.
Yeah, like you almost get to the point, okay, there's some volleying going back and forth, and let's see what actually sticks and has a longer term impact. Right. In the meantime, there is a story that Kriti and I are watching and wanted to bring to you. Germany's economy minister saying that the country could do without Russian gas, but as our reporters point out, Kriti, it's not going to be easy.
Yeah, and what's interesting about the story is simply that Russia is not the only spot where you can find it. Remember, we had Joe Biden, the Biden administration, try to say, maybe we can kind of renegotiate some of those contracts from Qatar, and also the number two suppliers, also Norway. They're already pumping at full tilt, and Germany really have no means of importing those cargoes.
Listen, it's really rough. Europe's industrial powerhouse, by the way, currently relying on Russia's Gazprom for more than half of its gas, and if anything, demand will only grow as the country phases out nuclear and coal-fired electricity. Number two supplier, Norway, already pumping at full tilt, and Germany has no means of importing liquefied cargoes. I mean, this is, we talk about these bigger, broader supply chains. It's stuff like this that makes you think, okay, I need to have maybe multiple sources where I get things. The thing is, countries work out these contracts, right? And everything's fine when it works.
Right, and they do it way in advance, and that's what's so tough here, because a lot of these contracts that have been negotiated by Norway, by Qatar, well, they're happening with Asian countries, Singapore, South Korea, Japan, who also need those supplies. So what do you do? What's that phrase? It's like steal from one, give to the other, or whatever the phrase is there.
It's also tricky that I think as countries are shifting away because of climate change to cleaner fuels, they're maybe probably cutting down the outlets that they go to, but they're also maybe cutting down some of their domestic production as well. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is a down Wednesday. The Dow, the S&P, NASDAQ trading at or near session lows. Right to the numbers. We'll give you the why in a moment. Familiar themes, those sanctions, Ukraine, Russia, S&P down 41 points now, drop of 1%. We've got the Dow down 242, down 0.7. NASDAQ now tumbling 184, drop there of 1.4%. Broad-based selling, Russell 2000 down 0.8%. NASDAQ 100 index, by the way, down now by 1.4%. Bottom line here, S&P pushing further into correction territory. 10 years down 8/32, 10-year yield 1.97%. Gold is up 0.5%, 19.07 the ounce, while West Texas Intermediate crude up 0.3%, 92.16 a barrel. Brent, the global benchmark, 96.87 for a barrel of Brent, little changed, up less than 0.1%. Equities lower across the board as President Biden expands sanctions against Russia with new penalties hitting additional elites and the builder of the Nord Stream 2 pipeline. Recapping, S&P down 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. A lot going on when it comes to Ukraine, Russia, the U.S., and NATO allies. Charlie, of course, mentioning the U.S. unveiling sanctions on Nord Stream 2 pipeline. That's the latest round of sanctions from President Biden. The EU has called an emergency in-person summit of the bloc's leaders. That is to happen tomorrow. And then we've often seen a lot of analysis about what we got from the President of the United States yesterday about sanctions, how they didn't seem to do much. So let's get the latest on the situation, what you need to know. Jody Schneider is political news director for Bloomberg TV and Radio. She joins us in our Interactive Brokers studio in New York City. We keep saying, Jody, it's fluid. What should we, the president just unveiling, right, another round of sanctions. Talk to us about the significance of that.
Yeah, so we're expected to see this expanded package maybe as soon as today. We're hearing this from people familiar with the matter.
They haven't been done yet.
They have not yet been done,
okay.
but we expect we're seeing them, and our Bloomberg News colleagues are reporting this, according to people familiar with the matter. And the penalties would hit additional Russian elites that are close to Vladimir Putin, as well as the builder of the Nord Stream 2 pipeline. This would be on top of the sanctions that were announced yesterday, that the president announced in his remarks at the White House, which some said were measured, others said were a little too modest. And he's getting some criticism in Congress, mostly from Republicans, saying, why have we not gone far enough? The president yesterday in those remarks said that the beginning of the invasion was occurring, and yet he wasn't hitting hard. So this is what's taking place now. The White House says that they're going to continue to roll out sanctions if Putin, I guess, would escalate the incursion into Ukraine. So we're watching all that. We're also watching what's happening with the EU and other NATO allies and what they do with sanctions.
I'm really glad you mentioned the EU allies, because we've kind of very closely been here before a couple of times historically, like 2014 in Crimea, 2008 in Georgia, very similar concepts. How much further can these sanctions actually hit Russia? Are they still effective, given we've gone almost 10 years where Russia has been trying to de-dollarize and trying to kind of bolster or cushion, I should say, the impact? Are they still going to be effective?
Well, that's right. That's a key question in all this. I mean, I think there's two questions there. One is, does Vladimir Putin care? Right. Is this a deterrent effect? Has this been a deterrent effect at all? It doesn't really seem that it has. Now, maybe it will deter, a dramatic escalation. Yeah. But the other one is, as you point out, do they work overall? And they haven't really seemed to work so far, right, in the sphere you're talking about. But, these, and of course, they could dramatically escalate. If they went against big Russian banks, which has been threatened, that's a different situation. Right. And if they went to the nuclear option, as they've discussed, of doing the SWIFT,
right,
currency sanctions, that would be a whole other matter. No one thinks that Joe Biden wants to go there. And then there's a chess game involved. If you give up too much with the sanctions, because you don't really have anything else, he's made it clear that there will not be American troops on the ground, in Ukraine. So you have to hold back a little bit, because what currency do you have if you use everything now? So it's a waiting game at the White House, and everyone's watching and waiting to see what Vladimir Putin does next.
Is there a tipping point, do you think, for President Putin in terms of something that does slow him down significantly? Because you look at his speeches and what he has said, he feels this territory was part of the former Soviet Union. It feels like this belongs to Russia. And so a lot of nationalism, right, coming from him. So is there something that is seen by the experts as there is a tipping point that will slow him down, or do most expect that he's going to go all the way?
Yeah, and that's another set of key questions in this. He has made it very clear that what he wants, that what he kept saying could be something, the West's get out of jail free card here would be to promise never to allow Ukraine to become part of NATO, which of course is not something that the U.S. or its allies in Europe are willing to do. So it's unclear what else might satisfy him. And there's been some thinking that that's what these diplomatic efforts with Anthony Blinken and his counterparts among the European nations have been in recent weeks and months, that to try to come up with something that could satisfy Putin, but they haven't been able to seem to come up with anything.
One quick question. How political is this becoming in the United States? Because we've even seen division among the Republicans, but I just wonder about this lack of support, congressional support for President Biden in this.
Yeah, and this, of course, it's a midterm election year, and the whole thinking is, foreign policy doesn't really matter in those elections, but there's a big, there's one big caveat this year that could make it matter, and the price of gasoline. And if this really disrupts oil markets and gas prices, which have been going up because of the inflationary pressures, if they go up further, this could be really difficult, as Jimmy Carter saw, as others saw when inflation tied to international tensions went higher, and that could really hurt the Democrats in power.
What are you watching? 30 seconds. Final thoughts.
Well, we're watching Putin's moves, and also another thing we're watching is China. Yeah. China's response here is very interesting, because while Putin and Xi spoke at the Olympics and they had those meetings, we haven't heard a lot from China in recent days. Very, very modest kinds of comments in state-owned media. So I'm watching them.
They've been upping regulatory oversight of their executives and businesses.
This is true.
But I agree. It's a really important aspect of this that we need to keep an eye on. Jody, thank you so much. I know it's busy. Jody Schneider, she's political news director for Bloomberg TV and Radio in our Interactive Brokers studio. Let's not forget that we will be hearing from the Ukrainian foreign minister in an exclusive interview on Bloomberg Radio and Bloomberg TV. So we will take you there live about 3:40 p.m. Wall Street time. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Wednesday. Carol Master along with Kriti Gupta. And Ukrainian situation, we know that there is stuff happening on the ground, right? We know that militarily wise. But there's also a cyber warfare that we have to think about.
Yeah, it's wild, and it's totally showing up in the markets. Carol, you know I love to watch stock market. A lot of red on the screen, green when it comes to cybersecurity stocks.
We're going to get into what's going on when it comes to cyber attacks in Ukraine, in the Ukraine. All right, first up, let's get back to your top business stories and a check on that trading day. Hey, Charlie Pellet.
Well, hello there. Red on the screen, Carol and Kriti. The Dow, the S&P, NASDAQ session lows right to the numbers. We'll give you the why in a moment here with the S&P now down 52 points, down 1.2%. The Dow is down 302, a decline there of 0.9%. NASDAQ down 236, drop for the NASDAQ Composite Index right now of 1.8%. NASDAQ 100 Index down 1.8%. Russell 2000 lower by 1.1%. 10-year down 8/30 seconds. 10-year yield right now 1.96%. Spot gold is up 0.5%, 19.08 the ounce. Crude oil has been advancing, up by 0.1% right now on WTI, 91.97 a barrel. Traders and investors continue to monitor developments out of Ukraine and Russia, and it is raising questions, the higher price of oil, about inflation implications in the United States. Anastasia Amoroso is Chief Investment Officer at iCapital.
The biggest reaction that the markets are likely to have to Russia and Ukraine is not necessarily in the equity markets, but through the commodity channel. And you see today, once again, the price of oil is higher. We're inching close to that $100 barrel of crude oil. And what does that do to demand? At one point, does it get disrupted? These are all the questions that the markets are grappling with right now.
Tenneco has agreed to be acquired by affiliates of Apollo Global Management in a $1.6 billion deal to take the auto parts supplier private. Tenneco shares surging today. Tenneco up now by 93.2%. Lots of earnings after the bell today. Among the companies scheduled to report include eBay, down now by 0.5%. NetApp Inc. down 1.5%. Booking Holdings lower now by 1.4%. And Hertz Global Holdings lower by 2.9%. Recapping, sell-off underway. S&P down 53, down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Kriti Gupta. Now, as we watch the situation over in Ukraine, there's one other front to keep an eye on, and that is the cyber attacks intended to create chaos and undermine the Ukrainian government. That story from Jeff Stone, cybersecurity editor at Bloomberg News. He joins Kriti and myself here in our Bloomberg Interactive Broker studio. How are you?
Busy. How are you? Thank you for having me.
Well, it's good to have you here. You are busy. Anything and all things Ukraine right now. What's going on here?
It changes by the day, right? You alluded to this, but we have seen a number of attacks that are intended to create chaos, create confusion, create difficulty for Ukrainian government websites trying to stay online. And it's really tough for banks to stay online.
What does difficulty mean?
They're overwhelmed with inauthentic traffic that appears to be coming from within Russian borders.
And that traffic does what?
Knocks the websites offline. So if you're trying to access your bank, you can't gather your transaction details, for instance. You can't access information from the Ministry of Foreign Affairs, for instance.
That would freak me out.
Yeah.
That sounds scary. How much further can it really go?
It's hard to say. We haven't been in a situation before where a traditional warfare situation, troops on the ground, if you will, is combined with this kind of stuff that we've seen evolve in cyberspace over the past 5 or 10 years. It can get worse.
Jeff, it does feel like Russia is just chipping away at Ukraine on so many different fronts to really kind of undermine the citizens there.
That's true. I think that's part of the strategy. We're speaking with folks in Ukraine who say essentially that the goal here is to exhaust us. It is to intimidate us. It is to wear us down.
Well, I guess my question here now is, if you do have that kind of exhausting, wearing it down, idea. Can't they go the other way as well? Can't cyber attacks happen on Russia as well? Is this a means of warfare if you're not seeing those physical troops on the ground?
It absolutely is. We know that the Russian government is particularly advanced and sophisticated with this kind of stuff, but we have seen attacks against them. Not from Ukraine as of yet that we know of, but we've seen cases in the past, certainly from the U.S. U.S. intelligence has affected Russian government activity in cyberspace prior to the last election.
Well, this is kind of interesting, right? As we are watching what some would say are 2-week sanctions imposed by the U.S., that you do wonder, right, what's going on behind the scenes in terms of cyber warfare, right, which is something that doesn't always get talked about, at least initially.
That's right.
But you do wonder. What are you hearing stuff on that front in terms of the U.S. specifically and NATO allies?
We haven't heard anything about that yet. I would be surprised if it's not happening. They certainly have the capability to take Russian banks offline, for instance, as we've seen in Ukraine, and affect. They can certainly get into emails and things like that. We haven't seen anything indicating that's happening yet, but that's a harder story.
So how do you protect yourself against this? If I'm a Ukrainian citizen, hypothetically, what do you do to prevent yourself?
I think that candidly, your concerns, if you're a Ukrainian citizen right now, are not in cyberspace. I think that you want to probably take out cash and make sure that you can access your information, have it handy. But a lot of this stuff is kind of a tit for tat in terms of the geopolitics. We know that the Ukrainian government, for instance, is trying to ease some of this burden so that it's not a thought for people yet.
It's just a...
I was going to say, it's fascinating that you just mentioned that you kind of have to look at your cash right now, because anecdotally, I mean, I have friends who are German or live in Europe and have families in Ukraine, and anecdotally they said, well, everyone's pulling their money out of their bank accounts, they're spending it on real estate in Western Europe, and this is what the president of Ukraine was talking about, right? He was saying to President Biden, actually say, tamp down the rhetoric, because you're seeing capital flows exit Ukraine at a pace that you just haven't seen. And I thought, my little market hat on, I was like, oh, they're talking about financial markets. That's not what they're talking about. They're talking about people's savings. Right. It's wild.
If I can say one more thing, they also we also are trying to keep this as grounded as possible, as you alluded to, the president saying, because fears or overemphasizing this kind of Russian capability in cyberspace plays into the Kremlin's hands. You don't want to create that panic that you kind of alluded to.
No, it's really smart, right, to be level-headed about this. But at the same time, this is our current world, right? In terms of warfare, we've talked about this, right, over the last really decade or so, if not more, that this is how it is often played, or will be increasingly played.
Right.
Well, you're going to be busy. Jeff, thanks for getting up to speed, because this is another side of the story that we just wanted to bring to our audience. Jeff Stone, he's cybersecurity editor at Bloomberg News here in our Interactive Brokers studio. And just a reminder that we are going to hear from the Ukrainian foreign minister, so we'll get what is on their mind in terms of a nation overall and what their citizens are facing right now.
Yeah, and it's wild, just the different fronts and the different ways that it's actually affecting not just Ukraine, not just Russia, but really every country around the world.
Absolutely. And we're obviously keeping a watch on the markets as they bounce around, a little bit more toned down than they were yesterday, but nonetheless, they're down across the board, down more than 1% on both the S&P and the NASDAQ. Back to World and National News, Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. President Biden is adding to the sanctions against Russia. This is on top of those he announced yesterday. The new U.S. penalties target the Russian builder of the Nord Stream 2 pipeline and its corporate executives. These new sanctions are also in response to Vladimir Putin recognizing breakaway territories in Ukraine as independent states. President Biden's Build Back Better plan may be stalled on Capitol Hill, but activists and progressive Democrats are pressuring him to act on his environmental agenda.
They're lobbying the White House to declare a climate emergency. That could allow the president to use executive authority to shut down crude exports, suspend offshore drilling, or redirect funds to clean energy projects. Several members of the Congressional Progressive Caucus are backing a bill that would mandate a national climate emergency. Former President Donald Trump used a similar step to divert defense funds for a border wall. In Washington, I'm Nathan Hager, Bloomberg Radio.
Opening statements started today in Louisville for former officer Brett Hankinson. He's charged with 3 counts of wanton endangerment, accused of shooting into an adjacent apartment while serving a no-knock warrant on the apartment of Breonna Taylor. Taylor was killed during the commotion, but Hankinson is not charged with her death. Assistant Attorney Barbara Wiley.
You will hear that his bullets
went through apartment 4 into apartment 3 and nearly hit Cody Etherton as he was walking down the hallway into the dining room of his apartment.
Again, that's Assistant Attorney General Barbara Whaley. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons in our 99.1 newsroom in Washington, D.C. In just a moment, we're going to talk about the most read story on the Bloomberg terminal. It has to do with one of the big Wall Street banks. In the meantime, there's another story by our Jonathan Browning of Bloomberg News about J.P. Morgan Chase. And we've got Kriti Nigeria alleging that J.P. Morgan Chase ignored, quote, overwhelming evidence of fraud and stark warnings from its own compliance staff as it kicked off a London trial over transfers to a former oil minister accused of corruption.
Yeah, wild story. Nigeria kicking off a 6-week trial over the role of JP Morgan in those payments. JP Morgan in return calling that claim over those transfers to the ex-minister, quote, baseless. To me, I don't want to stretch this too much, but to me, this sounds very similar to the IMDb scandal.
Exactly.
Over at Goldman.
And this is, and I also go back to the Swiss bank accounts. Like increasingly, there is more and more like we want to know, we want greater transparency when it comes to global financial institutions.
And can I just correct myself? I one MDB,
Sure.
not IMDb.
That's
Clearly,
okay.
my head's in the film space.
Exactly. Nicely done. We have been watching a lot of films online. But it's interesting that there is greater oversight. We want transparency with financial institutions in terms of who they are transacting business with, especially
Right.
when there are, regulations, global laws about what are global banks and who they can transact with.
Yeah, especially in a world where those transactions are far more interconnected. I mean, let's just bring this back to the story of the day. Those geopolitics, the reason these sanctions work is because of how interconnected the global system is. And this is just another example of that.
Right. It's a really good point. And there's no leverage if financial institutions somehow are able to go around this.
Right.
Let's just put it out there that JP Morgan, according to Nigeria, acting negligently in transferring some $875 million between 2011 to 2013 from escrow accounts to Dan Etet, hopefully I'm saying that correctly, who had been convicted of money laundering. This is from the Nigerian lawyers. They put that out there today. They cited an email by JP Morgan's senior country officials saying the matter, quote, had gone right to the top of the firm. So again, this is out in a lawsuit and you have two sides. So obviously more to come out in that trial. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Peloton. A down day for U.S. equity markets. We begin with a developing story in this headline from the Bloomberg Professional Service. The United States is eyeing a release from the oil reserves as prices rise on those Ukraine-Russia tensions. Right now, we have got West Texas Intermediate crude down 0.1%. 91.85 a barrel. Brent, the global benchmark, down 0.2%, 96.96 a barrel right now on Brent. Again, the U.S. is eyeing a release from the oil reserves as prices rise on Ukraine. Stocks now lower across the board, remaining lower. In fact, lows of the day. Equities down as President Biden expands sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. S&P 500 index down now by 1.3%, pushing further into correction territory. The S&P is down 56 at 42.48. The Dow lower by 332, down 1%. Nasdaq is down 246, a drop right now of 1.8%. 10-year's down 10/30 seconds, 10-year yield 1.97%. Spot gold up 0.5%, 19.07 the ounce on gold. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, this is our most read story on the Bloomberg today, and it has sat there all day. It's another one by our Sri Natarajan, and I guess, I don't know, can we call it a clawback? We'll see what he has to say. Goldman essentially wants your bonus back. So here with who the firm is targeting is Sri. He is finance reporter at Bloomberg News in our Bloomberg Interactive Brokers studio. Is it a clawback? Is it the ultimate clawback?
It definitely is a threat of a clawback. What they're really doing right now is taking steps to confiscate pay from a couple of their departed executives who left to start this banking startup backed by Walmart. It's a small startup. It would be somewhat similar to Goldman's own consumer banking aspirations, which took root 5 or 6 years ago, and these two executives were key to that. But what Goldman is doing here, which is what is rare and unprecedented about that, is they're going after pay that has already vested and been taxed. We've heard a lot of instances where deferred pay gets taken away. You go from Goldman to JP Morgan, Goldman to Morgan Stanley. You don't have a chance of keeping your deferred pay. That's always
But you don't
gone.
have it yet, right?
You don't have it yet. In this case, they have it. I mean, we also cite examples in the story where even the deferred pay is getting pulled from people who are moving to clients and buy-side firms that would typically not be treated that way. But even if you're willing to set that aside for a second and just count that as an aggressive turn of the dial, what they're doing with the vested compensation that's already been delivered to them, that really stands out. And that, to me, and a lot of the people I've spoken with, is really the prime example, perhaps, of Goldman and its CEO sending a message, making it loud and clear to staff who are still at the bank and thinking about jumping ship. It might be very costly to do so.
Well, what's interesting to me, and you say this in your story, you say that this is something that normally happens when it's used for punishment. It's reserved for cases of misconduct, not necessarily new jobs. And we saw this before, not necessarily at Goldman, but we saw this. You also quote this in your story, an infamous incident with Andrea Orcel. I remember that story, moving over to, I want to say Banco Santander, right? Yeah, the Spanish bank, over from UBS. So this has happened before. It's almost like it's been in the making.
Except that's a little different. That's one level less aggressive because Andrea Orcel, who was running investment banking at UBS at the time, moving to Banco Santander, a Spanish retail lender, what blew up that contract was the fact that his deferred pay was taken away.
Okay.
In this case, they not only took away the deferred pay, but they're also going after pay that has been delivered. That is what makes it a little mind-boggling.
Well, this is interesting because it also speaks to when it's vested, right? These are executives who put in their time, right? And delivered on certain things, right? Can we assume that? And then we're awarded.
Absolutely. I mean, the performance bonus is what all these large Wall Street firms thrive on, and it's awarded at the end of the year. It is supposed to be a pay-for-performance culture. It vests over 3 years, and you're restricted from selling it for 5 years. But those are all steps put in place to make sure no one's making a quick buck so that the stock's going up in the short term, and then you cash out and the stock tanks, which is why these measures are in place. But you're using some of those restrictions to now find a backdoor into clawing back that pay.
Shri, it sounds like Goldman's getting incredibly aggressive with a lot of stuff. What's going on here?
It's the broader backdrop. We have been speaking about for the last 2 years, through the pandemic really, about this intense battle for talent. What have all the major firms done? In a period of record revenues and profits, we saw for when it came to their 2021 pay cycle, all of them increased their compensation. They boosted pay. Bonuses were raining down, and the bonuses were going up to a level that you hadn't seen since the financial crisis, and in some places to a new record. That is one side of how you deal with a talent war. The other, uglier side, I guess, is also trying to send a message to those who are leaving that there is only one top dog in town, and you don't want to get on the wrong side.
Well, what's interesting to me is that this also follows, like you said, this compensation has been increasing for a while, right? And it's also eating into their bottom line. So you kind of understand in a way why they're making this decision. It's getting very costly.
Yes and no, I would say, because remember the firm that coined the phrase, or at least made the phrase popular, long-term greedy? That is Goldman Sachs. Its former leader, Gus Levy, in the 1960s when he was leading the firm, till his dying day, he was the CEO of Goldman Sachs. He ran that place. And that is when this whole idea of you have to be long-term greedy took root. And over the last 50, 60 years, that has been a firm that's been closely associated with Goldman Sachs. So the question is, some of these measures, which are likely to irk clients, and we point out a couple of instances in the story where it has irked clients or has led to some awkward conversations, does that eat into this long-term greedy ethos? In a time of record capital markets, record deal-making activity, massive trading activity, you may not necessarily see it in the numbers, and the Goldman Sachs brand has been built over 150 years. Nothing's going to shake the foundation if 2, 3, 4, 5 clients are upset, but you have to wonder what long-term impact it does have if the trend continues, and really, is that the best way to boost loyalty and association with the firm?
Well, and I do think bottom line, it is about the bottom line, right? Goldman concerned about, preserving the revenues, the relationships, right? Because when some of these big top earners and deal makers go, that certainly impacts them.
Yes, but they've also done a fabulous job over several decades of cultivating what is the corporate world's most powerful alumni network. When these successful rainmakers leave 200 West Street, Goldman's headquarters in New York, and take up a lucrative second career, they will come back to Goldman for advice, deals, trades. That that is really a connective tissue for a lifetime of shared riches.
Yeah, and you always feel like Goldman's really, really good at that. We're going to watch and see if other Wall Street firms follow. Shri, fantastic story. Shri Natarajan, finance reporter at Bloomberg News. It is our most read story on the Bloomberg today. All right, February is Black History Month. Every day this month, we are celebrating significant moments in U.S. Black history. Now with your installment for February 23rd, here is Bloomberg's Renita Young.
On this day in Black history in 1979, Frank E. Peterson Jr. is named the first Black general in the U.S. Marine Corps. He was determined to serve his country despite racial discrimination. Peterson first attempted to join the U.S. Navy, but was asked to take the entrance exam over because administrators believed he had cheated. In 1950, Peterson enlisted in the Navy, and 2 years later, as a Marine, he completed flight school and was commissioned as a second lieutenant. Peterson went on to become the Marines' first Black aviator and served as commanding general for the Marine Corps Combat Development Command. Throughout his career, Peterson received several military awards, among them the Navy Distinguished Service Medal, Defense Superior Service Medal, and the Purple Heart. So in 1988, Peterson retired as lieutenant general after serving as special assistant to the Chief of Staff. That's today in Black history. I'm Renita Young, Bloomberg Radio.
All right, in just a few minutes, we're going to head over to our TV teams to talk about the markets. Right now, stocks pretty much hovering near their lows. We're down almost 2% on the NASDAQ, and we're looking at about a 1.4% decline on the S&P 500. Bloomberg Business Week, Carol Masser, along with Kriti Gupta on this Wednesday. This is Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
And this is the countdown to the close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostick, Taylor Riggs, joined now by our partners in crime, colleagues Carol Massa, Kriti Gupta, as we welcome across TV, radio, YouTube, a day where once again we're near lows of the session, Carol, on a drip effect. More sanctions, more tension.
Yeah, absolutely. Continuing to weigh on the overall market. I've been kind of keying in on the retailers. TJ Maxx, Ross Stores, under pressure, kind of dragging down the overall S&P Retail Select Index. And that after disappointment, Kriti, about some of their results.
You know, and what's interesting is that even on a down day, you would think with all the geopolitical risk, you would start to see a little bit of that haven bid going into tech, and yet they're the ones that are actually leading that decline.
Yeah, where is your safety today? It's not in bonds either. It's currently not in stocks, off by 1.4% on the S&P 500, almost 60 points lower on the day is currently where we stand on the S&P. But big tech once again feeling the pain. This is what drags your benchmarks lower, off by 1.9%, 252 points to the downside for the Nasdaq. The Dow Jones also off by more than a percentage point now as we speak. And Russell 2000, the small caps, not finding any love. We're off by 1.07%. That's 21 points lower, Taylor.
I feel a little bit like a broken record. Energy, again, the only sector in the green for the year and the only sector in the green for the day as well, as you're really getting, I mean, Brent earlier this morning touching a 99 handle. So energy stocks, of course, are up about 0.6%. And Romain, of course, this is sort of the story of the year, this rotation out of technology into value. Technology there at the bottom of the screen, you're off 2%, and discretionary as well, that sort of risk-taking behavior that is off the table. It's off almost 3%.
Yeah, I mean, there's so much talk about the S&P hitting correction. We're now potentially talking about a NASDAQ potentially getting into bear market territory, down 17% from that all-time high. 85 of the NASDAQ 100 stocks, we should point out, since that all-time high, are down by 10% or more. So this is broad-based sell-off you're seeing. And you're seeing it again today here with Amazon lower by about 2.8% here. We should point out most of the big cap tech stocks are lower here on the day, including Apple, Microsoft, Tesla, NVIDIA, Visa, Comcast, Alphabet, you name it. One of the few bright spots is in the energy space. You're seeing Diamondback Energy, the original FANG, by the way, up 1.5% on the day. That was on the back of their earnings, which are actually pretty good. And more importantly, the idea that they talked about discipline and not necessarily going back out there and drilling more. Remember, this is a big pioneer in the shale space here. And even they're saying, even with $100 oil here, they're holding back a little bit. We're going to talk a little bit later about TJX companies and some of the inflationary pressures they're dealing with, some of the supply chain issues they're dealing with. And then right there at the bottom of your screen, one of the few Russian stocks that actually trades here in the U.S. Yandex, a big internet company, ride-hailing service, down 12%.
And meanwhile, I like the way that you talked about the breadth of the selling, Romain. I'm going to talk about the lack of breadth in the buying and where we are from a technical level. This is sort of a great chart that was being brought up by Oppenheimer, the technical analyst over there, Ari Wold, talking about how at the moment only about a third of stocks on the New York Stock Exchange are above their 200-day moving average. You go back a year, 85%. For our radio audience, we're looking at a chart, 85% were above their 200-day moving average. On a day where we see only 78 of the S&P 500 players climbing, we are having broad-based selling. There is no breadth in your buying, and it's still not quite that buying opportunity, Carol.
Yeah, and you know, Caroline, you do wonder how much of that has to do with the companies reporting. We've got fewer companies that are actually beating earnings expectations. I know, Romain, you wanted to say something.
Well, I was just saying, what was the percentage that you said there, Caroline, on that?
Currently 36%.
36%, wow. Okay.
Yeah. So there's a lot of volatility. You do wonder about kind of the outlook that we're getting from global CEOs. Speaking of global CEOs, there's so much on their plate. And Caroline, you had a great interview with the CEO and chairman of Macy's. We're talking about Jeff Gennette. And you guys, as always, it feels like supply chain comes up. And he did seem to indicate that maybe things are getting a little bit better. Check it out, everybody.
When you look at kind of fresh receipts, which is the lifeblood of a retailer, about 60% of what we brought in last week were shipments that were intended for the month of February. That is a big change from where we were over the past year. So it is getting better. But I will tell you that we're not through the supply chain issues. They will continue into 22 and into, we believe, in the beginning of 23.
All right. And of course, that's Jeff Gennette of Macy's, the CEO and chairman. I mean, Caroline, what did you take away from your conversation with him? Because this is such an iconic brand, plays to a lot of American consumers out there shopping.
Yeah, he talks so much about the various headwinds. He's still talking about the tailwinds that they've got, the fact that we've got a strong fundamental economy, a strong consumer, but the headwinds are still there. Supply chain not ending really anytime soon. also, of course, the overall inflationary pressure that he still sees. But the area of bright spot that really stuck out to me, labor. He actually said, look, the labor issues that we had are kind of past tense. We've now got the right sort of talent. We're able to bring them in. I wonder how many businesses can say that at the moment.
You know, it's fascinating that you bring up labor in kind of a conclusion, or I should say in coinciding with some of those supply chain issues, because to your point, this is something the Biden administration has been very, very strong about, saying the supply chain issues are going to kind of last for longer, but the labor side of it, that's going to kind of ease as we start to see some of these pandemic restrictions kind of ebb and flow. And as we start to see those Omicron cases drop, you are actually seeing some improvement in the labor market.
Interesting. I'm laughing a little bit because didn't we hear from the B of A report that consumers were willing to still spend on clothes and goods, but it was just like the grocery prices that we were getting a little bit uncomfortable with?
Yeah, I guess. I mean, look, I mean, it's kind of interesting. You go from sort of one headwind to another, and I think you have to kind of loop this back to, I guess, the geopolitical fallout from Ukraine. I mean, there's been a lot of talk here about whether markets should be down on something like this. I mean, when you look at sort of past military conflicts that the U.S. has been involved with, the Gulf War, the Iraq War, the 9/11 attacks, there was a significant drawdown in the markets, at least in the short term. Over the long term, though, things tended to right size themselves. But again, we're right now, as we speak, we are moving back towards the lows of the day here. And a lot of people are concerned about those ripple effects. You talk about inflation. Well, what's inflation going to mean if oil prices goes above $100 a barrel? Wheat prices continue to move higher. Soybeans at a 9-year high. These are real issues here.
Well, and it's certainly real issues if you're over in Europe who are feeling it firsthand. They have been already. And you do wonder how much of this, ultimately impacts that economy and what it means for their global growth going forward. I mean, we've already been talking about recession, right? We've been talking about it in the U.S. and we've already seen it, Caroline, over in Europe.
But what's so interesting as we worry about inflation is actually how the market is pulling back on its rate hike expectations. Here in the Fed, we're now seeing, 6 rate hikes being priced in over the course of the year. The ECB, they're now seeing that the swaps market sees maybe a rate hike only in October. Previously, it was September. And Taylor, I'm kind of confused there for what the bond market is trying to tell us at the moment. Is the bond market not getting a bid right now because of we anticipate the Fed to raise rates, or is it not a haven trade? I'm trying to work out what the auction tells us and what yields tell us.
Yeah, certainly we've had some good auctions as of late, and I think a flat yield curve at just 37 basis points on the 2s, 10s. You're only a little bit away from getting sort of nearer to that inversion, but it certainly seems to be, Carol, this repricing on the front end of 5 basis points now to a 160. What is that telling you about what that market is expecting?
It does feel like both the fixed income market and the equity market trying to find what are their floors and ceilings in terms of how they settle in on levels. And it's really hard, certainly with this conflict going on. All right, folks, that's going to do it for now. We'll be back in less than an hour's time for our cross-platform coverage on TV, radio, and YouTube. Our Beyond the Bell coverage will take you through today's market close.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, obviously, you're listening to Bloomberg Radio. Kriti Gupta, Carol Massar, and our TV team talking about some of the things. I'm always amazed, Kriti, that when we have this conversation, not amazed, but it's just, what if this, like, there's so many questions out there. And I am a belief that there's a lot of recalibrations going on, whether it's our move to EVs and figuring out how climate change impacts and what we have to change because of that. What are supply chains going forward? What's real demand going forward? And I think it's very tricky for the Fed to really play out its policy as a result of all those questions.
Yeah, and then add on these geopolitical tensions, which, by the way, it's really hard to kind of roadmap this because, sure, we've been here before, right? 2008, Russia with Georgia, 2014, Russia with Crimea. But in both of those instances, you didn't see actual disruptions in commodities and food prices and things like that. You saw the markets freak out, but to Romaine's point, you didn't actually see those long-term effects really change, and this time that could change.
I mean, I care more about when we hear from the CEO of Macy's, what they're seeing in terms of supply chain. I want to know what do supply chains get back to normal? Yeah. Student of economics, I understand the supply demand. And there is a point where I won't buy things because they're too expensive, right? Yeah. I think that happens. And how does that help supply chains correct themselves? And as we all kind of get back to normal.
Yeah, the demand destruction piece is a very key piece of the equation. For me, my metric is at what point do I go from a $5 cup of coffee to a $6 cup of coffee?
You're crazy. I get it free upstairs.
I should do that.
All right, let's get back to world and national news. Off to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. More sanctions against Russian interests today from the Biden administration. The State Department's Ned Price says the U.S. is joining Germany in imposing sanctions against the Nord Stream 2 pipeline, specifically against the Russian company constructing the pipeline and its executives.
The fact that we are acting in unison immediately to take these steps that essentially remove Nord Stream 2 from the equation, that is a byproduct, that is a result of the work that we have done together.
The State Department's Ned Price, some 40 members of Congress of both parties are back from the Munich Security Conference, and Speaker Nancy Pelosi describes unity of purpose in support of Ukrainian resistance to the Russian invasion.
The Speaker said Congress is ready to provide more aid to Ukraine and its neighbors.
It's stunning to see a tyrant roll into a country. So the people of Ukraine know that we are with them in terms of meeting their needs, with gratitude for the defense that the people of Ukraine are making for democracy.
Pelosi said the Western allies are in agreement on the pace of rolling out economic sanctions that would cripple the Russian economy and impact on Vladimir Putin, whom she called possibly the richest man in the world. In Washington, Irv Chapman, Bloomberg Radio.
U.S. health officials say some people getting Pfizer or Moderna vaccines should consider waiting up to 8 weeks between the first and second doses, not the 3 or 4 weeks previously recommended. New research shows that a longer interval can provide more enduring protection against the coronavirus. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Wednesday. Carol Masser, Kriti Gupta in for Tim Stanovic. He'll be back later on in the week. In the meantime, this is popping up among the most read on the Bloomberg. And right now, Kriti knows that she covers the markets inside and out and is just following all of the things that people are writing and tracking different metrics. And we're trying to figure out kind of what happens from here. And this is a story that's about hedge funds. U.S. hedge funds have been slashing positions in technology stocks, started 2022 more tilted toward cheaper shares than at any other time in over a decade. And this is according to Goldman Sachs.
Yeah, and this is absolutely a waiting story, right? Because this was one of the fears going into actually the beginning of 2021, the idea that if you are going to tilt your portfolio towards value, well, those value stocks aren't actually the ones that have the biggest weighting in the economy. If you pull out of tech, you are essentially bearish on the S&P 500, just given how big these companies have gotten. And that, of course, is something that you're seeing right now. You can have companies piling into energy, for example, and it won't be enough to bolster the entire stock market.
That's a great point. Well, this report, Ben Snyder writing this in a note to clients over at Goldman, filings show hedge funds positioning for a different equity market environment than the one that has characterized most of the last several years. Funds with $2.6 trillion of gross equity holdings have reduced positions in more expensive growth sectors in favor of energy and financials, according to the note.
And we all know that these hedge funds are the ones that have a little bit more money. At the beginning, it was actually retail that continued to buy and buy and buy. But at the end of the day, that hedge fund selling outweighed the buying that was even happening on the retail sphere. And you can see the result. This is a major sell-off, the likes that we haven't seen, I think, going back to March of 2020.
Which is why you look at some individual tech names. A lot of them have either had a 10% correction or even have moved into bear market territory, right?
Yeah. And what's also interesting to me is that, Carol, you always ask me, why does this matter to our listeners? Well, here's why. Well, because, think about it. A lot of these retirement accounts are actually exposed to ETFs that are exposed to the benchmark, not the individual stocks.
And you do wonder how this will ultimately, the move away from FANG, right? And it will kind of weigh on them.
Exactly.
Longer term. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Stocks are low and moving lower. Let's head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks under pressure again today amid increased Ukraine worries. Dow's currently down 400 points. S&P's dropped 65. NASDAQ is lower by 282. The U.S. 10-year yield at 1.97%. Gold is up 8. Oil is trading lower. And Bitcoin is down by 1%. Among the main 11 S&P sectors, only energy was in the green. And leaders to the upside in the Dow, Chevron and J&J, while Cisco, Home Depot, and Apple led to the downside. In other news, wheat hit a 9-year high. JP Morgan said oil prices will average $110 a barrel in the second quarter. And Axios reported that LinkedIn is launching its own podcast network. Wrapping things up, eBay reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type Squawk SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. Really appreciate it. Hey, listen, one of the stories that really has certainly resonated with me, and I think it does with Creedy too, we've been talking about a lot of stuff off air, is about what's going on with technology stocks specifically and the slump that we've seen at them. Writing about it today is Bloomberg News equities reporter Ryan Lastelica. He is on the phone from Chicago, and I love the headline, Ryan, FOMO may lift mega cap stocks when the market turns. I mean, there's a point where someone, right, investors are going to say, wait a minute, these are still strong businesses and they're on sale.
Yeah, absolutely. Good afternoon, everybody.
Hi.
So Morgan Stanley recently released its quarterly analysis of fund ownership data. And amid all the selling that we've seen in technology stocks, the data show that major names, including Apple, Microsoft, Amazon, Alphabet, and Meta, are all under-owned relative to their weight in the S&P 500 and all these major institutional funds. That's a positive signal, according to Morgan Stanley, because it does suggest that these names are under-owned, they've been maybe a little bit abandoned. But like you said, these are also names that have just so many fans out on Wall Street. They continue to grow at a really steady pace, and while valuations might be a little bit stretched compared with some of their historical averages, it's not nearly as extreme as some of the other parts of the market.
Ryan, talk to us a little bit about what people are actually watching when it comes to the tech universe. What is the signal that people go in to buy? Is it just looking for what's a cheap value on Apple or Microsoft, or are they exploring other parts of the tech universe, biotech, cybersecurity, semiconductors? What's your take?
Well, I have heard people talk about both cybersecurity, especially given the rise in geopolitical tensions. This is an area that is expected to get just a lot of spending from companies basically in every sector as they look to make their businesses as secure as possible. The semiconductor area, as always, remains an area of intense interest. Chips are used in basically everything, and amid the supply chain issue, this is just an area that continues to see very strong demand and somewhat lower supply right now. So, again, we have valuations that might be a little bit elevated compared with historical averages, but these are areas that are very strong. As far as what people are looking for, one thing I continue to hear is free cash flow. That is the primary metric that people are looking for. People want profitable companies. They don't want names that are hemorrhaging a lot of cash right now.
Well, and I do think, we've talked so much about the sector being under pressure because of the concerns about higher interest rates. And I guess I get some of that, because of what it means for future earnings. But nonetheless, if these companies ultimately do have strong future earnings, they have strong future earnings. And there's value there.
Yes. I think the tricky thing is that some of these names got very extended, and some of the bets that were being made were a lot more speculative in nature now. I mean, expecting that a name like Microsoft is going to have strong earnings growth over the next few years, that's not as, not the same kind of bet as you might see for some of these more speculative or software names that trade at really mostly valuations, and maybe they have an attractive business model or something like that, but they will also face debt, they will face competition, and they have all these other issues out there that can also will have to be factored in at some point.
Right. And we apologize a little bit to our listeners because I know the sound is kind of rough. We're living in a world of cell phones. And Ryan, maybe you can come kind of closer to your cell phone. Ryan, how do you kind of make sense out of what you are writing? And then we had a story that Kriti and I talked about for some of our audience about a Goldman report out there showing how U.S. hedge funds have been slashing positions in tech stocks and started 2022 more tilted toward cheaper shares than any other time in over a decade. I mean, there's just so many different cross currents right now in the market. How do you kind of square those two things, what you write about and then this other story about what Goldman is seeing when it comes to hedge funds on tech specifically?
I've certainly seen that trend a lot. According to Bank of America, allocation to tech is at its lowest since 2006, which is really just a remarkable turnaround because it did seem like for years tech was really the place to be. It was everyone's favorite sector for growth. It was everyone's favorite sector for revenue and market share growth and all these other kinds of factors. So right now there does seem to be a very well-known rotation out of growth names and into value. And while there are some tech names that would qualify as value, the weakness has been pretty widespread in the sector.
Ryan, you mentioned free cash flow just a second ago, and that's really interesting to me because since we've seen kind of this pandemic take place, you've seen a lot of these tech companies really accumulate a lot of cash, not just because more people are spending, but because they've been able to issue a lot of debt. Talk to us a little bit about how that squares with some of perhaps the acquisitions that they're making.
Well, we certainly have seen a pickup in the space as far as acquisitions go, especially with Microsoft, notably with its plan to buy Activision. These major names, we can talk about valuations all stuff as much as we want, but they are just sitting on these huge cash piles, and that is expected to be a way for them to make acquisitions as they see fit. And one thing I have heard from strategists and portfolio managers is that as prices continue to fall, it does make valuations more appealing for names that want to get in there and buy something that they can hold for the long term.
All right. Well, an interesting read, and you certainly do. Some of the folks that you cite in your story talk about investors, having the means and opportunity to buy tech when they want to come into it. So I guess maybe are waiting for things to calm down, and we'll certainly kind of keep an eye on for that trend. Ryan, thank you so much. Ryan Vestelka, he is Bloomberg News equities reporter, joining us on the phone from Chicago. And we've got just about 35 minutes left in today's trading session, and we've been pretty much down across the board, and we're just hovering near our lows, down about 1.6% on the S&P 500. Dow, a decline of 1.2%. NASDAQ really taking it on the chin, down 2.2%. Carol Massar, Kriti Gupta, this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week on this Wednesday, and keeping an eye on the markets for you. And coming up, Creed, we've got your chart of the day. A little tease? Got a tease?
A little chart of the day is going to be on the biggest topic in today's news cycle. That's my tease.
That's a nice one. All right, I'm going to stay here then for that. But first up, let's check in with Charlie Pellet, get another update on that trading day. And Charlie, we're almost getting ready to wrap up today's day.
I want to try to guess the chart of the day. I'm thinking Ukraine, Russia, oil. Those are some of the big stories.
Don't give it away.
Well, see, you shouldn't have confirmed it, Creedy. But here's what's going on. The Dow, the S&P, NASDAQ, all on the minus side right now, at or near session lows right now. 28 minutes to go until that closing bell clangs away on Wall Street. Equities lower. President Biden expanding sanctions against Russia. New penalties hitting the Nord Stream 2 pipeline and its corporate officers. Right now, we have got the S&P 500 index down 1.51%. Yeah, I know, don't go decimal, but that is where we stand right now. We are in correction territory. Tech stocks selling off amid rising tensions. Also a cyber attack on several Ukraine government and bank websites. The Dow down 390, a drop right now of 1.2%. NASDAQ down 282, a drop right now of 2.1%. 10 years down 13.30 seconds, 10-year yield 1.98%, and we have got spot gold up 0.4%, 19.06 the ounce. Equities lower. As for the overall market backdrop, Aaron Brown is portfolio manager at PIMCO.
I think over the next couple of weeks, we're still going to be in a volatile period. So really timing the bottom is difficult. But I think when you step away and look at the fundamental picture for equities is still quite strong. And I think, I've been somewhat heartened to see that the markets are not panicking. And when you look outside of equities, if you look at credit spreads, if you look at inflation swaps, if you look at 2s, 10s, they're still telling you that the fundamental picture for equities is still okay.
Indeed, we do have the 10-year yield at 1.98% right now. Crude, a major story today. 91.92 a barrel on WTI. Sources tell Bloomberg the Biden administration is considering tapping its emergency supply of oil again. Oil stocks are pushing higher today. ExxonMobil, for example, up 0.4%. BP up 0.3%. Chevron up 2.3%. EOG Resources up 0.9%, and Pioneer Natural Resources up by 1.1%. Recapping, S&P down 1.5%, 10-year yield 1.98%. And that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. We do want to get to Creedy's chart of the day. And of course, you can sign up for her chart of the day at kgupta129 at bloomberg.net and check out her Twitter and Instagram feeds. You can find that at Creedy Gupta News. So, Creedy, you put French fries in a headline, and yeah, you got my attention.
I put French fries in a headline, folks. I emailed this out, and my chart of the day's subject line today was that 80 rubles gets you a large French fries over at McDonald's.
Sounds like a lot of rubles.
It's actually not, because
it
an 80
okay.
rubles is actually equivalent to $1. And if you were to
okay.
go to McDonald's right now, here in the United States, large fries are $3.29. Yes, I Googled all the McDonald's price menus, but I wanted to know what 80 rubles got you. But let me tell you the significance of 80 rubles here. My chart of the day shows the dollar against the ruble, and it's kind of this geopolitical risk metric, essentially, right? If you start to have this Russian risk escalating, naturally the Russian ruble is going to weaken, and that's exactly what you're seeing. But it's weakening in a very special way. It's weakening to a level to 80 rubles, the surprise number here, which is historically significant. Back in 2014, when kind of during the Crimea annexation, you saw the ruble weaken to 80. Once again, it tested that level during the coronavirus pandemic. It tested that level going into the election in 2020. So it consistently bounces off 80, and that's without sanctions. And so imagine if there are sanctions, or if something happens with oil prices, what could the effect on the ruble be? And if it were to drop or weaken further beyond the 80 level, say for $1 you were to get 90 rubles instead, that would be really significant, not just for the Russian economy, but for anyone that has exposure to emerging markets broadly, because Russia does have a pretty decent kind of foothold in the EM universe.
Well, this is why when we think about, we see the back and forth going on, like you need to think about, all right, what are the things that could ultimately impact the Russian economy that kind of gets everybody to notice and maybe, potentially forces Vladimir Putin's hand to maybe ease right back. And something like this, right? A continuous weakening of their currency would certainly do it.
Yeah, anything that affects their purchasing power, right? I mean, this is something that you're seeing even here in the United States. We talk about this all the time, that inflation is eating into just how much we can spend. That's going to be a similar story when we're talking about Russia, because if your currency isn't worth as much as it was worth, say, a year ago, you're going to be able to spend less and less, on top of the fact that you're dealing with sanctions, which means perhaps your bank accounts are frozen, perhaps your job security is more challenging. The economy just kind of crunches a little bit.
Why is that 80 level though? Why is it 80?
There's a few
weird,
reasons,
right? It's interesting that
there's a few reasons. I'm gonna put my trader hat on here. Not that I was a trader, but I've seen them at close range, kind of like zoo animals, and I say that with love, of course. They were my teachers. But what's interesting about kind of currencies when you trade them, sometimes round numbers can be this psychological level. And going back to 2014, intraday it hit that 80 level and then kind of came back, and then it hit it again in 2016. Because of oil prices, because of course Russia's economy is extremely exposed to oil. They get a good chunk of their revenue there. But when oil prices recovered, because the sanctions hit on Russia, the ruble never recovered. So it kind of stuck around the 80 level. It strengthened a little bit, but at the end of the day, it was never able to kind of overcome that. So not only is this chart on the Russian ruble significant in terms of the geopolitical risk, it's also significant in terms of kind of visualizing the impact that sanctions have had.
Hey, in the grand scheme of things, there's a couple of headlines that crossed, and you and I were noting them while we were, before we came back on air. And this has to come from a State Department spokesman, Ned Price, catching up with reporters, and this was just about 10 or 15 minutes ago, and saying a nuclear deal could be days away if issues addressed. We're talking about detailed issues remaining unresolved with Iran specifically. We had an earlier story on the Bloomberg that talked about Iran shifting more oil onto ships in a move to speed exports. Should talks succeed in ending its exclusion from global energy markets, but also this nuclear deal, right, is key to that.
Yeah, it is key to that, because think about what we've been hearing from the Biden administration so strongly, right? We need those gasoline prices to get lower at a time when energy prices are surging. And one of the kind of tug of wars that you're seeing in the oil market right now is, on the one hand, you see those Russian tensions pushing prices higher,
right,
but additional supply from Iran could push those prices lower.
Yeah, and about 30 million barrels added to tankers since early December. I mean, this is, as we said, this situation, the geopolitical tensions between Russia, Ukraine, or what Russia is doing in terms of Ukraine, its intentions and its actions, and then with its NATO allies in the United States, it's a reminder that there are a lot of things going on behind the scenes that play into this. It really is, in fact, impacting the world.
Yeah, and we should also know very quickly, another headline, the U.S. eyes release from oil reserves as prices rise on Ukraine. So that's one more tool that they can use.
And certainly to ease some of those energy prices. All right, let's get back to world and national news. Nancy Lyons keeping track of all of that. She's in our D.C. bureau. Hey, Nance.
Hey, Carol. As expected, Ukraine's parliament has voted to declare a state of emergency after Russia recognized two separatist regions as independent. The declaration gives local authorities powers to react to threats and to place curbs on people's movements. Well, the U.S. today also added new sanctions on the Russian company behind the Nord Stream 2 pipeline and its executives. And the State Department's Ned Price says more sanctions are to come if and when Russian President Vladimir Putin orders his troops to move beyond the two separatist pro-Russian regions in the eastern part of the country.
If Putin escalates further, we will escalate further using additional sanctions and export controls, which we've yet to unveil, but are fully prepared to implement with allies and partners across the globe.
Price says the U.S. remains open to diplomacy if Putin is willing to change course. The former British ambassador to the U.S., Sir Peter Westmacott, tells Bloomberg after watching Putin's speech concerning Ukraine, he's not sure anyone knows what the Russian leader is willing to do.
It was kind of incoherent rambling of somebody who was raging rather than somebody who was necessarily calculating in a rational way. But of course, we never quite know what's theatre and what is the real person.
Sir Westmacott says some foreign diplomats believe Putin is not the same guy. Well, a new poll finds little support among Americans for a major U.S. role in the Russia-Ukraine conflict. The AP NORC poll finds just 26% of Americans say the U.S. should have a major role in the conflict, while 20% say the U.S. should not be involved at all. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. Back to you, Carol and Creed.
All right, Nancy, thank you so much. Nancy Lyons in our D.C. studio there. And this now is our most read on the Bloomberg in the past 60 minutes. And Kriti, you mentioned it. The U.S. eyeing a release from the oil reserves as prices rise on Ukraine. I will point out that WTI crude, we're definitely off our highs. We're up as much as 2.2% at about 94 a barrel. Right now we're about 91 and change, almost 92 a barrel, just down a hair.
Yeah, what's interesting about this is that, one, the Biden administration has already done this, right? We had this coordinated release in November to deal with surging oil prices, specifically in Europe, that were affecting natural gas prices as well, kind of collaborating with India, with China, Japan, South Korea, basically the major oil-consuming nations of the world. And the consensus was, this is kind of a short-term solution. This doesn't tend to have that sticking power.
Right.
So it's interesting that they're considering this once again.
But, you know, sometimes you got to do a short-term move to get to, while tensions maybe ease, hopefully, cross your fingers.
Right.
And then, you know, some stability comes back to, in this case, certainly the energy, the oil markets. These deliberations that are going on, according to those in the know, follow a White House move, as Kriti said, back in November, and that's when we did see those 50 million barrels of crude release. And so this is something we're watching. The Biden administration, as we said, the headline, considering tapping its emergency supply of oil once again in coordination with allies to counter that surge in prices brought on by Russia's move against Ukraine. Again, according to those in the know, no decision has been made. Quote, robust conversations within the administration are said to be underway, including on potential price point triggers and how to coordinate a release from the reserves with other nations. Again, according to those people who asked not to be identified in terms of what's going on. I think, you know, this is what's interesting too. I feel like in a world, certainly through the pandemic, we weren't all on the same page, but it does feel like certainly the U.S. and a lot of its allies are coming together on these tensions over with Russia and Ukraine.
Yeah, and I think, I mean, the gas prices is what's crucial here, right? This is the why does it matter to our listeners piece of it. Because especially analysts are saying with these surging prices, it could get as high as $4 a gallon. And that's also what, and just from my reading, I've understood is kind of where people say that's when people are going to stop kind of buying gas guzzling cars. They're going to stop taking those road trips. That's what we call demand destruction. And right now, gas prices, $3.54.
I mean, I see it when I fill up at the tank.
Yeah.
Like, I just kind of shocked from just 6 months ago or a year ago, certainly, the differences that we are seeing. And that starts to certainly impact Americans in terms of the wallet, the money that they have in their wallet, and it impacts things. And as you said, this becomes a political thing as well with these midterm elections. All right, we are continuing to watch what is going on in terms of Russia and its moves on Ukraine. We did see President Biden expanding Russian sanctions to Nord Stream 2 and also expanding when it comes to some of the corporate leadership over in Russia, specifically the penalties on top of a package announced just yesterday by the White House after Russian President Vladimir Putin moved to recognize breakaway territories in Ukraine as independent states. That is where we are. We saw a lot of volatility in the markets yesterday, Kriti, and it does feel like still some pressure, but coming down maybe a little bit.
Maybe a little bit, but at the end of the day, it's that factor of uncertainty, right? Golden rule. Markets don't like uncertainty, and there's plenty of it right now.
Yeah, and we continue to hover near our lows of the day when it comes to the equity markets. All right, right now on Bloomberg Radio and TV, we want to welcome our Anne-Marie Horton. She's Bloomberg Washington correspondent. She's sitting down with Ukraine's Foreign Minister, Dmytro Kuleba, and getting to talk about the current situation and the pressures facing Ukraine.
I want to welcome our Bloomberg television, radio, and YouTube audiences in this global simulcast. As Ukraine tensions escalate, President Biden expanded sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. Joining me now in an exclusive interview is Dmytro Kuleba, Ukraine's foreign minister. Dmytro, foreign minister, thank you so much for your time today and joining Bloomberg.
My pleasure.
Let's start with those fresh sanctions. You have been pushing for more, for the West to up the volume. Have they done it? Is this enough?
Well, they did the first wave, which is welcome and helpful, but it sends a strong message to Putin, but it still doesn't stop him. So it means we need more sanctions, we need the second wave, and then probably the third wave, until it gets clear to him that he shouldn't make any step further.
But Nord Stream 2 specifically, this is quite significant.
It's a big move, and we welcomed this decision by the German government. The United States contributed to this result, but Ukraine has been calling to put the Nord Stream 2 on hold for years, and no one was listening to us. If these sanctions had been imposed earlier, perhaps we wouldn't be having this situation today.
You tweeted at 3:20 in the morning, hit his economy and cronies, hit more, hit hard, hit now, talking about Putin. For you, what would be enough?
For me, it's clear when Russian soldiers withdraw. This is
What would be enough in terms of the Western sanctions?
Well, again, I mean, there is an elaborated toolkit of sanctions prepared by the United States, Britain, Canada, European Union, and they impose them one wave after another. I know that some severe financial sanctions are still in the pocket, and we believe they have to be imposed in order to stop Putin. And of course, the nuclear option that everyone is talking about is the disconnection from SWIFT. Exactly. I know there are some doubts, but this is a difficult situation, and a situation like this cannot be fixed without making difficult decisions.
So you think they should go as hard as SWIFT, but the blowback will hurt their own economies. Is this something you discuss with foreign leaders? Do you think they're ever going to be prepared to take those repercussions on their own economies themselves?
A war between Russia and Ukraine will inflict much more damage on world politics and world economy, because what is at stake now is the existence of the world order as we know it. Russia doesn't only attack Ukraine. Russia is a permanent member of the United Nations Security Council who bears special responsibility for maintenance of peace and security. It attacks another country. If they succeed, it will be a message to everyone that rules do not work anymore and the world will be thrown in chaos. So it's better to pay now to deter that and to prevent that from happening.
But this is the fourth time President Putin recognizing Donetsk and Luhansk is the fourth time since the breakup of the Soviet Union he has single-handedly, unilaterally redrawn that map. Sanctions, 2014, the poisoning of Sergei and Yulia Skripal, they haven't worked, have they?
No, they did help a lot in 2014 when the economic sanctions were slammed against Russia. That helped to stabilize the situation on the front line in eastern Ukraine, and President Putin realized that his actions come at a cost which he didn't want to bear. But you're absolutely right. Again, if the world had reacted to Russia's previous aggressions against Georgia, in Moldova, in other parts of the world, in a more resolved way, we wouldn't be sitting here now, because it's impunity that feeds Russia, and this is why he finally has to pay for what he's doing.
What about your own economy? A third of Russian gas flows through. Those flows were kept at a pretty minimum this past year. Are you worried that at some point the Kremlin will cut off those flows that your government gets billions of dollars of transit fees in?
Ukraine has always been a reliable transit country for Russian gas to Europe. For political reasons, Russia decided to bypass Ukraine, and this is how Nord Stream 2 and Nord Stream 1 were born. But there is a conviction in Europe that Ukraine must remain the country of a transit for gas. So yes, we make money on it, but Russia makes even more money on selling gas to the European markets.
And they still are, even if Nord Stream 2 doesn't ever come to light. I want to move to the diplomacy of this. You sent a letter to Kiev yesterday saying we should cut off diplomatic ties. Ukraine should cut off diplomatic ties from Russia. Will that happen?
Well, this issue is now under consideration by the president. We have this instrument in our kind of diplomatic toolkit. I firmly believe that we should have done it in 2014 when Russia annexed Ukrainian Crimea and invaded Donbas. This wasn't done. I don't know what else has to happen for the country to break up diplomatic ties with the aggressor. This doesn't mean, though, that we will shut down our consular presence, because we want our consuls to stay in Russia and to continue providing services to our citizens.
But yesterday, standing next to Secretary Blinken, you said Plan A, utilize every tool of diplomacy. Plan B, fight for every inch of land. If you cut off those diplomatic ties, does this mean you're now at Plan B?
No, because cutting diplomatic ties does not mean that you cut off communication entirely. It's just a different mode of maintaining a line of contact and talking with each other. It's a diplomatic gesture, a diplomatic decision, but it doesn't mean that we will not be able to speak with each other.
Ukraine, for the past few weeks, has been trying to play down a full-scale invasion. But now we have a state of emergency in the country. What's changed the assessment?
The movement of Russian forces closer to the border, their movement inside of the occupied territories, closer to the front line, and of course the decision of President Putin to recognize so-called Donetsk and Lugansk republics as independent countries was a game changer, not only for Ukraine, but for global politics as such.
I also want to ask you about cyber. That's something that happened today. Again, more cyber attacks. Your own foreign ministry's website was hacked. This has been going on for years. Banks, the metro, power. In your discussions with Western leaders, you talk about tit for tat with Putin and sanctions. Do they ever talk about potentially hitting Russia with cyber?
No, I think, cyber attack is like nuclear weapon. No one wants to...
But two has happened to you in the past week.
Yeah, that's what Russia did to us, but we did not receive any proposal about hitting Russia with cyber to retaliate Ukraine. And this is not what we're looking for, but we try to build our own cybersecurity, and we're working closely with the United States and also with the European Union to make our own systems stronger.
When President Putin recognized Crimea as a separate state, 24 hours later, he annexed it. Do you expect a similar scenario with Donetsk and Luhansk?
Not within the next 24 hours.
But do you expect that at some point in the near future?
At certain point, the problem with President Putin is that he lives in his own world. He doesn't have checks and balances. He doesn't have free media, civil society, or politicians that would be putting pressure on him or advising him. He may wake up in the morning and decide to do that, but there's little that we will be able to do to convince him not to do it. But as the logic evolves, we see that he pursues military goals rather than political goals. And he needs Donetsk and Lugansk as battlefields, not as an integral part of Russia, at least at this point.
I want to end on something happening in the United States that's getting a lot of attention domestically, which is that former President Trump, as well as some other Republicans, are actually praising President Putin vis-a-vis this conflict. The words were, he's savvy and a genius. What's your response?
Well, it's good that the United States are not neighbors of Russia. Otherwise, no one in the United States would have such an opinion about President Putin.
Dmytro Kuleba, thank you so much for your time and wish you well on your trip back to Kiev.
Thank you.
Thank you. Back to you guys.
All right, that, of course, was Bloomberg News Washington correspondent Anne-Marie Horton with Ukraine's foreign minister here in our New York City headquarters, and obviously the ongoing situation. It's a difficult position to be in because obviously, as we heard, the Ukrainian foreign minister, really relying on help from NATO allies in terms of this situation and the pressure to be put on Russia.
Yeah, and really pushing for more sanctions, saying that this isn't a tough enough stance from the Biden administration. It's not unlike the commentary we've heard, not just from political strategists and from other countries, but specifically from investors who were waiting for something tougher. But what's notable to me is this headline where he said, we actually want our consulates to stay in Russia. They are still actively looking for a diplomatic solution.
Yeah, absolutely. And I guess keeping fingers crossed that gets to that point. I thought from our Jody Schneider, our political director here at Bloomberg Radio and Bloomberg TV, saying that, maybe the slow going by President Biden is that there's just so many tools in the toolkit, right? In terms of putting pressure on Russian President Vladimir Putin. And so you wonder if that's why maybe it's slow going. Hey, let's bring in the host of Sound On, Joe Matthew. He joins us from our 99.1 studio in Washington, D.C. Hey, Joe, what stuck out for you in that conversation?
Well, I think to your point, just the hearing him speak directly to the situation in Russia and actually want to continue, some sort of diplomatic relationship, at least until now, has been interesting. Of course, they're in the process of severing ties with Russia. But when he spoke to annexing those breakaway regions, this is a real concern. If they have intelligence or are led to believe, just based on history with Vladimir Putin, that he is next going to annex that part of the country, we're having a very different conversation than the one we're having right now. Legitimizing and annexing are two very different things.
And I thought that was interesting when Anne-Marie was asking, like, he's done it 24 hours later, and then it was like, well, okay, if he doesn't do it then, what if he does it in 48 hours? Like, you do wonder how that escalates the situation.
It would be an entirely different, and that, by the way, is what would bring, the mother lode when it comes to sanctions. That's obviously the leverage that this White House wants to maintain, because they know that more is going to be coming. John Kirby, the spokesman for the Pentagon, is briefing at the same time as that interview was happening, and he was asked about this as well. And he says they have really given up on the idea that this is a bluff, that this is posturing on some grand scale by Vladimir Putin. They believe this is a military operation that is now underway.
Joe, the phrasing here is, for when it comes to sanctions in particular, is that they're coming in tranches. How many tranches can we expect?
Isn't it something when we all get on the same page with vocabulary like this? Like the world community has decided this is a tranche story now. I'm not sure when the second tranche comes. I have to be honest. I spoke a little bit earlier today with an expert on sanctions. Brian O'Toole actually used to run sanctions for the Treasury Department, and has. Yeah, he's going to be on sound on with us a little bit later on, and I'll encourage everyone to listen because, he says this has been, the die's been cast. This is not building the plane in flight. When Jen Psaki says at the press of a button you get the next layer, he said that's actually the case, that enough thought and work has gone into this that they know. How many tranches? I'm not sure what makes the full pie here, Creedy, but I get a sense that there are more than 2 or 3, and that the White House on a daily or maybe every couple day basis just adds another layer, adds another tranche, and this is the world we're in right now.
I hear tranche and I think a financial crisis.
I hear tranche and I think credit markets.
And credit markets.
Here I am with a piece of pie. I guess that's just my own disposition.
All right. Well, looking forward to your show at Sound On.
Yeah, we'll see you in about an hour.
You bet. Joe Matthew, take care. Bloomberg Sound On host Joe Matthew joining us from the Bloomberg 991 studio in Washington, D.C. Folks, just a few minutes left in the trading session. Equities, though, hovering near their lows of this session. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close on this Wednesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we are now 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Ray's counting you down to that closing bell, here to help take us beyond the bell. It's our global simulcast partners, Carol Masser and Kriti Gupta, in for Tim Stenovic. We welcome in our audiences across Bloomberg Television, Radio, and YouTube. Looking at an S&P 500 at 42.24 right now, around the lows of the day, down almost 2%. And Carol, the NASDAQ indices down about 2.6% right now.
Yeah, staying low here with just a few minutes left in the trading session. Been looking at some of the outperformance. Energy, your best performing sector, but even that, Romaine, has been bouncing around, up 1.8% at its highs, unchanged at its lows, and still holding on to about a 1% gain, Creedy.
Yeah, but at the end of the day, Carol, it's a waiting story, right? If you don't have tech on your side, you do not have the S&P 500 on your side. And right now, your biggest weight contributors, your biggest weights on the S&P 500 are those big tech names at the end of the day.
And the breadth that we talk about that is lacking on the higher side and just doubling down on the lower side. There are only 64 stocks higher on the S&P 500 right now.
I think Sherry had a good point. We just spoke here to our radio audience, Sherry Paul, and maybe we've been doing it wrong. Maybe instead of the rotation out of equities into bonds, it is the rotation within equities. Is this finally the solidification, Romaine, of the value trade? Energy at the top.
Where's the rotation?
What do you mean? Energy is up 18% year to date. Technology is down 17% year to date.
What else you got, Taylor? Is that it?
Oh, is that
I'm just supposed to go into
bond yields are up to
Occidental
160,
Petroleum.
the
That's
highest
it?
since
Maybe buy some
December
wheat.
2019.
Wheat's really going up right now, so
Yeah.
maybe that's where you go.
Well, I've been stockpiling wheat in my bedroom closet. That's soybeans and gold right now. I'm prepared for the apocalypse now. All right, let's bring a little bit of levity here. Of course, we are talking about another down day here for the markets here. A 4-day slide now that we're looking at as markets all pretty much in correction territory. The Dow Jones Industrial Average down about 459 points here, going to finish the day down about 1.4%. The NASDAQ Composite down about 2.6% or 344 points. The S&P 500, and I think this is interesting here. We're talking about a day where it's down 79 points or about 1.8%. 0.8% here. And we talk about this idea of 90% down days. Now, we kind of just avoided that. About 88% of the stocks in the S&P 500 are finishing lower here on the day. But this is a pretty big drawdown that we're seeing on a lot of these names. Energy, that is your saving grace, up 1%. The Russell 2000, Taylor, is going to finish the day down by about 1.8% here. If you're looking for a rotation into small cap cyclicals, Taylor, you better keep looking.
Yeah, well, take a look at this chart. I'm trying not to make this a habit because we did it yesterday. We're going to do it again. It is that drawdown, and this red really highlights it, Romaine. Yesterday, we were at 10%. Today, we are now down from some of the highs that we had on January 3rd, 12%. Again, the last time that happened was March 2020. So, Caroline, this really highlights the significance of this.
Meanwhile, we do get the idiosyncratic news of individual companies. How strong are they? What consumer growth are we continuing to see? And eBay front and center right now as they see a fourth quarter adjusted earnings per share from continuing operations actually beating expectations. Net revenue coming bang in line with expectations, $2.61 billion. The gross merchandise volume, $20.73 billion, about half of that, $9.7 billion of that coming from the United States, but seeing that international gross volume of some $11 billion. They see, though, less active buyers than had been expected, 147 million versus the market wanted to see 155 million. The question, though, is how many of these are outsized spenders, are more lucrative purchasers, are buying your luxury handbags, are going into NFTs and even the likes of crypto as well. This is a space that eBay wants to get into, but overall they are seeing a beat in the adjusted earnings per share. But we really want to double down as to how much they're going to have these tough comps from within COVID crisis and how much they managed to show growth coming out of it as well as we all start to hopefully get out and start spending in real life.
Yeah, and it'll be interesting to see. I mean, we talk about some of the resiliency that we've seen with regards to consumer spending. And look, so far, the data that we've gotten have proved that out. But we're starting to see a lot more data from private companies start to talk about this idea that, yeah, there are worries out there. There are worries here about the potential of consumers to continue spending, particularly on lower income consumers who don't have the sort of that tailwind of fiscal stimulus. And even some of the higher wealth consumers, the idea is, well, have they bought everything they need? I mean, how many more home renovations, how many more cars can you really buy?
You know, Romaine,
Yes,
you asked me
Taylor.
what else I had for you. Pull up this chart.
Let me see it.
I'm going to sock it to you right now. On a year-to-date, well, this is just today, energy, the only sector in the green, it's up 1% on the day. Everything else on the day, this is sort of a second dive deeper into some of the S&P 500 sectors. Lower, lower, lower. At the bottom of the screen, the auto sector, you're off 6% on the day. The retailing sector, we've talked a lot about TJ Maxx, Lowe's, Home Depot, those inflationary pressures, that's off 3%, Romaine.
And you talk about the rotation. I mean, I was teasing you a little bit earlier, but you talk on a year-to-date basis, energy's up 21%, right? Nothing else is in the green right now. The next closest you're going to get are financials. Banks, which I was told were supposed to be doing well in this environment, they're down 2%. And of course, you got those discretionary names, the tech names, 15, 16, 17%.
I'm glad you took us there because I was looking at the year-to-date performance. You're very welcome to. But consumer discretionary, you know, communication services, information technology, they're so beaten down. At some point, do you look at these names and say, okay, this is an oversold situation and we're going to see opportunity. Is this a buying opportunity? There's lots of money certainly sitting on the sidelines to be put to work.
It could be oversold. Nvidia's down 30%, Tesla down 30%, eBay, which you were just talking about, Caroline, that's down 27% as of the close.
You know what's fascinating is when we talk about the energy sector was just a couple of months ago when you saw energy leading the gains in the S&P 500, it was your classic reopening trade, right? And that has transformed into your inflation hedge, which has then transformed into potentially geopolitical risk. What's interesting to me is that energy kind of seems like it's no longer that reopening trade, that risk trade. It's almost a defensive play now.
Lululemon is down 37% from those November highs that we saw on that. Are people not buying tights anymore?
I think it calls them tights anymore.
Are they tights? What are they called?
Nobody calls them
Maybe they're buying them on eBay. That could be a
on
question. Let's get to the eBay numbers because I mean, I'm not sure if you want secondhand tights, but you certainly perhaps want collectibles, perhaps you want luxury items. eBay coming out with numbers that overall did beat. We're seeing their adjusted earnings per share forward-looking guidance, though perhaps slightly shy of expectations. Poonam Goyal's with us, senior US retail analyst for Bloomberg Intelligence, to dig into the numbers. I mean, overall, it looked as though the fourth quarter did come in line with expectations, but push us forward past, you know, as we start to exit COVID lockdowns, whether or not eBay can still sustain the sort of growth and the pivot that they've been making.
Yes, absolutely. I thought the fourth quarter actually was pretty good. except for the active buyers numbers. And here's where we're going to see what they say on the call. They were down 9%. Down a little more than expected. But really the key here is how well did the high value buyers do? And that's what we're looking for when they speak on the call. Aside from that, guidance was a little light, but we think that's, a function of tougher comparisons. We're encouraged by the share repurchase authorization and the increase in dividend. Overall, we do think that eBay has room to grow and take rates higher with its promoted listings and payments integration now complete.
You mentioned buyback, eBay boosting its share buyback authorization by an additional $4 billion, so putting that money to work. I mean, are they putting money to work in the right places, Poonam, at this point?
I think so. I mean, buying back their shares, which trade much lower than other tech retailers, and also they're spending money on acquiring companies that can help them authenticate products on their platform. So we saw them do it in sneakers. We saw them do it in 3D technologies. We also saw them, authenticating watches. So there's a lot happening where they're investing to really get the customer to be comfortable in buying some of these aspirational luxury items on eBay and to really compete with other resale platforms.
I'm always curious about eBay because it's massive, yet it's still a laggard in so many ways, of course, to kind of the granddaddies of e-commerce out there when we talk about Amazon and some of the others. And I actually think we lost Poonam there, who has given us some great insights over at Bloomberg Intelligence. We should point out eBay shares are down about 10%. And the question, guys, that I was going to really get to here is the idea of competitiveness here, is particularly in that e-commerce space. We know that Amazon and, of course, now Walmart has sort of muscled their way. There aren't a lot of other options. At least people don't view these other companies as other options out there. And you wonder how that plays to a company like eBay.
Yeah, but also the reals of this world. It's interesting that they have been going into this luxury area, the authentication area, and the collectibles area as well. This is a stock, though, that actually has come down significantly from its highs. You pointed out from its October peak, like many of the tech stocks, it's down some 30%, but not a single sell on this stock. And you're seeing, analysts, 11 buys, 18 holds, not a single sell. I wonder how much has been priced in and why we're seeing this pull down of some 10% after hours.
Well, that's a good thing about priced in, Caroline, in that name, because what is it? It's already down 17-18% leading into this report, and then add on that 10%. All right, so eBay, we're definitely seeing that under pressure. Let me just get to some of the gainers in today's session.
Were there gainers today? You found some?
I actually found some. Let's hopefully. Lowe's was up 6%,
right under the wire.
Up about 1/4%. So just holding on to it. Sales beat, raising its full year forecast. Overstock, did you check out this one? Because this was a big outperformer. It was up about 23% at its close today. Real reason why, ICE making a strategic investment in T0. I don't know if you saw that. That's the broker-dealer in which Overstock holds an 80% stake.
Got the CEO on a little bit later on Bloomberg Technology. Tune in.
That's going to be an interesting conversation, right, in terms of their holdings. And listen, since we could all use a beer right now, let's see if this one held on to a gain. Yes. Molson Coors.
Caroline only drinks seltzer.
Who does? Caroline, is that all you drink?
No, I'm a cider girl, but that's by the by.
All right, Molson Coors up about 4.6%, top in the S&P 500, fourth quarter net sales beating estimates. Creedy, what do you got?
Yeah, well, there was no shortage of decliners when you looked at the market today. A lot of red on the screen, but I think we're going to look at some proxies here. We'll start with Apple closing down 2.5%. I really want to use this as that proxy for big tech because we talked about the energy outperformance, but at the end of the day, it really is a weightings game. If you don't have big tech on your side, you are not going to see the S&P 500 rally unless you have a bigger rally in those value stocks. So Apple down 2.5%. Like I said, a proxy for big tech. The other one I want to point out, Carol, you mentioned Lowe's, you mentioned Overstock, but we also got TJ Maxx's parent company out today, closing down 4%. They actually had some good numbers come out, but the problem here was that they said that some of those margin expenses, some of those shipping costs, the freight costs, well, they were going to stick around. They were so worried about that outlook that they actually aren't even providing a year-end EPS view, and that really shook investors. And I'm just going to quickly end here with Moderna, down 6.4%. They all reported earnings tomorrow. Of course, that classic pandemic trade coming to an end.
And let's talk about a classic trade that's currently a risk-off trade. If you're looking at GMM, at global macro movers, we are seeing a significant inflationary push when you're looking at commodities. You saw the Bloomberg Commodity Index at a 7-year high. We're seeing backwardation, team. I know that's a word that Taylor loves, reflecting basically record deliveries 1 year ahead. We're seeing the highest premium being priced in near their highest premium on record deliveries at the moment in commodities a year ahead because we're seeing money move into commodities. WTI crude up 0.5%. We see that in related to the risk-off tone in the FX market, money moving into the Swiss franc, for example, as you search for a haven and yields down, well, rising across the board, Taylor.
Carol, yields rising, bond price lower. That summarizes the action of today.
All right, that's going to do it for our cross-platform coverage, our market close coverage here on radio, TV, and YouTube. Guys, catch us again, same time, same place tomorrow.
All right, and to all of our audience out there on Bloomberg Television, Radio, and YouTube, we are in a global simulcast here talking about 2 years into this pandemic. And some countries, including here in the U.S., are starting to fully reopen and drop mask mandates. I'm joined right now by Dr. Anthony Fauci and Balance of Power anchor David Weston. David, over to you.
Thank you so much, Romaine. And Dr. Fauci, thank you for joining us. Let me pick up at exactly what Romaine was just talking about. People around the world opening up. We have Great Britain saying we want to live with COVID. Right here in New York City, we have the mayor saying he can't wait to do away with mask mandates, with vaccine mandates. What is the risk we're moving too quickly away from masks and vaccine mandates?
Well, if you look at the current guidelines of the CDC, where they're basing their guidelines on cases alone, as you probably have heard, they will be essentially updating and modifying the metrics for their guidelines. In other words, not just relying on cases, but relying on severity of disease, particularly hospitalizations, as well as hospital capacities in a given location, such as at the county level. If you look at that right now, pulling back on masks is a bit risky. However, if you look at the curve, how sharply it's coming down on a daily basis by a certain percentage each day in both cases and hospitalizations, we are clearly heading in the right direction. The real question that we're all going to pay attention to is that when you pull back on mitigations like masking requirements, be they in indoor places, workplaces, or the schools, what is going to be the reaction of the virus to that? Is it going to continue to go down? Is it going to plateau as opposed to keep going down? Or is it going to rebound? It is somewhat risky, but I believe if we keep going in the right direction with the cases going down, then there will be an epidemiological justification for doing that. But it's just right now, just at that transition zone where the prediction of pulling back might actually be the right thing, given the next iteration of what the CDC will be recommending based on their new metrics, which I think will make the country look on that map of guidelines, look like there's less of a risk in certain areas than was previously thought, according to the prior metrics.
So, Dr. Fauci, staying with the CDC guidelines, my understanding is the CDC now is changing their recommendation about the time between the first and second shot in the vaccine up to 8 weeks, apparently because of some concerns about myocarditis. My question to you is, are there data that actually indicate you get a better response, more effective immune response, also by prolonging the time between the first two shots?
David, there is a balance to that, because if you get the first shot and you wait longer for the second shot, you have a risk of not being vaccinated to the full primary component for an additional few weeks. That's a small risk, but a risk. If you wait a bit longer and you're in that younger age group where you actually have a risk, a young man, for example, between 12 and 39 years old, has a small risk of myocarditis that you make even less of a risk when you push out the second dose. But knowing that from prior experience, for example, in England, you may get a better initial response if you give the immune system a couple of more weeks or so to mature in its response. So it's a balance. On the one hand, it could make it a bit better. On the other hand, it can give you vulnerability in those first few weeks following your first dose. So I don't think it's going to be a substantial difference in efficacy by any means, but the CDC made that recommendation because they wanted to make the risk of a very low adverse event, i.e. myocarditis, even lower by extending the time.
Dr. Fauci, there's a lot of talk, of course, about preventing getting COVID. There's also the other side of this, which is for those folks that do actually get COVID, the treatments out there that are available. There was a lot of talk when that Pfizer pill was introduced, Paxlovid, that this could potentially be a game changer. Those were the exact words that we heard from the President of the United States. We're a few weeks into this now. How are we doing with regards to A, availability of that pill, and B, the effectiveness of it in treating COVID?
Well, we're going to have a lot more available as the months go by. Right now, obviously, it's somewhat limited. There's enough out there, certainly, to get the people who would need them at the high risk. Remember, if you look at the data show very clearly that if you are within a high risk group and you get infected, it prevents by about 89% the likelihood that you will progress for the need for hospitalization and ultimately dying. That doesn't mean that everyone who gets infected, particularly when you're dealing with Omicron, when it looks like in general, the risk of hospitalization and death on a case-by-case basis is less. So A, we have a limited amount, but enough to go around for the people who likely need it. And as the months go by, we're going to have even more. There'll be a lot more. There'll be 20 million doses.
How confident are you that that more is also going to be effective against additional variants out there?
Well, you know, if you look at the variants and how they actually evade immunity from the vaccine and evade immunity from the monoclonal antibodies, it's much more difficult from what we've seen so far for those variants to evade the effect of a direct antiviral. It could happen. We've seen the evolution of drug resistance, but given the fact that that antiviral drug acts at a part of the replication cycle that's really a different story than that binding site where the virus binds to the cell, and sometimes when the virus mutates, the antibody is no longer effective, or is the antibodies that are induced by a vaccine. So I think there's less of a chance of that happening, but we know from experience, for example, with anti-flu antivirals, that the more you use them, particularly if you use them over a prolonged period of time, you can get the evolution of resistance, which is the reason why we don't want to stop just what the antivirals we have. They're going to be very, very useful, as you say, in some respects, a game changer. But we want to continue to both discover and develop additional ones so that you have a larger armamentarium available for the people who need them because they're at a greater risk of progression.
And so, Dr. Fauci, when we talk about, I guess, what other options are out there, what other options are available with regards to whether it's vaccinations or other sort of preventative measures here, we're going mask off now, at least in many cities here. We're now starting to see even some of the vaccine mandates start to be dropped here. So what protection, I guess, do we have, can we count on?
Well, one of the things that I think is an important message to get is that particularly when you look in the era of Omicron, that third boost that we're talking about is really something that makes a dramatic difference in reconstituting the waning immunity. You know, the good news is that we have vaccines that are highly, highly effective and quite safe. But the reality is that the protection over time wanes. We see that particularly in a situation where the protection to begin with Omicron is not as good as, example, against Delta. And it does wane, which is the reason why we tell the people who've been vaccinated to please, when your time comes up, to get that booster shot. We tell the unvaccinated to please get vaccinated. The data are so clear. When you look at hospitalizations and deaths, the curve of the people who've been hospitalized who are unvaccinated, the people who are vaccinated, and the people who are vaccinated and boosted, that the overwhelming percentage of the people who are in hospitalized IC units and die are among the unvaccinated. So we have a very effective tool. So if you combine vaccination and, as you said, the availability of good antivirals, such as Paxlovid, among others, it's not the only one, newer monoclonal antibodies that we will continue to develop, and the wide availability of tests, particularly at-home 15-minute tests, I think we are in a much better position right now to deal not only with the ability to pull back on mitigations, but also in case we get, which we very well might, so it's a big caveat, another variant. So very much better prepared right now than we were, example, a year or so ago.
Dr. Fauci, you said the data is there for that third shot, the booster shot in addition to the two. What about for a fourth shot? There's a lot of talk about that. Do we have data that indicates whether that's effective, particularly for the elderly or the more vulnerable, and how much more effective is it to have the fourth shot?
Well, when you have waning immunity, you look now, for example, 4 to 5 months following the third shot of an mRNA. The hospital protection still remains high at around 78%, but it waned a bit because remember, it was up there at around 90+%. So it's down still at a pretty high level. So that's the reason you've heard me and others say, for the regular person, you really don't need right now a fourth boost, except if you have a severe degree of immunocompromise, such as transplant patients and patients who are on chemotherapy for cancer. That's for the people in one category. For the people who have no underlying conditions, we have to keep an eye out on that 78%. That's good. That's at 4 to 5 months. So on a month-by-month basis, the CDC is following whether that durability of protection against hospitalization stays steady at around the 70s, or if it keeps coming back down. If it comes back down, at some point, you'll have to make a decision. Do you want to give a fourth dose to the most vulnerable? And obviously, those would be the elderly, those who have underlying conditions, those who are at a greater risk to get a serious outcome. So really what we're doing, David, is we're monitoring it on a month-by-month basis.
Dr. Fauci, I would like to turn to a slightly personal issue, and that's Dr. Paul Farmer. I know that he was a very close friend of yours. I knew him reasonably well, spent time with him. It does strike me we have lost a towering figure in the healthcare system, and particularly public health system. Reflect for a moment on what his death means and what we could learn from what he did during his time here on Earth that could inform both this pandemic and other things coming up down the road.
Well, Paul, as you're right, was a very dear friend of me and my family, my wife and my children. He's truly a once-in-a-lifetime person for so many reasons. I think people maybe not fully appreciate the total breadth of why he was such a great man. First of all, his passion for equity. He personally not only was an advocate for people in the lower and middle income countries, such as Haiti, where he spent a lot of time, and Rwanda and other low and middle income countries. The passion to make equity for health care was extraordinary. But not only was he an advocate for it, he lived it. He went to Haiti and lived there. He has a home in Haiti. He goes out into the wild, as it were, to visit patients in their own home. He was totally beloved by people in Haiti. The same holds true in Rwanda. That's one part of it. Equity, a compassionate physician. But look at the things he did. He built a first-class medical school hospital in Haiti. First class. Everyone said it could not possibly be done, that you could do that in a place like Haiti. He trained Haitian nurses and Haitian physicians so that they could be self-sufficient on their own. He just recently built and is the chancellor of an Institute for Global Health Equity in a rural part of Rwanda. When you think of that, that's totally amazing. And then superimpose upon that a person who had such love for humanity. Everybody who came into contact with him absolutely loved him. Truly an extraordinary man, an irreplaceable loss to the world, to global health, and to the idea and the passion that we should all have for equity. It's just, I mean, it took me a few days to just even be able to talk about it. It was so painful to realize that we no longer have Paul Farmer among us.
And we're sorry for your loss. Frankly, we're sorry for the loss of all of us. And Dr. Paul Farmer, thank you so much to Dr. Anthony Fauci. He's Chief Medical Advisor to President Biden, as well as the Director of the National Institute of Allergy and Infectious Diseases at the National Institute of Health. Back to you.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed. Bloomberg Business Week. Carol Masser and Tim is off today. Kriti Gupta here in his place in our Interactive Brokers studio. Our thanks to David Weston, of course, there with Dr. Anthony Fauci, the nation's top infectious disease doctor. In the meantime, let's not forget that stocks did extend losses as U.S. President Joe Biden expanded sanctions against Russia, new penalties hitting the Nord Stream 2 pipeline and its corporate officers. S&P 500 shedding about 1.8%, pushing further into correction territory. Tech stocks selling off amid the rising tensions and a cyber attack on several Ukraine government and bank websites. Let's get back to the markets. Charlie Massimo, he's Senior VP Financial Advisor over at Wealth Enhancement Group. He is on the phone from Blue Point, New York. Charlie, good to have you back on Bloomberg and here with Kriti and myself. It's been an interesting year and it's only February 23rd. Are there trends setting in place that you think stay with us longer throughout 2022?
Well, I think, thank you again for having me back.
Sure.
But I think that's a hard question to answer at this point. Certainly, I think if you look at the short term, you can say, well, this trend of volatility will be here for quite some time. But I think from an investor standpoint, as we always say, we need to look past the short term and look a little further out at the horizon and see where we may see some opportunities clearing up, maybe mid to longer term.
Let's talk about the markets here for a second, because I'm really confused. What is going on? There's this huge sell-off. We're pinning it to geopolitical risk. But just a couple months ago, I think the consensus was that the first quarter of 2022 was going to be pretty volatile anyway, of course, attributing that to the Federal Reserve. What is actually driving the market right now?
Well, I think you have so many factors that are driving the market right now. And certainly coming off a year like we did last year, you can expect somewhat of a pullback. But, markets, as you mentioned numerous times, hate uncertainty, and we certainly have a lot of uncertainty now. And a lot of people always ask, well, have we priced this war of Russia in, with Russia in? And it's so difficult to say, have we, because we don't know what this may end up as. Will it be a ground war? Will it be geopolitical? Or will it be cyber, as we're hearing today? So I think it's very difficult to somewhat predict where the market will go or what the trend currently is. But certainly the short-term driving force right now is the uncertainty with Russia.
So how do you make sense of, we did a couple of stories earlier about hedge funds basically bailing on technology stocks, and at the same time, the significance and kind of FOMO and some of those big tech names, that maybe it's just a matter of time before we start to see institutional money come back into them. How do you look specifically at a name like at some of the big tech names, and do you think it's time to allocate some new money to them?
Well, I certainly think when you look historically, value outperforms tech or growth stocks, and value has underperformed for probably the past decade. So certainly time is on value side. But when also you factor in
But people
inflation,
have been saying that for a few years, right? Only to get burned.
Well, that is true, but now look at what's happening now. You have inflation rising considerably, and you think about dividends so far outpace value stocks that pay very good dividends, so far outpace consumer price index, or so far outpace inflation. It's really important, especially if you're near the point of retirement, that it's more about purchasing power preservation than it is capital preservation. And really the only place that will keep up with inflation or surpass it is value type of dividend-paying stocks. So I certainly think there's a number of factors that will add to the column of value versus growth. And again, historically, we've always seen in rising interest rate environment, tech seems to stall out or even lose ground. So I tend to think and am in the camp that value will outperform growth, probably for the foreseeable future as interest rates kind of stay low, although they're rising, but as inflation continues to rise.
What's interesting is you pinned it to rising interest rates, but I also want to point out very quickly that you are actually seeing that this was a call in 2021, and perhaps this will come into fruition in 2022, Carol.
Yeah, certainly something that we need to think about. Charlie, we got to run. Thank you so much. Charlie Massimo, he's Senior Vice President, also Financial Advisor at Wealth Enhancement Group, joining us on the phone from Blue Point, New York. All right, you are listening to Bloomberg Business Week. I'm Carol Massar along with Kriti Gupta, and this is Bloomberg Radio. All right, Charlie Pellet. We've been talking markets. What do you got for us?
I got a losing day on Wall Street. Steep losses for the Dow, the S&P, and NASDAQ. S&P down 1.8% today, pushing further into the red, further into correction territory as tech stocks sold off amid the rising tensions between the Ukraine and Russia. Also a cyber attack on several Ukraine government and bank websites. Treasuries extended losses. The dollar little changed. Today we had the 10-year 1.99% on the yield right now. 10-year down 15.30 seconds. The Dow dropped another 464 points, down 1.4%. S&P down 79, a drop of 1.8%. NASDAQ down 344, down by 2.6% for the NASDAQ Composite Index. Year-to-date, NASDAQ is now down by 16.6%. Spot gold up 0.5%, $19.08 the ounce, while West Texas Intermediate crude up 0.2%, $92.08 for a barrel of WTI. eBay shares tumbling after hours after the company forecast adjusted EPS from continuing operations for the first quarter that missed the average analyst estimate. Poonam Goyal follows retail with Bloomberg Intelligence. She is awaiting the eBay conference call. She spoke with us right here on Bloomberg Business Week.
Yeah, I thought the fourth quarter actually was pretty good, except for the active buyers numbers. And here's where we're going to see what they see on the call. They were down 9%, down a little more than expected. But really the key here is how well did the high-value buyers do? And that's what we're looking for when they speak on the call. Aside from that, guidance was a little light, but we think that's, a function of tougher comparisons. We're encouraged by the share repurchase authorization and the increase in dividend.
And again, if we have any headlines from that conference call, we will pass them along to you. Right now, eBay shares are down by 8.22% after hours. Booking Holdings down 1.8% after the online travel company reported revenue for the fourth quarter that beat the average analyst estimate. Booking, by the way, is the parent company of Priceline. Hertz out with total revenue for the fourth quarter that met the average analyst estimate. Hertz shares driving lower by 2.6% after hours. As I mentioned, a down day on Wall Street. The Dow, the S&P, NASDAQ all declining. Stocks extending losses as President Biden expands sanctions against Russia with new penalties hitting the Nord Stream 2 pipeline and its corporate officers. Recapping, 10-year yield 1.99%. S&P down again today, dropping another 79 points, down 1.8%. And that's a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. So this is another one of the most read stories on the Bloomberg today. It's about the solar startup CEO whose pay is so big, Kriti, it just might eclipse that of some other well-known and well-compensated heads of companies. And we know, we cover this at Bloomberg, right? There's been some CEOs who've done really, really well in the past year.
Yeah, Carol, I just have one question for you. What would you do with $37 million?
I would be on my private island somewhere. And as much as I love you all, but I would be...
Is that how much islands go for? $36 million, and then just a little bit of extra on the top?
I just need a little island, All right, let's get to it because it is a must read. Bloomberg Wealth Team reporter is with us. Scott Carpenter, he's here in our Bloomberg Interactive Broker studio. All right, Scott, great story. We're all reading it. So what's the company and who is the CEO and how much money are we talking about?
Thanks so much. It's great to be here. The company is Heliogen. It was founded in 2013, and it's a solar startup that is planning to create heat by concentrating the sun's energy on a small spot. And the company says that it can get temperature up to 1,000 degrees, which would be higher than before. And it's paying its CEO $37 million, which is more than what Goldman Sachs paid its CEO last year. That's the value of the pay that Heliogen gave him last year. It's actually less than that right now because the stock price has gone down since then.
But it comes with I'm just looking at your story here. It comes with a catch, right? Walk us through that.
It comes with a big catch. It's mainly composed of options, and because the value of the shares right now is less than the strike price of the options, he actually could not exercise those options. They also vest over 4 years. So the idea of this is to give Gross a long-term incentive to build value for the company. And I think the company knows that this is a risky concept. This has the technology here has a patchy track record. So they're trying to give their CEO a lot of motivation to go big, to make this work where in the past it has been spotty.
I mean, this was a $16 stock at the end of last year, so it has taken a major haircut.
Right, yeah. It started trading after it merged with a SPAC at the end of last year, and it went up to $16, and now it's down to $4. Of course, a lot of that decline has been because there's been a sell-off in the SPAC market. So investors have not yet delivered a conclusive verdict on whether this technology is going to work. We'll see in the long run. And according to this latest pay package, the one that was worth $37 million last year, those options vest over 4 years. So it's going to be some time before Gross can decide whether those options are really worth much. But
can we just clarify? It's not the Bill Gross formerly of PIMCO fame. It's a different Bill Gross, just to lay it out there.
Yes, thank you. Good clarification. This is Bill T. Gross, whereas the bond investor, the famous one, is Bill H. Gross.
There's a difference.
There is always a middle initial.
There is.
But Bill Gross aside, there are some big name backers here. I'm looking at Bill Gates. Walk us through that connection.
Yeah, absolutely. Well, Bill Gates, it's not too surprising. He has been investing in a lot of technology that has promised to do something about climate change. So yeah, he's a big investor. Another investor is actually Patrick Soon-Shiong. These are investors that have traditionally invested in emerging technology, things with big promise, but that don't necessarily have a tremendous track record right now. But they're things that could pay off big time in the future and could mean a lot for the world of clean energy.
Gotta say, this is actually an energy that my husband and I have talked about, like harnessing the sun, right, to help in terms of our energy needs. So do we know anything about the trajectory, the time frame in terms of understanding whether or not this is really viable and it's going to work? Because if it does work, you could see this company just take off like a moonshot.
Right. I think it's difficult to say on the timeline. The company's still very young. It hasn't said a whole lot. It has said that it's starting a partnership with the mining company Rio Tinto. It has a partnership with them. Where I think and investors are waiting to see whether there's anything to this. Because in the past, there has been a lot of hype about this technology, and people believed that it was the next big thing, and it was a way to harness the sun's power, and it didn't quite work out. So this time around, what Heliogen says is has new technology. It's using smaller mirrors in order to avoid some of the problems that afflicted the technology in the past. And so, yeah, it's still too early to say, but hopefully we'll be able to know a timeline soon.
Feels like something the Avengers could figure out. I'm just going to put it out there. It's interesting, though, looking at the FA function on the Bloomberg. I mean, they definitely have seen, or they're predicted to see, tremendous revenue growth year over year by the time we get to the end of this year. But again, time will tell if it all works out. Interesting read. I said it was among the most read. It's a fun read. Bloomberg Wealth Team reporter Scott Carpenter joining us here in our studio. Scott, thank you. All right, let's get back to World and National News. Nancy Lyons, take it away.
Thanks, Carol. President Biden is expanding sanctions against Russia with new U.S. penalties today, hitting the builder of the Nord Stream 2 pipeline and its corporate leadership. That's on top of the penalties announced yesterday when Russian President Vladimir Putin moved to recognize breakaway territories in Ukraine as independent states. But even though the U.S. is ramping up the pressure on Putin, Ukraine's Foreign Minister Dmytro Kuleba tells Bloomberg more severe sanctions are needed, even if they're costly to the NATO allies.
A war between Russia and Ukraine will inflict much more damage on world politics and world economy, because what is at stake now is the existence of the world order as we know it.
Ukraine's Foreign Minister Dmytro Kuleba tells Bloomberg President Putin has been able to live for too long without checks and balances. Well, it's now looking like a large-scale invasion is imminent, with the State Department's Ned Price expressing real concerns about what Russia might do.
A large-scale invasion, an assault on urban centers, the human rights abuses, the potential war crimes, the atrocities that we have great concern could take place.
The State Department's Ned Price says the U.S. is ready to engage in diplomacy in order to save lives. Two leading prosecutors investigating former President Trump's business dealings are stepping down. The New York Times reports prosecutors Kerry Dunn and Mark Pomerantz resigned abruptly today from the team after Manhattan DA Alvin Bragg reportedly expressed doubts about moving forward with the case. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Kriti Gupta, our Bloomberg Markets correspondent, here in our Interactive Broker studio, right here on Bloomberg Business Week on Bloomberg Radio. Remember when you talked about 80, was it rubles buying French fries? So what do you think 90,000 pounds or 122,000 US will buy you?
A whole lot of fries.
But a very small apartment in London.
Right. Can you tell I'm hungry, Carol?
We all are at this time of the day. So a London apartment with only 75 square feet, 7 square meters of living space was just bought at auction for 90,000 pounds, 122,000 US, an 80% increase from its initially planned starting price of 50,000 pounds. It's small.
Can I just mention, not to be a little bit of a European snob here, but I love London. I love it, love it, love it.
I love London too.
It's located in East London, which isn't even the most expensive part of London.
I heard Caroline and the team talking about it over on the TV side, and she's obviously British, and yeah, it's not a great area.
It's not exactly, which is like, why? But, you know,
but it's London, and like in any great city, like we've seen this in New York. Remember, there used to be neighborhoods. I went to college in the city, and there were areas you would not go that are now pretty hot areas.
Yeah, well, East London, just historically, from my very surface level knowledge of it, it's near Canary Wharf, which is the financial center of London.
Right.
And so it's supposed to be this kind of up and coming neighborhood, the FIDI essentially of London. What's interesting to me is this markup, an 80% increase in a city that's already fairly expensive in the property sector.
Talking about inflation. All right, but we got to get to the specs. The apartment features a bunk bed over shelves. It's like a dorm room. Drawers and a microwave. There's also a tiny, quotation marks for those of you on YouTube, wet room with a shower, toilet, and sink.
We should mention the bed is on top of the microwave, just to be clear.
Come on, it all works, right? Even before the auction began, the starting bid for the micro flat was bumped up to about $102,000 due to high demand. The current tenant pays almost $1,100 a month in rent and uses it as a crash pad a couple nights a week. That is small.
I want to know where he actually lives.
God. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of earnings after the bell. Hertz Global Holdings posted fourth quarter profit that beat expectations despite ongoing sluggishness in corporate travel during the COVID-19 pandemic. The car rental company posted earnings of 91 cents a share, excluding some items, surpassing the average estimate of 76 from analysts compiled by Bloomberg. eBay is warning investors that first quarter sales will miss estimates as shoppers return to pre-pandemic spending habits. It was a down day on Wall Street with the Dow, the S&P, and NASDAQ extending losses. S&P moving deeper into correction territory, down another 79 points today, down 1.8%. The Dow down 464, down 1.4%. NASDAQ down 344, down 2.6%. 10-year yield 1.99%. Spot gold up 0.5%, 19.07 the ounce. West Texas Intermediate crude oil up 0.4%, 92.24 a barrel on WTI. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there with an update on today's top business stories and the markets. Well, as we await the heightening geopolitical tensions as a result of Russia's moves on Ukraine, let's not forget that people actually live there and they are trying to figure out whether to stay, to flee. Their future definitely can be, at this kind of time, feel very much up in the air. Our next guest has nearly 300 employees in Ukraine, and he is joining us with what he is seeing and what they are doing. We welcome Andy Kurtzig. He's founder and CEO of Just Answer. It's a site that connects people with doctors, lawyers, vets, mechanics, all kinds of experts 24/7. He is with us on the phone from San Francisco. Andy, nice to have you here with Creedy and myself. How are you, and how's your team doing who are on the ground in Ukraine?
It's nice to speak with you as well. It's a terrible situation in Ukraine. Our team is suffering. The people of Ukraine are suffering, and it's a very difficult time right now.
So what are you doing to prepare? Walk us through that process.
We've been in Ukraine since 2010, and that was when Yanukovych was president. Basically, Putin controlled Yanukovych. We were there while it was under Russia's control. We were there during the Maidan Revolution in 2014, which was another trying time. And then we've been there since then with Russia invading Crimea and fighting on the east. And so we've had some time to prepare, and we've been able to put together lots of plans that we are now implementing to keep our folks safe and to keep our operations as stable as possible.
So you mentioned it's obviously a difficult situation for your employees. I'd love to go back there, and can you drill down a little bit for us in terms of specifically what your team members in Ukraine are dealing with at this point?
Of course. So Putin is obviously bullying Ukraine and is a master of propaganda and misinformation, and so the kinds of things he's doing to our folks on the ground is that you probably saw the bombing of the kindergarten about a week ago, and since then he and his folks have been calling in bomb threats at schools all over Ukraine, including our employees' kids' schools, and with that actually happening, right, that's a real threat. And everybody has to drop everything and run to school and pick up their kids. And this has happened multiple times in the last couple of weeks.
So give us some,
as an example.
Give us some numbers, maybe a little bit of a time horizon on, I guess it's just so rare to have someone actively kind of works out some of these logistics when it comes to their employees. What kind of time horizon are you kind of preparing for? Are you forecasting for? What does it look like on the ground?
Well, so what we've been able to do over the years is put together a large document with essentially DEFCON level 1, 2, 3, 4, 5, and at each step, all the actions that we're going to take to keep our employees safe and to keep our operations as intact as possible. And so, for example, one of the things that we're actively doing right now at the threat level where we are is moving our employees from the east of Ukraine to the west of Ukraine. And we've given them multiple options. We're putting them up in hotels. We're helping them rent apartments. We're giving them paid time off to make those moves and to pack things up. and that's actively happening now as one example.
So I'm also curious in terms of the situation that your employees are dealing with. One of the stories we talked about earlier, Andy, is the cyber attacks that are happening. And we've reported that Ukrainian government agencies and banks were hit by what's called a DDoS. I don't know if I'm saying it correctly, but it's a distributed denial of service attack, right? And a lot of this is to really kind of chip away at the sense of security among the Ukrainian people. What signs are you folks specifically seeing of that?
Absolutely. We call those DDoS attacks.
DDoS, forgive me.
And no problem. And yes, one of our bank in Ukraine was one of the banks that they took down with the DDoS attack a week ago. And how does that affect us and our employees? Well, one of the things we need to do is we need to protect them and make sure we can pay them on time. And so if Russia were to continue to do that, we need alternative ways to pay our employees because they got to pay for groceries and pay the rent and do whatever they need to do in order to live. And so that's the kind of thing that we worry about. The other thing, and so we've got all kinds of plans for that. We've got money that we've put in a bank in Poland. We're thinking about even using crypto if the hryvnia starts to devalue in a major way and becomes less useful. Lots of different alternatives there. So the other things we need to worry about, and very likely, and have already been happening, frankly, are Putin taking out communication systems, Putin taking out power systems. And so, on the power system side, we're getting diesel backup generators for our 2 offices there so that people can have access to that. For communications, every time the internet goes down, and they are doing DDoS attacks on different ISPs, can you imagine how that feels to live in Ukraine? Because that's one of the first steps, right? The minute war starts, Putin's going to take out your communications. And so if you're sitting there at home and all of a sudden your internet goes out, you think war started. Can you imagine that feeling of constantly sort of any moment your country's going to be invaded by Russia? And so we've got to do all kinds of things to combat that. We're getting satellite phones. We're getting multiple different ISPs. So that one goes down, we've got another one. We're using all kinds of different chat communication methods in case one goes down. We have access to others. So these are the kinds of things we're dealing with.
Yeah, anecdotally, I've heard that a lot, and maybe you can correct me if I'm wrong, but anecdotally I've heard that a lot of people have been trying to move their funds, their savings out of Ukraine when it comes to, essentially their life savings, pulling it out of bank accounts, investing in real estate in Western Europe. You mentioned operating through a bank in Poland or even crypto. Are those the kind of things you're thinking about as well?
Well, I mean, we're a U.S.-based company. We're based in Silicon Valley, so most of our assets are here, and we don't have to worry about that. We send money over in order to pay them, and then we pay them, and then there's just reserves left in the bank account until the next time we need to pay them. So that's not an issue for us as much, but we got to make sure we can pay them.
Hey, Andy, just got about 20 seconds left here. Do you ultimately anticipate you might need to pull these people, if they want to, completely out of Ukraine, depending on how this plays out?
I sure hope not, but that is an option for sure. Depending on how this plays out, we need to keep our employees safe, and we're going to do whatever it takes to keep them safe. And I just want to end with one quick thought, which is, I don't think it will come to that, and we're certainly planning for the worst, but we're hoping for the best. And our intention is to stay in Ukraine. We are committed to Ukraine, and in fact, we're going to try to grow in Ukraine.
All right, going to leave it on that note. Andy, thank you so much. I know this is a tough situation. I know you've got your plate full, certainly taking care of your folks on the ground in Ukraine. Andy Kurtzik, he's founder and chief executive officer of Just Answer, on the phone in San Francisco. Sound On with Joe Matthew coming up. Joe, what's on tap? Just quickly.
We'll be talking with Daniel Fried to start off, former ambassador to Poland, former assistant secretary of state for Europe. We'll get to the bottom of the new sanctions announced today.
Gosh, great lineup. All right, Sound On with Joe Matthew coming your way in just a moment. A reminder, we pretty much ended on the equity side of things near our lows. Kriti Gupta, thank you.
Thank
See you tomorrow.
This was fun.
All right, it was fun. Have a safe evening, everybody. This is Bloomberg.
from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York. This is Bloomberg Technology. Coming up in the next hour, we explore the latest sanctions that the Biden administration is levying at Russia as the country inches forward to a possible invasion of Ukraine. Plus, with tensions heightened, how Russia could also use cyber attacks to retaliate for those sanctions. Plus, the revolving down in Washington between those in crypto and those tasked with policing it. There's a surprising number of people who have been making the move from crypto to government and vice versa. And for the first time in nearly 2 decades, there'll be no new Call of Duty next year. What that means for the gaming industry, plus why the gaming world is going crazy over Elden Ring, and why fans of Game of Thrones might be intrigued as well. We'll get to all of that good stuff in a moment, but first, well, it was another pretty bleak day on the markets, particularly if you're long technology. Bloomberg's Kriti Gupta has the update for us.
Yeah, a risk-off day in the markets, red on the screen, which is interesting given that we had a pretty big sell-off yesterday. That usually means you have a pretty strong rebound, but even though we opened in the green, we weren't able to hold those gains. You can see that right behind me, the S&P 500 closing down 1.8%, but like you said, Caroline, a lot of that pain showing up in the NASDAQ down almost just shy of 3%, 2.6%. What's important to keep in mind here is that big tech, although it leads to those records, it also leads the declines, and that's really what you're seeing. One of the only sectors in the green today was, of course, energy, which brings me once again to those geopolitical tensions. You can see that's what weighted the stock market down, but actually fed into commodities, and you can see that Brent crude getting closer and closer to that $100 a barrel. That is going to be significant when we talk about inflation feeding back into what actually weighs on those tech stocks. Let's talk about technicals, though, because that absolutely plays into this dynamic. You actually saw the S&P 500 close into correction territory yesterday. So once again, Caroline, the assumption here is that you're going to see a bounce back pretty normally when the S&P 500 drops 10% from its all-time peak. You do see a pretty strong bounce back, yet we are not there. We are now down 11% from its peak earlier this year. There was some green on the screen, though, little pockets. And once again, it comes to geopolitical tensions. Traditionally, in those kind of safe haven moves, you tend to go to big tech. But today, that green on the screen happened to be in cybersecurity stocks. A little bit of a last-minute sell-off when it comes to CrowdStrike, VMware, and Fortinet. But Palo Alto, once again, actually gaining some pretty blockbuster earnings there. But at the end of the day, when you're talking about geopolitical risk, when you're talking about invasion risk, and of course, cyber attacks on Ukraine, what better play than those defense stocks? And right now, that's the purpose cybersecurity is playing right now in the stock market.
Kriti, such a great roundup, really tying together all of the headwinds and tailwinds in the market at the moment. And I want to talk more about those headwinds and precisely the sanctions that we were just talking about. The Biden administration, once again, upping the ante in that respect. We want to bring in, of course, Bloomberg's Washington correspondent. He's not in Washington, she's in New York, Anne-Marie Horden. The reason you're here is because you had a really great exclusive interview. But first and foremost, bring us up to speed with, well, where we are in terms of sanctions. They seem to be ramping up slowly.
Yeah, the Biden administration today is going to be sanctioning Nord Stream 2 and the individuals that are part of Nord Stream 2. And this, I have to say, is a pretty aggressive step. This is something that the U.S. has really held back from doing. And this isn't just now that the Germans say we're going to wait for that certification.
Because remind us, Nord Stream 2, the gas pipeline between Germany and Russia.
Right. And this is something Putin wants, $11 billion. He can start to not go through Ukraine as much for those gas, but instead use another pipeline directly into Europe, the heart of Europe. And now, even though that Germany says they're going to wait to potentially certify it, with the U.S. putting sanctions on it, that means that certification may never come through. But the Ukrainian foreign minister, who I sat down with, said this is very welcome. They've been against Nord Stream 2 for years, but he said more sanctions are needed. Take a listen.
It sends a strong message to Putin, but it still doesn't stop him. So it means we need more sanctions. We need the second wave, and then probably the third wave, until it gets clear to him that he shouldn't make any step further.
Dmytro Kuleba there, and he's heading back to Kiev now. We should note in Kiev now, Caroline, and Ukraine as a whole, it's a state of emergency.
Yeah.
The separatists have asked Putin to send in troops, so it does feel like things are really starting to escalate.
Starting to escalate, and also not only in physical form, but also in cyber form as well. There was another cyber attack on Ukraine's key sort of infrastructure today.
Yeah, and including the foreign minister, his website. So all these ministries were attacked. This was the second cyber attack that's happened in about a week. But this has happened to Ukraine a number of times. One of the biggest ones was in 2015 when literally everyone's power went out in the country, or maybe 300,000 consumers, right? It felt like a lot at the time. But they've attacked, cyber attacks have been at banks, the metro, a number of issues. And I asked him about this, and he said they have been working to really fortify it and make it a little bit more robust. But I was curious about if you're going tit for toe or tit for tat with Putin, toe to toe, when it comes to sanctions, trying to deter him, any of his conversations have Western leaders said they would also issue cyber attacks on Russia? And he said, no, that hasn't come up yet.
Huh. We'll see how cyber warfare starts to be factored in a little bit more. Anne-Marie Horden, such a great interview. Go on to Bloomberg.com and seek it out because it was a great conversation. But we want to, of course, discuss a little bit more about what's been happening with several of the Ukrainian government and banking websites not functioning due to distributed denial of service attacks, DDoS. This comes after Ukraine said just last week that, of course, it suffered its worst cyber attack, also targeting banking and government websites, as Anne-Marie was just telling us. Let's dig into it. Marcus Fowler, he's the Senior Vice President for Strategic Engagements and Threats for Darktrace. He also spent 15 years working at the CIA as its global cyber operations. You're a man who's in the know on these things. Just talk to us about the level of threat that distributed denial of service attacks have on Ukraine. How impactful are they?
Sure, Caroline, and great to be here. So, these distributed denial of service attacks really go at basically flooding a network or a website with traffic so that they're unusable, they're overloaded, and they really don't function. And they can be disruptive kind of at that, if I'm a consumer trying to get to a specific website, and they can really frustrate kind of the internet connectivity of a specific website. But in terms of like broader, more disruptive attacks, I think those are still to come.
Okay, still to come, and still to come leveled at Ukraine? Or do you start to think that here in the United States, with sanctions being upped by the Biden administration, we could too see infrastructure as we've seen before, or perhaps websites and the like start to be attacked as well?
Great question. I think the easy answer is both. You're going to see them ratchet up. You're going to see the Russians ratchet up cyber attacks within Ukraine, potentially moving into ransomware, data theft, data encryption to further cripple organizations and businesses, as well as potentially move into critical infrastructure as a higher escalation point. As for the U.S. and the West, as harsher and harsher sanctions and more economic damage is done on Russia, you will see them, I think, want to and attempt to respond in kind in terms of economic disruption. Thinking financial institutions, banks, maybe potentially tightening or more damage to the supply chain through either their own actions or proxies such as cyber criminal groups or ransomware actors.
Yeah, to that point, when you are looking at the data, when you're trying to see, when you're understanding where these attacks are coming from, how do you discern whether it's indeed from the government, whether indeed it's more using other actors at their will? How you can ensure that you're joining the dots in a sophisticated manner?
No, your attribution within cyberspace and who the actor actually was is incredibly difficult. Though I was very pleased to see with the earlier version of the denial of service attacks, the U.S. government come out fairly quickly to identify the Russians as the attackers in that space. And I think assessed attribution is really important, that it is done as quickly as possible, and that Russians, where there is evidence, can be held accountable. But I think they will absolutely be leaning on proxy organizations, potentially new ransomware groups we haven't heard of before. You're going to see more activity within that space as the Russians either provide more state-directed actions, or are increasingly not only turn a blind eye, but kind of turn the shackles, release the shackles a bit in terms of those ransomware groups operating out of their backyard, as it were.
Marcus, I mean, obviously I'm asking you to talk your book a little bit, but have we seen an uptick in demand for cyber protection? Are we seeing the defenses being fortified? Are we ready for the fight, to be perfectly frank?
So I would say one of the silver linings of the increase in ransomware over the last 2 years is absolutely seeing the private industry, especially prioritize cybersecurity more directly, right? And really start to put more resources, personnel, advanced emerging technologies into that space. And I think the U.S. government has as well, right? And as well as many Western allies recognizing the increased threat. Have they done enough, as quickly? I think we are in a bit of a race condition against what will be a spike in cyber attacks, and getting the right pieces in place to properly defend, right? It's kind of what that old adage of you go to war with the army you have, not the army you'd wish you'd built and resourced and prioritized appropriately.
Always the way. Marcus Fowler, really interesting. We thank you so much, SVP of Darktrace. Meanwhile, coming up, we're actually going to shift gears a little bit. We're actually going to look a little bit more at the future of marketing, how brands need to rethink their marketing strategies as we undergo, of course, the digital transformation that still has been launched upon us since COVID. What challenges brands will face in 2022? We're talking about that all with the Zeta Global CEO, David Steinberg. This is Bloomberg. Take a moment to think about, well, the future of marketing, from Peloton to Facebook, or as we now know it, Meta. The world is seeing its shares of brands facing kind of a post-pandemic marketing challenge. For more, we want to bring in, on the back of its earnings and also its forward-looking thinking on all of this, the marketing firm Zeta Global. The CEO and co-founder and chairman, David Steinberg's with us. Also, of course, as I say, pushing to a fourth quarter sales number that beat estimates, 135 million. Talk to us first and foremost about your numbers first, David, and the growth that you're seeing. Are we seeing continued demand and knowledge need in the marketing space?
Yeah, so first of all, thank you for having me, Caroline. I appreciate it. It's great to be here. So at Zeta, what we're really seeing is what I think a lot of organizations are seeing. There's a tremendous amount of disruption in the ecosystem as most marketers are moving from analog marketing to digital marketing. And as a lot of the very large tech players are sort of trying to consolidate control, Apple got rid of their tracking mechanism called the IDFA. Google is eliminating their cross-app tracking. They're eliminating the third-party cookie. Platforms like Zeta Global, which do not use any of those to resolve to an identity, have been able to grow fairly dramatically. I mean, I think that We grew the business when normalized for the presidential election by 32% in the fourth quarter, and we grew earnings for the year by over 60%. I think a lot of that is coming from this big disruption in the marketplace where organizations are trying to figure out how to navigate those changes, and Zeta Global is a bespoke platform to help them do so.
And obviously feeling that you've got enough confidence in your growth strategy that from a full year revenue of about 458 million, you're looking to get that into in excess of $1 billion in annual revenue over the next, well, up to 2025. Talk to us about the kind of companies that are coming to you at the moment.
So it's a great question. Obviously, not only did we roll out our 2025 plan to get to over $1 billion a year in revenue and 20% plus operating margins, we fairly dramatically increased our guidance for 2022 as well. We're seeing very large enterprises. In fact, 34% of the Fortune 100 today use the Zeta marketing platform, who are trying to get to consumers in a way that is very cost efficient. And our platform is not just digital, it is built to be efficient in the way the marketing operates. And we've been able to really scale very, very quickly with our clients.
And so how do I, as a client wanting to get in front of the right user, the right demographic, the right timing, how do I do that in a cost efficient way at the moment? Because I feel that there's an awful lot of wall of money is being spent on the likes of Instagram, on the likes of TikTok, but is it really being that efficient to your perspective?
Yeah, so a lot of it isn't, right? So the old joke is, marketers would say, I know that 50% of my marketing is a waste of money. I just do not know which half. The beauty of the Zeta marketing platform combined with our data cloud, which has over 230 million opted in US individuals alone, is we can weed out the individuals that do not have a propensity to want to buy our clients' products. And we know exactly when they're in market. So we're able to hit them at the precise time with the precise message. And we're able to pull out of that marketing funnel the 50% of customers who would not be credit approved and or have a propensity to want to buy that product. So just by removing them, you're able to massively increase the efficiency. And then by using our data cloud, where you're interacting with these 225 million opted in US individuals, we're able to know when they're in market for particular products and services and specifically target them when they're thinking about the products. So those two things allow us to be very efficient with our enterprise clients' budgets.
David, you said opted in. How are we in terms of general trend lines? How many people are going to be wanting to opt in? How many people see the quid pro quo and say, I'm in, I want it, I want to be targeted that little bit more efficiently?
Yeah, listen, we came about this in a very different approach from most companies. So we have acquired a large number of technology platforms that power publishers. And in exchange for the publisher getting our software platforms at no cost and the consumer being able to use those tools at no cost, we simply ask them to opt in. In return, we guarantee the consumer we will never sell their data to anybody at any price at any time. We simply use that data to build intent-based scores on what does a consumer intend to do next. Do they intend to buy a particular credit card? Do they want a blue car of a particular model? Are they going to churn off a wireless platform? And we use that data to build a curriculum of contact on behalf of our enterprise clients to help them lower churn or create customers more efficiently. So by always keeping the consumer's data private, we get a lot more consumers who are willing to opt into the platform and work with us because they know their data is never going to be sold.
Well, so here's hoping we get stalked a little bit less by ads for things we've only just purchased. So thank you very much indeed. Zeta Global CEO and co-founder and chairman David Steinberg really making the time for us when he's just released his earnings and indeed a serial entrepreneur there. So great findings. Meanwhile, coming up, Call of Duty delayed. We'll talk about why Activision decided to postpone its flagship game by a year. What people are saying about it. That's next. This is Bloomberg. Now we've got to talk about it. Call of Duty being delayed. It's the first time the franchise will be without an annual mainline release in nearly 2 decades. It's all according to people familiar with the plan. Now we want to talk to our expert in all of this, Bloomberg's Jason Schreier, for more on the reasoning behind it. It feels as though, the previous release just didn't live up to expectations?
Yeah, that's exactly what happened. So Call of Duty, it has been an annual release that's come out every fall since 2005. So this is pretty stunning. It's a big change. I mean, just for a little context, is the last time we did not have a Call of Duty, I believe, was the beginning of the first Obama administration. So, it was the beginning of George W. Bush's second term. So, so we're talking about a very long time. And, yes, so the previous years, last year's Call of Duty game underperformed, which led Activision execs to start thinking, hey, maybe we need to rethink this whole release schedule thing, maybe give some of these titles a little bit more breathing room.
Okay, so maybe a little bit more desire, working up our appetite for the latest release, but it also comes at a time that there's a lot of change at Activision, of course, notably that they're being bought. Could it be anything to do with that?
Yeah, I mean, I'm sure there's been some conversations or another about how Microsoft will react, but you know what? I think legally, even though they've announced the acquisition that Microsoft is buying Activision, it is not quite closed. It needs to go through regulatory approval, which is expected to be finished by next summer at the latest, summer of 2023 at the latest. So until then, Activision is legally required to just continue operating autonomously. And while I'm sure they're in conversations with Microsoft execs all the time, they are still making their own calls. And I think this was more about the health of the Call of Duty franchise than it was about Microsoft coming in and wanting to make some changes.
Talk to us, therefore, about maybe some of the independent changes they're making ahead of the sale from an executive shake-up perspective, because they were once the acquirer, particularly of the maker of Candy Crush. Then there's some executive churn there.
Yes, again, that was actually just today, is that King, the makers of Candy Crush, they announced that their president and chief creative officer are both departing. Again, who knows if that is really related to the Microsoft acquisition or if, as they said, they want to go spend more time with their families. I mean, we all know what that typically means in exec speak. But again, I just don't think that while it's possible these folks saw the writing on the wall and are like, you know what, that Microsoft's going to make some changes anyway, we might as well get out of here early. I do not think that Microsoft is actually getting involved too much just yet.
Okay. Lastly, talk to us a little bit about where is hot right now. So if we're going to have to wait for Activision to release Call of Duty, there is another game that everyone seems to be talking about, Elden Ring.
Yeah, Elden Ring comes out on Friday. Today, the review embargo lifts, so a bunch of criticism just hit. Last I checked, it was tracking to be one of the, if not the best reviewed games of all time.
Wow.
So this is a game that's getting a lot of hype.
What was the winner before?
I should check. I think the Legend of Zelda: Breath of the Wild was a top one. Mario Odyssey was another top one. Last I checked on OpenCritic, which is a review aggregation site, it has a 96 out of 100, which is by far the biggest game of the year, and I think one of the biggest games ever. But so this game, it's getting a lot of hype, largely because it's a crossover between George R.R. Martin, who's the writer of the Game of Thrones series, and From Software, which is a Japanese developer that has become absolutely beloved among a lot of gamers for its series Dark Souls, which is known as like a really interesting, mysterious, difficult action RPG series. And so this game combines the two, and it really just takes a lot of smart ideas from a lot of other games, and it's really brilliant. I've been playing a whole lot of it over the past week.
Jason, you're doing your reporting for us. We thank you. Jason Schreier, he's always so smart on all things gaming, so go check out the latest. Meanwhile, coming up, despite, supply chain issues and shipping delays, it didn't seem to slow down Overstock, which just reported better than expected fourth quarter earnings. We're going to be breaking down all of the numbers when it comes to your purchasing of big ticket items with the CEO, Jonathan Johnson. But also remember their foray into blockchain. He's been a big proponent of the technology, and looks as though his early investments there seem to still be bearing fruit. Certainly people liking the stock on a key investment in the financial exchange area. So stick with us for that conversation. From beautiful, sunny New York, this is Bloomberg. is Bloomberg Technology. I'm Caroline Hyde in New York. Let's get back to some market moves today because we've seen tech in particular under pressure, particularly amid the rising tensions between Russia and Ukraine. Why? Let's talk to Ryan Vlastelica, who's with us, of course, over in Chicago. And Ryan, is it theoretically risk off, or is it more a rising rates environment that means that tech feels the pressure the most?
Well, we're really seeing both of those factors come into play at the same time right now. We've long had concerns about the prospect of rising interest rates and inflation, Fed policy, and then on top of that, we have this new geopolitical tension that is just another reason for investors to be a little bit more cautious about the growth side of the market. It's another reason why we've seen people just pull back from tech in a pretty broad-based fashion.
Yeah, I'm looking at a chart. NASDAQ 100 off by 17% from its all-time high. I mean, that's basically heading into bear territory now as we saw the S&P 500 hit a technical correction level, Ryan. Talk to us about what analysts are saying, because on the one side, you've got Goldman Sachs sort of calling about a regime change that we're seeing, particularly in the hedge funds area, selling out of big tech. But Morgan Stanley is sort of looking at maybe the silver lining, the opportunities therein.
Absolutely. So Morgan Stanley came out with some data yesterday that looks at fund ownership for major technology stocks. And it found that when it comes to names like Apple and Microsoft, these are under-owned relative to their weight in the S&P 500, which the firm interprets as a positive signal. Perhaps people have come out of these for so much, there's maybe a little bit room on the upside from here. Therefore,
Are you likely to see a bounce? Are we likely to head to a bear territory? Are we thinking that in this rising tension with Russia and Ukraine, we're really in for more pain to come?
Everyone I've spoken with expects a lot more volatility in the space, and certainly no one is ruling out the potential for additional downside from here. But when it comes to these major names like your Apples and Microsofts and Amazon and so forth, people continue just to really see very strong long-term growth potential here, strong earnings power, and those are factors that do have people continuing to be a fan of them, even if in the short term there is a potential for further volatility and downside.
And questioning evaluations, Ryan, we thank you so much, Bloomberg's Ryan Vlastelica. Stay warm over in cold Chicago. And let's talk about sort of the down day that we had on the overall markets, but the companies that outperformed, one of them was Overstock, in fact, surging in terms of its share price, announcing better than expected fourth quarter earnings, as well as navigating, of course, the ongoing headwinds that are supply chain issues, labor issues, inflationary issues. Let's talk about how you managed to navigate that, and also a little bit of blockchain too. CEO of Overstock's with us, Jonathan Johnson. Jonathan, congrats on the numbers, and talk to us a little bit about how you've managed to ensure that inventory is where you need it, that the supply is where you need it, when the rest of the world is really struggling with it.
Yeah, we had another great quarter. It's our 7th consecutive quarter of profits, 2nd consecutive year of market share growth. We have a vast and distributed supply chain. So over 3,000 partners that have goods for us. We have always had goods in inventory. We're very good at forecasting for our carriers what demand will be. So we weren't hit with Shipageddon 2 years ago, and we weren't hit with any delivery problems this past year. Of course, supply chain is tough, but we think our distributed asset light model really helps us navigate it well.
And do you see any easing of some of those pressures in general in the industry?
I think the bottlenecks and kinks in the supply chain probably last for the bulk of 2022. That supply chain is pretty stressed, and so any small kink in it tends to be amplified more than it normally would. We think our system works well, particularly well in times of high demand and low supply.
What about inflationary pressures as well? Because people come to you for value. Is that going to be a headwind, tailwind for you as we start to see people worrying about the price point?
People do come to us and recognize us for smart value, which means, the best product they can get for their dollar. Of course, there are inflationary headwinds for everyone, whether it's labor or goods or, gasoline prices. We've done a nice job being able to absorb those with our suppliers and pass as little of those as possible onto our customers. Our customers, when they come to Overstock, she expects a great deal for her dollar, and we're still able to deliver that.
I'm interested when you say gasoline, because an awful lot of people would say actually it's the delivery, it's the trucking, it's that sort of choke point that has been difficult. How are you finding, when we look at geopolitical tension, when we look at oil prices heading towards $100, is that something you just brace for that little bit more? How do you lean on your suppliers in that respect?
Well, we have to lean on them. We work closely with, the UPSs and the FedExes of the world, which are the last mile delivery from our suppliers' warehouses. It's a difficult thing to manage. We've got a great supply chain team that manages each of those relationships really well.
Just looking at your share price, obviously doing incredibly well on the day, but has been under pressure over the year. How are you sort of talking to investors at the moment? Are they feeling that you're getting caught up in a valuation question mark in the time where we start to look at rate hikes and issues like that? Or what do you make of the valuation of your business?
Well, as I mentioned on our call today, we have a board authorized share repurchase amount. We think our stock is undervalued today. We've been in a company blackout period since the 1st of December. That's been the bulk of the time when the price has gone down. I think we're in a good position to exercise our buyback should that be the right thing to do.
Interesting. So making the most of it yourselves. Of course, you're a man who's known for being front of the pack when it comes to dream homes, but also a man who's really understood and got to grips with blockchain before many did, and before it became the catch-all term that we all love to make out that we're further afield in crypto than we actually are. I'm interested in Medici Ventures, of course. That was originally the part of the business that you had, making investments in some of the blockchain technology. You've doubled down on that. T0, talk to us about why. This is a spin-off of yours. This is, a company that you own a minority stake in, and Piper Sandler analysts really liking the new funding round that T0 has been getting. Remind us what T0 does and why it's additive to your business.
So T0 is blockchain meets capital markets. It's a registered alternative trading system or an exchange that uses blockchain to settle trades more quickly. It's able to deal in cryptocurrencies and NFTs and security tokens and in normally traded NMS securities. This week, T0 announced that it received a significant minority investment from ICE, the parent company to the New York Stock Exchange, among others, and that the former chief strategy officer at ICE would become the new CEO at T0. We think this is a great omen for the future. As markets move to the 21st century, we think they're going to use blockchain. We think you're going to be able to trade, crypto and stock and NFTs all in one place. T0 is set up for that. To have ICE on the cap table and David Goon as the CEO, I just think bodes really, really well.
Well, how long will Overstock remain a key investor? What is your forward-looking plan in this respect?
So we had investments in 21 different blockchain companies. About a year ago, we formed a limited partnership, and Pelion Ventures, which is a venture capital firm, is the general partner of that fund, and it manages or oversees those 21 companies, including T0. Pelion was instrumental in closing this deal with David Goon and ICE. And so we're letting Pelion manage the exits and how those things work within that fund. But I see a long, strong future for T0.
Really fascinating being able to talk about the consumer and indeed the blockchain world with you all at the same time. Overstock CEO Jonathan Johnson, stay well in Salt Lake City. Meanwhile, coming up, crypto and Washington. Is the relationship between the industry and the Hill all that transparent? We're talking about, the swapping of talent from one to the other. That's the Bloomberg. And it is, of course, time now for our crypto report. And we want to dive into the relationship between crypto and Capitol Hill because, well, it seems as though it's getting more entangled. People increasingly moving between jobs in crypto and the government agencies that actually police that very industry. Well, there's therefore the potential for conflicts of interest. They seem to be growing. And could it potentially undermine efforts to really regulate the sector? There's been a deep dive done by my colleague in Bloomberg, Alison Versprell, and you join me now, Alison, to really talk about the data being crunched by the Tech Transparency Project. What do they make of the amount, the sheer scale of the revolving door between Capitol Hill and crypto?
So they characterize this as really an explosion in an activity in recent years. I talked to them a little bit about when they started analyzing this data, and they said, it was slow to start, and now we're seeing more and more of it. And I can tell you from personal experience, having covered this now for a couple of months, that on a near regular basis, I'm getting announcements about personnel shifts, individuals moving from jobs at the White House, regulators, into companies like Binance, Coinbase, or groups that lobby or represent them at law firms.
Is there a date? Is there a time? Is there a tipping point that started this move, do you think?
So, I talked to the director of the Tech Transparency Project, and she said they started looking at data as far back as 2012, but that there wasn't really a, growth in this until 2014, and that we've just started to see that increase since then. And I can also say that the infrastructure bill that was passed last year contained some provisions the crypto industry didn't like all that much,
yes.
And that's definitely spurred some activity, some moves, also on the lobbying side. So seeing a lot of that.
Going back to that time when it was that particular bill that took, an awful lot of people by surprise, that they suddenly were really doubling down on the crypto space. And we did a lot of, I remember number crunching then about the sheer lack of lobbying and the money that is spent by other industry groups vis-a-vis crypto, and it was just paled in comparison. They had hardly anyone up on Capitol Hill fighting for them. Is that now really changing, and what are the concerns being highlighted by this particular bit of reporting?
So that's definitely changing. We're seeing, super PACs that are designated just to crypto. We're seeing, companies like Coinbase and others beefing up their lobbying, hiring more outside firms. So in general, we're just seeing a lot more money flooding into Washington. And that was really one of the concerns that was raised in this report. They said, having this greater flow of former regulators into the industry or vice versa, could that potentially impact the regulatory process and prevent the rules from being as tight as they should be?
And for full disclosure, my husband is a senior manager over at Coinbase, so I want to highlight that fact. But I'm interested in whether this is unique or not. Is this kind of what happens? Crypto is so unique because of the sheer scale of money that was being made, and I can imagine that an awful lot of money wants to be put to work to ensure that the industry they all believe in survives. But what about a revolving door between Capitol Hill and other industry groups, other lobbying areas?
I will say this is one area where crypto is definitely not unique. We see that in all different types of sectors. We see it in banking, we see it in tax. I think pretty timely, actually, we saw a pair of lawmakers, including Senator Liz Warren, asking for an investigation into sort of the flow of officials from large accounting firms into the IRS and Treasury and back, and how that impacts tax rules. So definitely a common trend all across different sectors. I think the one difference is that this is now a growing trend in crypto, which is such a new industry. And it really reflects that it's gaining more maturity and it's, getting more influence in Washington.
Alison Versprell, thank you so much for bringing us the insights on that revolving door. We thank you. Meanwhile, coming up, improving companies' positive social impact and, of course, inclusion. We're going to be talking with Twilio about their very own report out today showing that aligning revenue and impact, what it actually looks like in practice, and how they're updating their progress against the company's anti-racism pledge. This is Bloomberg.
what it will take is not just simply putting simple bandages and putting in programs, so to speak. It's about fundamentally redesigning the culture that exists within tech.
The old way of doing things is no longer the way of the future. The data shows that individuals from historically excluded communities are having a different experience, but it all first starts with the data, and that will help us think about strategies and solutions.
We have to address some of the root problems. At the moment, all we do is play like diversity musical chairs, and at the end of the day, we have to expand the actual pool of that talent itself by addressing educational inequities and other systemic barriers.
Some of the DEI experts from Uber to Spotify to Snapchat talking about really tackling discrimination in the tech industry. And well, that's one of the key goals of my next guest too. Twilio is out with its own annual impact and DEI report just today, talking about how business leaders and corporations need to think about doing good overall. CEO Jeff Lawson, I'm pleased to say, is joining us now. And I mean, so focused are you on this that you're taking time out of your well-deserved break, so we appreciate that, Jeff. And I'm interested about really the findings. What business responsibility means to you at Twilio now?
Yeah, thank you, Carolyn. I mean, it's really interesting. When I think about the contract, the social contract between our society and companies, the idea is that companies make our society better. And that's why we allow things like a piece of paper filed in the state of Delaware or in Dublin can own property and enter into contracts and all sorts of interesting things. And historically, we've said, well, it makes society better because it increases production and increases jobs and things like that, and companies make profits. But I actually think now society is asking more from that contract. We at Twilio have this belief that our existence should make communities around us and society overall stronger because we exist. And that's a multifaceted aspect of this contract that I think goes well beyond what the last generation of business leaders thought, that it was really just about making a profit.
It's also a lot about the data, how you ensure that you are gaining true diversity, how indeed you are seeing that pay equality is coming about. How are you tracking the impact that you make from an environmental perspective, a social perspective, a governance perspective?
Well, obviously, we try to track our impact along all those aspects, but we do it not to have like the number to show. Now, we are transparent about the impact that we're having, but we actually use, like, when you think about DEI, a lot of companies think about, oh, this data, we have to put it out there to prove something to the world. What we think about it is the data is necessary, but you use the data to move, not prove. You use the data to impact your activities and to drive how you're building the company to make a company that is ever more inclusive and ever more diverse. And that's how we think about using data.
Okay, so can you give us an example? I mean, I know that you've been in particular helping certain non-for-profits, organizations sort of align themselves with you and with other businesses. Can you give us like exact data of how you're doing it?
I'll give you another example, right? In business, what do? We set goals and we put our mind to achieving them. So when the vaccine for COVID came out last year, we set a goal to help vaccinate 1 billion people worldwide. And we put to work our product, our technology. We put to work our people and their volunteer time and the resources, the funding from the company. And as a result of that, already just a year in, we have already helped to vaccinate 350 million people. And that is a huge number, but we've just started, so we're a third of the way to our goal of 1 billion. But we do that by partnering with organizations who are on the ground, like Gavi, who is out there trying to vaccinate people in poorer countries that don't have readily access to the vaccine. And so we donated $10 million to Gavi. We were the second largest corporation to donate to that cause. And so I'm very proud of what Twilio has done. And this is just another example of how we set goals and we use data to move to get outcomes that we want, as opposed to just to try and prove something.
Do you hope that it sort of disrupts from within? Are you leading by example in some way? And how are you seeing other companies embrace what you offer, use your own tools to do the same sort of thing?
The opposite of trying to have a monopoly on doing good, we actually want to open source any idea that we have and help other people to do good as well. One of the last pages of our impact report that we released today actually shows our lessons learned in this past year. And it talks about some of the things that, mistakes we've made and what we've now learned from it in hopes that other people can do that. Another example is we started a program called We Pledge 1%. It's a program for our employees to pledge 1% of their time, their income, or their Twilio equity to do good in the world for nonprofits. And we help them to execute that by giving them ideas, help them donate their equity if that's what they want to do. And we've open sourced this and invited any other company who wants to bring this program to their employees as well. And so far, we've got dozens of companies, including Atlassian and Zoom and many others, who have actually brought this program to their employees as well. And now we've got tens of thousands of employees at a variety of different companies, all participating by giving 1% of their resources to do good.
Interestingly, do you think that it sets you apart from a talent perspective? Are you getting that feedback that people are coming to Twilio because of this? Or is this just sort of an added benefit, quote unquote, if you know what I mean?
Well, we have made impact a really integral part of our business. At some companies, doing good is a cost center. Oh, we got to donate to this so we don't look bad in the press, right? At Twilio, that's not how we think about it at all. We think of it as a virtuous cycle. The more good we do in the world, the more that is going to engage our employees and build great awareness and high esteem for our company. That will attract more customers, that will attract more employees, that will then help us build a stronger company that then can allow us to do more in the world. And that is a nice virtuous cycle. And that's why Twilio.org at our company is not a cost center, it's actually a business unit. And it actually does business to get our product into the hands of nonprofits who could be using our product to do good at great discount. And then we partner with those organizations, make them successful, and that allows us to then do more good in the world. And I think that's a new model that I'm very proud of having really innovated on.
And just briefly, we've got about a minute left. When you are looking at 1 billion people vaccinated, is this very much on the emerging markets focus? Because I'm thinking of Eric Adams here in New York, potentially not needing people to be vaccinated to go out to restaurants and the like.
Well, think about it. A lot of this is in emerging countries where there isn't as easy access to vaccines. And we're very happy to be partnering with a number of organizations who are doing amazing work, like Save the Children's, another great organization who's helping to educate the world on the safety of these vaccines. But even here in the United States and other wealthier countries, you still see vaccine hesitancy. We still had a huge effort to mobilize and get even the U.S. population vaccinated, and we're still not done, obviously. And so I see this as an effort that truly spans the world.
Jeff Lawson, so great to speak with you. Thank you. Go back to your break now. Really appreciate the time, Twilio CEO. Meanwhile, that does it for this edition of Bloomberg Technology. Join us tomorrow. We're going to be joining John Wu, the president of Ava Labs, to talk about, earnings of crypto. This is Bloomberg.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour if you get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect. And this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special. And so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now. They've been testing it. And you take it up and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you spacecraft operator. Make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, If something happens in space, well, boy, you can sue the state that launched your spacecraft. You can sue the company that brought you there. You can sue the hotel. You can sue the individual. You can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. And it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan. And his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because
Instagram.
My Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah.
Yeah.
Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yep.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man.
Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything?
When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps, they've proliferated. The knowledge is accessible on the internet, right? I used to fight the geotags, and I would get really pissed off. I'd be like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and don't go in the valley. Yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke.
Whoa, okay.
But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky,
Look at it.
strip malls of the Central Valley.
We have made it, sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California, very, very large farming valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida and the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019?
Yeah, right? So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay, so. And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just drive. But basically what we're doing, besides this machine, this is our first machine, we call it Orchard Gus. mainly designed for your nut trees, as well as citrus and fruit. In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its US office is here in downtown San Francisco.
Hello?
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LEQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her.
Like,
or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. But a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LEQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LEQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LEQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and join Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousey things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97, and he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly the print was, I could see that quite clearly.
What about this?
I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence, robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
you're like the estimated 74% of adults in the US who use YouTube, this might be what your home screen looks like. An algorithmically curated look into what you like to watch. Maybe some tips on how to prepare a new meal, or your favorite vlogger's latest video. But if you're a parent who shares your phone with your children, it probably looks a little more like this. Kids content on YouTube is huge. Views for videos can reach into the billions. 5 of the top 10 videos in all of YouTube's history are either music videos or kids videos, with Baby Shark having more views than people on the planet.
Daddy Shark, Daddy Shark. Grandma Shark.
YouTube has created a revolution, not an evolution, in the way kids and families consume video content, and that extends then into how they view toys and play and all of the associated things that go with that.
Kids' YouTube, for the unaware, can be adorable. It can be boring. It can also just be flat out strange.
Here I am, how do you do?
But often it involves toys. And for toy makers who embraced the platform, it led to record success.
I think LOL Surprise unquestionably is the biggest phenomenon that has ever happened in the toy industry.
This is the story of how YouTube changed kids' toys.
Play patterns, the way children play, is timeless. But how we deliver on those play patterns through product and how we market that to children has changed quite a bit over the years. And I would say that the last 5 to 10 years really ranks right up there with the 1950s, when TV commercials directed to children was first launched by Mattel.
This is Nancy Zwiers. She led the Barbie brand during the 90s and spent 4 years as the chief marketing officer for Spin Master.
It used to be that there would be a few playthings that parents would bring into the home or that children would create themselves, like a stick and a ball becomes a plaything. And the industry was at a certain level of volume at that point. Mattel was very innovative and actually put the first product on TV and advertised it to children.
Let's play house.
This created a huge explosion in the toy industry that unfolded across decades.
The hit of the day when you're ready to play, everyone knows it's Slinky.
Here he comes, greatest toy you've ever seen, and his name is Mr. Machine. G.I. Joe, fighting man from head to toe, on the land, on the sea, in the air.
When you go back to the 1980s, what do you think of in terms of hit shows? You think of things like Masters of the Universe. You think of the original Transformers and Care Bears. The joke was they were 22-minute commercials.
Just close your eyes and care.
Let's make a TV show which is really promotion for our property or IP to help sell toys. There were a lot of those famous characters in which kids absolutely loved it. They were totally entertained, but there were huge toy lines behind them.
This is Jim Silver, a 37-year veteran of the toys industry. In 1999, he started a consumer toy review magazine called Toy Wishes, and now he's the CEO of an influencer talent management group, TTPM.
Regulations changed through the years, and also parents became aware that they were purely commercials. And you saw a lot of the new channels, the Disney Channel and Nickelodeon, they realized that wouldn't work anymore. And to them, entertainment came before licensing.
What happened over time was that toys started to become designed for a 30-second commercial.
Closed, it's a mild-mannered toolbox. Open, it's a Micro Machine USA. Cruise your mini Micro Machine vehicles, planes, and boats to the police station, the marina, the mini motorcycle repair shop, the gas station, the construction office, work, the real working drawbridge, highway, passenger ramp, and garage doors.
So if you couldn't explain it in a 30-second commercial, cost reduce it out of the product and just stick with what you could say. And features of toys, magical features using electronics, lights and sounds and mechanical movements, that magic, like they don't know how it happens, that became more and more important.
The sound of power is heard.
It's Firebolt Batman! See ya, Batman.
Batman's turbo-powered Batmobile flies into high gear.
Since 2000, with cable channels dedicated to kids, Disney Channel, Nickelodeon, Cartoon Network, there became the opportunity to reach kids in mass numbers every day of the week. And so the toy industry has continued to grow.
The toy industry, for the most part, was a pretty solid business, just, growing a couple percent a year here and there. There'd be big years here and there when there was maybe a hit movie, like a Star Wars movie come out, drive a lot of toy sales.
From 2014 to 2019, the global toy industry would grow by 15%. At about the same time, those major cable networks of Nickelodeon, Disney Channel, and Cartoon Network would lose half their total audience. 2017 also saw the bankruptcy of Toys R Us, as both parents and kids discovered and bought more toys online.
If you think about kids, they're usually the first adopters of a new medium. Kids weren't watching things like Nickelodeon as much as they used to. They were watching things on YouTube.
YouTube started in early 2005, and this was like, the very early Web 2.0, this beginning of sort of like what at the time was known as user-generated content. Like web blogging was really big. MySpace was the biggest thing on the internet back then. There was an early video of a Brazilian soccer legend doing stunt tricks that just exploded on the site. One of the first viral videos, Lazy Sunday, if you remember that SNL short.
Ow, Charlie! Charlie bit me.
You remember those early viral hits?
YouTube in the early days was definitely comedy and music. It was a place of experimentation. I was the chief audience officer at Maker Studios. I oversaw essentially the creator partnerships all over the world.
Maker Studios was one of the largest multi-channel networks on YouTube and had partnered with some of the biggest YouTube channels at the time before being sold to Disney in 2014. Chris is now the CEO of Pocket Watch, which represents some of the largest kids stars on YouTube, including Ryan's World and Love Diana, who can amass over a couple billion views every month.
The truth is, one of the very biggest and earliest videos on all of YouTube was by a creator and star named iJustine, where she unboxed her first mobile phone bill for her brand new iPhone, and it came in a box. And this ultimately morphed into many different formats associated with unboxing, and tech was actually really big.
And those became fairly successful pretty early on the platform. And you saw them expand from tech products to beauty products. And then around 2012 and 2013, we saw this explosion into toys.
So here's the Furby inside right here.
We used to call them hands channels, okay? And a hands channel was literally a top-down view of someone's hands unboxing typically a toy. And they'd unbox it, they'd show each component.
We just got Uncle Scrooge.
I would speak to many of those creators. We signed many of those creators at Maker Studios to be our partners. And it was fascinating in that it was this whole new genre and this whole new format. And that corresponded with a rise of kids and family viewership on YouTube that was stark, that was hard to miss. And you would see it in the data. And we had access to a lot of data at Maker Studios around YouTube.
Let's see what's inside. First up, we have the Stormtrooper Pig.
You saw the launch of EvanTube, who I consider the first child, so to speak, unboxing star. And they would open toys and kids were just mesmerized by it. They loved watching it. And next thing you know, you had literally 50 unboxings. They were unboxing just about every toy. It was, and people were just really excited. You open the toy and you'd see a toy pop out and kids just got excited seeing it piece by piece.
Yeah, he's in a bathrobe he's eating a lobster.
The early days of these unboxing videos, the videos were, from adults' perspective, just terrible. I mean, they were 10 minutes long, they were boring, there was a shaky camera, there was absolutely no production value. And if you think about these executives, they're trying to figure out how to reach this new audience, and they're brought these videos and say, well, look at this video, it has 200,000 views on it, and it's terrible.
When I first heard of it, I thought it was the weirdest thing. It just seemed kind of bizarre. Who would want to watch someone opening a toy, taking it out of the box? But then when I started thinking about this idea of exploration and discovery as a core play pattern, the most fundamental play pattern there is, it started to make sense. And I think that I have to say that the company that really jumped on that in the most concerted way was MGA with their launch of LOL.
LOL Surprise had three sort of key elements. Doll play, which is basically the most popular play pattern there is. Collectible, so within each LOL Surprise you'd get a little sheet that showed you all the other dolls you could collect. And then the surprise factor, you don't know which doll you were getting. It was a blind pack, as they call it. And LOL was made by this company called MGA. Back then, 2016, they were a small player in the toy industry, founded by this guy named Isaac Larian. He's the CEO and founder.
I have 3 adult kids, and they were making fun of me that, oh, you're old, you don't know anything about what's happening in today's thing. And I said, like what? And they said, for example, there is, do you know about this iPhone unboxing videos that get millions and millions of views? So I thought they're pulling my leg, the children do, to make fun of their parents. And then I did go and look one night, and I was frankly shocked and flabbergasted that why would anybody buy an iPhone, take it home, and open the box and show it on the camera, and everybody will go and watch it. So I typed toy unboxing, and my God, I saw so many different videos and kids and adults buying toys like an Apple and unboxing it and video and posting it. So that gave me an idea that why not come up with the ultimate, and that's the first LOL Surprise.
All right. Oh yes, we've got a gold ball.
LOL changed the way you open with toys, and everybody saw that. And the packaging became part of the play, which became part of the entertainment. So normally, if you get a package that you just open a package, you take the toy out, that's not exciting. You open up LOL, you peel it away, you open up inside, you have 7 surprises.
And it took off like wildfire and quickly became, the top toy in the country.
By December of 2018, 8 of the top 10 toys sold were all LOL Surprise brand. And according to MGA, from 2016 to 2020, LOL would generate over $10 billion in retail sales worldwide.
LOL is bigger than Star Wars, it's bigger than Marvel, it's bigger than Barbie. These brands with huge advertising budgets are known basically by everyone. You don't have to, figure out what Marvel or Star Wars is. And LOL eclipsed them all.
In the toy world, blind bag or blind box toys have been growing in popularity. The most famous example in recent years is Pokemon cards, where you open packs in hopes of getting a Charizard, but more often wind up with something common like Gligar here. 2 years before the launch of LOL, in 2014, the Australian toy company Moose Toys launched a blind bag collectible called Shopkins. And in 2016, Spin Master would launch a more expensive blind box toy it called Hatchimals.
But the thing that sets LOL Surprise apart is that it mainly focused on YouTube. And not putting ads on YouTube, but working with creators and influencers to get their products in the hands of these kids doing the unboxing videos. For MGA, actually, the move towards YouTube was kind of a bit lucky and almost out of necessity.
In late 2015, Nickelodeon parent company Viacom would sue MGA for breach of contract after it failed to pay $3.5 million for the production of a TV series based on their La La Loopsy dolls.
They tried to flex their muscle, and they said, well, if you don't agree to our way of seeing things in the conflict that we had, a separate conflict, we are going to stop your advertisement of toys.
At the time, Nickelodeon was the #1 ranked children's network. And not to be able to advertise on Nickelodeon could have been a death knell. But MGA, necessity is the mother of invention, that caused them to lean into digital advertising far more than any big brand had ever done before, because they had to find a new way to reach kids.
The court would ultimately rule in favor of Viacom, both in LA federal court and on appeal in the Ninth Circuit. Larian blamed the court defeat on what he contends was judicial bias. Nickelodeon parent company Viacom didn't respond to a request for comment.
So that by itself forced us to go and say, okay, the hell with Nickelodeon. Let's find another way to reach to children. And that's how we went and doubled up on YouTube especially, and the rest, as they say, is history.
So early on, MGA partnered with YouTube creators with huge audiences like Cookie Swirl C.
Good morning, chocolatey chippy cookies. We are going to be spending the morning with this LOL surprise baby Fancy.
They took it another step further. They actually helped kids learn how to do their own unboxing videos. They gave them, support and learning and tools. And so all these kids got to be kind of a little mini influencer themselves as they were unboxing their LOL products.
So just to give you a flavor of how popular these videos are, go onto YouTube and search LOL Surprise. And you'll see videos with 1 million views, 10 million, 25 million, 50 million, and even 100 million. There's lots of them. And kids are watching these videos, and they're probably watching them over and over again.
The old way toy manufacturers would do things is they buy TV, which was about 90% of their ad spend, and then traditional PR, get on the big morning shows. It's an entirely different formula. It's much harder for toy companies right now because the formula is so complicated. You have to really take a deep dive into each platform. Am I promoting on Twitter? Am I promoting on Instagram? Am I promoting on TikTok? What am I doing on YouTube? You have to look at every possible social channel.
By 2017, big toy brands like Mattel had shifted nearly 50% of their marketing budget to social platform advertising. Brands would help seed videos of their toys. And if they were lucky, that could kick off a wave of creators making their own content around the product. In 2020 alone, Tubular Labs estimated that LOL-related content had amassed 5.1 billion views.
This idea of imitation. So when you see kids playing with product, it kind of excites the same neurons in your brain that happen when you do it yourself. The more we could show children having this experience, the more kids felt what it would be like to have it and then wanted to experience it themselves.
One of the criticisms of this whole influencer movement among kids is that kids are young. They don't understand what's necessarily an advertisement versus real content. And that's a big criticism of this industry, is that a lot of kids are getting on YouTube at young ages, not being supervised by their parents, and just watching these videos. And they don't realize that maybe that influencer is getting paid by the brand to do that video, or there's some other compensation. And that, blurs the lines for kids as they're sort of developing and figuring out how to consume media.
Questionable advertising concerns aside, kids' YouTube creators would take off. Channels like Ryan's World would grow to almost 30 million subscribers, and a whole industry formed around them.
When we first started working with influencers, they were very happy to work for free product. You give them the product and they do something for you. Then gradually influencers got smarter and started charging for their services as they started building a following. Now, because it is such a big business, the dollars can be significant investing in big influencers. When Spin Master launched one of its new TV series and associated product, we made it a point to buy an advertising package with Ryan's World to ensure that we could get really quick, big reach right away.
This is an advertisement for Spin Master.
So from these unboxing videos, the content's gotten a lot more sophisticated. They're creating narratives around the toys with voices and meta universes, if you will. And it's really engaging content, even more so than the original unboxing videos for these kids. And the content's coming out maybe once a week or even daily. So if you think about it, what they've done is they've created basically like a TV show around a toy. It's not unlike what we saw back in the 80s, which was criticized back then, by the way, when you had toys like G.I. Joe turn into an animated series, or Masters of the Universe, or Transformers. So we've kind of seen this full circle now, right? So back to where we were, content and basically mini television shows created around toys on YouTube.
Kids' content on YouTube is likely to face increased regulation in the coming years. In 2019, the company would agree on a $170 million settlement with the FTC for serving ads based on personal data to kids on YouTube. YouTube would put more emphasis behind its made-for-kids platform, YouTube Kids, and each video uploaded to YouTube must be flagged as either made for kids or not. In a statement outlining changes to the site, YouTube would say that responsibility is our #1 priority at YouTube, and this includes protecting kids and their privacy. Still, the site is far less regulated than traditional television.
I do think parents have a better understanding of YouTube now and the new genres and formats there that they didn't prior. And they now notice things like their kid isn't watching a toy unboxing that's a commercial for a toy. Their kid is watching other kids play with toys in an imaginative way, which inspires them to go play with things in the real world in an imaginative way.
In just a few short years, YouTube had caused a transfer of power from toy and network executives to 9-year-olds and their families. The Kaji family may have started out as toy reviewers, but now Ryan has launched his own line of toys, a cartoon series. He was even a blimp in the 2020 Macy's Thanksgiving Parade.
You or I might think about Spider-Man or Snoopy, but today's kids see that blimp of Ryan and they relate to him. He's the character they want to grow up with. He's the character that they want to engage with. And as we go forward, these influencers are becoming more and more like big, giant global brands. And that has profound effects for entertainment going forward.
Airbnb is huge today. On any given night, you could have as many as 2 million people staying in an Airbnb all around the world.
You know, our mission is that everyone can belong anywhere.
We're talking, 300 million stays on any average year, and there's tyranny in numbers. The vast majority of Airbnb stays don't result in a safety incident, but sometimes things go wrong. And for Airbnb, we're talking thousands of safety incidents that occur every year that the company has to handle and has to respond to. I'm talking situations like kidnappings, hostage cases. We're talking murder, we're talking rape, we're talking, the worst violent crimes that occur in our society happen inside Airbnbs. Airbnb never wants these kinds of cases to end up in the headlines. That's really bad for their brand, their reputation, and their public image, particularly because this is a business that's based on strangers trusting one another. So when crimes like this occur, that kind of threatens their entire business model. I'm Olivia Carville. I'm a reporter on Bloomberg's technology team, and I've been covering online travel companies like Airbnb for the last 2 years. Airbnb is a startup that's based in Silicon Valley, and like many of the sharing economy startups, it managed to grow so big so fast by essentially skirting regulations. It was based on that premise of move fast and break things, and it wanted to work against regulations in order to grow as big as possible and win the popular vote, because it became so popular so fast that cities could no longer control it.
On a peak night this past August, we had 1 million people from around the world coming from 180 countries in a single night staying in an Airbnb home.
The vast majority of Airbnb stays, we're talking, 2 million people staying in an Airbnb on any given night, don't result in a safety incident. But sometimes things go wrong. And for the company, it was dealing with these cases was a really challenging, difficult, complicated area. You had hosts and guests, and sometimes they disagreed on what happened. You had regulatory issues in some of their biggest cities. Then you also had the growth of the platform and the fact that if you're going to try and prevent some of these incidents, it could cut into revenue and cut into the number of listings that you have. So for Airbnb, it was about trying to figure out the best way to handle these crises in a way that's going to not only protect the individual in crisis, but also protect the company's public image, its brand, its reputation, which is essentially what its business is based upon. As Airbnb grew, way too big for them to be able to take all these calls alone, they developed a team of 100 highly specialized agents that handle the worst of the worst cases. Over the course of my reporting, I've talked to almost 50 former employees at Airbnb, and 7 or 8 of those work directly on this elite unit. These safety agents, many of them come from military backgrounds or trauma backgrounds. They're trained to handle traumatic situations and to try and, help people who are going through what may be, the worst day in their lives. For these safety agents, a lot of them understood that they had a dual role. First and foremost, they wanted to protect the user in crisis. But they also knew they had a responsibility to protect the company's brand and public image.
I mean, everything about housing in New York is a total mess, and it's always chaotic. It's not too surprising that Airbnb's biggest battle has broken out here.
2015 was a really challenging year for Airbnb.
Airbnb's listings between 2010 and 2014 were essentially illegal hotels.
The company was 7 years old now. It had grown huge. It was now a household name. But by growing that big that fast, they also came up against, a pushback in regulations.
Now, Airbnb is under attack in a lot of major cities.
Yeah, so what are they saying about this? I mean,
they are,
look,
they can't give up on New York because New York's too important for every kind of reason.
They knew that they couldn't lose the battle in New York because it was one of their biggest markets, and also it could result in a domino effect. If other cities around America saw New York City either backing down on regulations or enforcing stricter regulations, that could in turn be rolled out right across the country.
I think it's going to be awkward when they have to, put in their prospectus their risk factors, when they have to say, well, one risk is that the whole thing might be somewhat illegal in our biggest market.
And in December of that year, a young woman from Australia flew into New York and stayed in an Airbnb with a group of her friends. They picked up a key from the local corner bodega without even needing identification. The police report said this 29-year-old woman left her friends at a midtown bar and returned to the Airbnb on her own. She thought that she was alone, but she wasn't. There was a man inside the apartment, hiding in the shadows, with a kitchen knife. He grabbed her, dragged her into a room, and raped her. He later fled. About an hour after this attack, he came back, and police were in the apartment at the time. They opened his backpack and found 3 items of interest: the kitchen knife, one of the woman's earrings, and a set of keys to the Airbnb. This case was a really complicated one for Airbnb, partly because it occurred in New York City, where they were fighting this really tough battle with city officials over regulations, and partly because the alleged rapist had the keys and he was inside the apartment. That meant that Airbnb needed to do what it could to protect itself. They wanted to find out, you know, how did he get the keys? That was a really big question for them. They launched an investigation to find that out. But before they did anything like that, before they thought to kind of protect their own reputation here, they really focused on doing what they could to help this young woman. They paid for her to move to a hotel. They paid for her mother to fly in from Australia. They paid for both of them to fly home. They offered to cover any health or counseling costs that she might need later. But inside the company, internally, they also launched an investigation. They wanted to know, how did the alleged rapist get the keys? How did he get inside that Airbnb? And when they found out that the keys had been left at the corner bodega, that then created, you know, a problem of liability for Airbnb. They didn't have a policy around key exchange. They didn't tell their hosts how they did or didn't have to hand keys over to guests as they were arriving. So for Airbnb, they also, you know, they wanted to know what was going to be said in court. They wanted to know if any media were going to pick up on this story. And they wanted to know what their legal liability potentially could be. A week later, the alleged rapist was indicted in the Supreme Court in New York, and Airbnb sent a staff member to find out if the company was going to be mentioned in any of the court records. And it wasn't. It wasn't mentioned in the police report, it wasn't mentioned by prosecutors. There's no mention of Airbnb really in any public record. This case has never been reported until now. And, you know, for Airbnb, that was kind of lucky. This case never landed in the media. And, you know, 18 months later, when this woman's lawyer reached out to the company, they signed a settlement for $7 million. And part of that settlement, there's a clause that says she cannot assert or imply responsibility on the part of the company. We've spoken to legal experts who indicate that what this really did is gag the woman from saying, "I blame Airbnb." Airbnb is one of the few companies in the world that has this like online, offline kind of hybrid situation where you have users who meet online and then actually meet in the offline world and stay under the same roof. And that means that the company, at the end of the day, really has to take more responsibility than other social media platforms might do. With Airbnb's terms of service, that really means that whenever there's a dispute between hosts and guests and the company, this is all handled behind closed doors in arbitration. Most of these cases don't even make it to the courtroom, and when they do, the company will settle them so it doesn't go on through the courts. And what that means is that there hasn't really been a legal precedent that's set to determine what Airbnb's liability is here. You know, is it really responsible for when things go wrong inside its listings? What I learned over the course of my reporting is that this is anything but simple. This is a complicated, nuanced area. There are difficult trade-offs here. The company also has to have hard, tough conversations about policy. Airbnb's business model is based on strangers trusting one another. We often hear from the founders and the chief executive himself saying trust is their #1 priority. I've actually heard Brian Chesky, the chief executive of Airbnb, talking about how he didn't build a website or a platform that allows people to stay in each other's homes. What he built was a community that trusts one another. And when that premise is undercut, Airbnb's entire business model is under threat.
Earth view. Sounds far-fetched at the moment, doesn't it? But you know, we may be seeing ads like this in the not-too-distant future.
Living away from Earth has always captured our imagination. As well as providing the basics for survival, these ideas are a symbol of humankind's unique creativity and ambition.
This advanced base, or space station, will be headquarters for the final ascent to the moon.
Today, the idea of multiple outposts where we can live and work in space has never seemed closer.
We're gonna fly. It's about making our lives the best we can make it. It's about, as a species, having a path for our future.
And the mission to create these habitats is well underway as private companies get ready to take that next giant leap. The International Space Station. It's the only space habitat we have.
One of the first places they take you in the ISS is the cupola. So you can finally look at the Earth in all its beauty. And I don't care who you are, it's always stunning, it's shocking, it's amazing, because that's the view you've been waiting for your entire life.
It passes over 90% of the world's population without most of us ever realizing. And at an estimated cost of $150 billion, it's the most expensive object we've ever built.
You think about like the Sistine Chapel, the pyramids, and the Burj Khalifa, or take your pick. I mean, it far outstrips those. It's the one and only non-terrestrial human outpost. We've had a constant human footprint in orbit for almost 20 years because of the International Space Station.
The collaboration between 15 countries started construction in 1998 and was pieced together in space over the course of a decade. Since 2000, it's been a permanently crewed research laboratory, a space habitat that's allowed humankind to live, manufacture, and explore beyond Earth.
The overarching achievement of the space station has been education. It has educated us about how to do research, it's educated us about how to live, it's educated us about the harshness of the environment that it is in, and it's about learning, I think.
People say, what was one of your favorite parts about being up there? Hands down, floating everywhere I went. But your first impressions for ISS certainly is, it's how big it is.
The ISS is the size of an American football field, with most of that footprint taken up by 8 solar arrays. These provide enough energy to power 40 homes. The station has an American side and a Russian side, as well as contributions from other nations like Canada, Japan, and the European Union. Astronauts on board can pass freely between these sections. Their living and working areas are made up of modules, each 4.2 meters in diameter, and in total they have the same volume as the Boeing 747. The 3 main labs, Destiny, Hope and Columbus, are conducting up to 600 ongoing experiments at any one time. And while it's been a collaboration between governments to build and maintain the ISS, its next chapter will rely more on private enterprise.
Today is a very remarkable day. NASA is opening the International Space Station to commercial opportunities and marketing these opportunities as we've never done before.
Managing and maintaining the ISS costs $3.4 billion a year. That's over half NASA's space operations budget. Aging hardware and space debris will only add to these costs, which is why NASA is now hoping to pass some responsibility for the station over to commercial companies.
We would like to see a robust commercial marketplace in low Earth orbit where space stations exist outside of NASA. The goal being that NASA could be a customer, and we want to have numerous providers that are competing against each other on cost and innovation.
With federal funding proposed to stop in 2025, opening the station to private enterprise would free up resources for the space agency's ambitions to return to the Moon and journey to Mars.
Transferring to a more commercial model is allowing industry to take over many of those areas that NASA has traditionally been responsible for, like the design and operations and maintenance of space systems. But the most exciting part, I think, is new opportunities. The iPhones would have never come from the government, for instance. The base technology came from the government. But the way it's used, the way it interacts with consumers, governments aren't really built for that. So I think that'll be exciting to see how private industry uses the same technology or the same systems, but then use them in a different way.
Every NASA achievement has been the collaborative achievement of NASA and industry. What's going on right now that's a little bit different is NASA is turning to companies not to direct them what to do, but it's turning to companies to build relationships with them because those companies are attracting investment from non-space sources and are bringing a different kind of innovation to the table.
In the shadow of NASA's sprawling Johnson Space Center, the headquarters of startup Axiom Space might seem a little modest, but their goal is big: to build the first commercial space station. Led by a former ISS program manager, the team has been involved in every mission to the station since its inception.
We know it has to be much lower cost to operate on orbit than ISS is today, so this is key to continuing the heritage of ISS, is to start there so we can evolve everybody to the next platform. I liken this to the internet. So the internet was created and we got very excited, and any kid with a good idea and just the basic programming skills could go build a program to do something. We have huge companies that grew out of that, and still today there's new ideas, new things being built. The thing about a microgravity environment is it's limitless. It's like the data we have access to on the internet. It is limitless. And it is not immediately obvious to us all the benefits that that's going to entail, but over time it will become very, very obvious.
By 2024, Axiom plans to send a central node to attach to the ISS. That will make up the core of their new station. This will be followed by crew quarters for 16 people and research and manufacturing modules. When the ISS is retired, this will break away, and additional modules with a lifespan of 30 years will be added and swapped out as they age using a robotic arm. And they're hoping to do all of this for 1/50th the cost of the ISS.
I mean, when you talk about our vision, it sounds really simple. It really is about driving the thought process and the cost down so that anybody that wants to take advantage of our place in orbit and a microgravity environment can do so. And that's really it.
Okay, Ellen, I need to go towards my feet.
The International Space Station is a fantastic vehicle, but one of the big things is they have quite a few major components outside, which means you have to do an EVA, a spacewalk, to go fix it. A spacewalk on a good day is 100 hours of crew time to get ready and actually go do the spacewalk. So we're able to take advantage of the reduced size of components. And so our design is going to have all of the components are going to be in the pressurized environment. So we know what the basics are, you know, water, food, clothing, life support, and we know how to handle those. But now the next step is how do we make it more intuitive? And we want to now take advantage of the technologies and the capabilities we have today to build more luxury into the experience. The objective is to make the environment the background for all the users. You're every day doing whatever you want to do on orbit, research, manufacturing, looking out the window, whatever you're there to do, we want you to be able to do that and not even think about the environment. And it's because of our experience on ISS and what the team brings to Axiom Space, we're able to build that environment. You won't worry about that.
3,
1, release, release, release. Fire, fire.
Like Virgin Galactic and Blue Origin, Axiom is hoping to attract space tourists with tickets starting at $55 million for a 10-day mission. But that's just one part of the commercial space station market that they think could be worth $37 billion over the next decade.
Our first commercial customers are countries who have astronauts in space and want to expand their activity in space, and countries who do not yet have a human spaceflight program who want to send people up. And we've now got both research and manufacturing companies who want to do work with us while we're at the International Space Station and on our platform after it separates from ISS. Human spaceflight is particularly exciting because it's that slice of space that is really nascent. It hasn't undergone the crowding that satellites have had. It hasn't already had that explosive growth. It's really ready for that now. The first thing I'm really looking forward to seeing happen is the face of our first astronauts on orbit looking back down on us and knowing that we had a hand in sending that person to space. And ultimately the separation of ISS when it's ready to be retired and deorbited, and then we continue in space independently. For me, that is a stepping off moment for humanity. It's almost like when Neil Armstrong put that first boot on the moon. This will be the first time that we've gone from a platform of learning how to live in space to building our permanent home in space.
Other private companies also want to use the ISS as a starting point for their own ventures. Bigelow Aerospace already has one of its inflatable structures attached to the station, and others, including Sierra Nevada and NanoRacks, have put forward proposals.
Space habitats are expensive. I think it's a false dichotomy to say, okay, we're done with the International Space Station, let's move on to commercial platforms. What I think is much more likely and realistic, and what NASA is certainly driving toward, is an incremental transition where commercial platforms attach to the space station or work collaboratively with the space station. The next chapter cannot occur without the active engagement of companies. That said, that active engagement might not be as customers, might not be as drivers, it might be in service of government mission objectives.
We will return American astronauts to the moon, not only to leave behind footprints and flags, but to build the foundation we need to send Americans to Mars and beyond.
This proposed mission, along with SpaceX's own ambition to reach a red planet, has opened up a longer-term market, and some companies are already thinking beyond orbiting habitats like space stations to actually building on the surface of other planets.
I was working in a firm designing skyscrapers, and I saw Elon, and he landed his Falcon X rocket in the middle of the ocean, and that for me was a trigger. I thought, wow, this could actually happen, and it's always been my dream to put a building on the moon or Mars. And if he's going at the pace he's going, it could definitely happen within my lifetime, and I want to be the one to build it.
In this warehouse, alongside startups from across the US, architecture firm AI Space Factory are refining the production of Marsha, a 4-story structure they created for a NASA competition to design the next generation of space habitats on Mars.
When we started designing our Mars habitat, Marsha, I think we looked at everything that had been done already and kind of tossed that aside. But what we were given was a set of guidelines from NASA. They think the best way to build a habitat on Mars or the moon is to use what they call in situ resource utilization. So use the materials that are there. If you've seen sci-fi movies, you might see like glass and steel domes on distant planets, but the reality is to ship that kind of material to the moon or Mars would be so exorbitantly expensive you would never be able to build in the first place. So the idea is to send a 3D printing robot which can then harvest the materials you find on a site and build with that.
The reusable print material is a mix of biopolymer made from recycled plastic or plants like corn and sugarcane, and basalt, a rock found on Mars and Earth.
It's the rock that gives us its incredible strength. We've tested this material. It's 3 times as strong as concrete in compression, and it actually has what we call a tensile capacity. It can prevent itself from being pulled apart, which is something concrete's not very good at. You need to think at all times, how do you optimize the amount of material that you use? And that's also why this thing is shaped like an egg. And if you think of an egg, it's a very structurally optimized form. It's very, very thin, but it provides the strength that the egg needs. And that's why this is shaped the way that it is.
The egg shape, as well as the nested shell structure, also accommodates for extreme differences in pressure and temperature on the surface of Mars. But more research still needs to be done to find out how print materials could be gathered and how 3D printing would work in a unique environment of space.
You're dealing with a completely different set of physics and environments, which is very harsh. The cold, the low gravity, we have to perfect this technology on Earth, and then we go prove it out on the Moon, and then finally onto Mars.
The first customers could include NASA and companies like SpaceX, who would lease out these structures for individual missions. But before that, AI Space Factory hoped their technology could be monetized as well as transformational here on Earth.
The challenges of building on Mars forced us to kind of make this jump in construction technology, which we can now apply on Earth, to build more sustainably. So rather than building with steel and concrete, which are these manufactured, very energy-intensive materials, to go to a site, have a solar-powered array that would then allow our 3D printer to print in the most sustainable way possible. And we never would have found these ways if it wasn't for the challenge of building in space.
3, 2, 1, ignition and liftoff of the Falcon 9 to the space station on the first commercial launch from Kennedy Space Center's historic Pad 39A.
Humans have now been consistently living and working in space for more than 15 years. And if we want to keep that up, what do habitats need to look like? And frankly, they can be large or they can be small, but the future of space habitats really, to me, comes down to the ability to persistently maintain human presence. Whether that's a few people or many people, that seems to be the dividing line between where we were before and where we want to be in the future.
We have to learn how to benefit from what we do on orbit and bring those natural benefits back home so we help ourselves out on the ground while we also learn to live somewhere else. And it really, at the very deepest level, is about survival of our species. So I get pretty excited when I spend a few moments thinking about what we're off to go do, because this really is the first step to learning to live off the planet.
That first step is just the start of our journey to create a lasting legacy in space. While commercial companies may be stepping in to imagine what these new space habitats look like, it's what's happening inside of them that may unlock the future of space industrialization. On the next episode of Giant Leap, we'll visit the private companies who are looking to build their business around manufacturing in space. Using the unique properties of microgravity, they plan to create new materials with extraordinary qualities that can't be replicated on Earth, including new manufacturing techniques that could change how we build large structures in space and even unlock the ability to 3D print full human organs. But before low Earth orbit can become a new industrial centre, we're going to need to take another giant leap.
This is how it used to work. A real estate agent would lock in the client, they'd stage the place, hold an open house every single weekend, and hope that the right buyer walks through that door.
10 years ago, you could probably go look at a house and circle back 2 to 3 weeks later and still have an opportunity to make a bid. The first time I received a lead through Instagram, my mind was blown. If you're seeing something in a neighborhood that is established, you have 2 to 3 days after the open house in this market to make an offer.
Our world has shifted so much. Folks are getting comfortable doing business either through social media or 100% virtual.
Social media, like everything else it touches, has turned the real estate business upside down. You've heard this trope before. Millennials aren't buying and owning as much as their parents' generation, be it a car, a diamond, or a home. But the lack of ownership is not always by choice. In 2018, a survey found that 89% of millennial Americans want to buy a home. They just can't afford it. As of 2019, millennials of all stripes owned only 5% of U.S. housing, compared with 15% for Gen Xers.
Millennials haven't been able to make these big ticket purchases the same way as their predecessors did. Now, this is down to the financial crisis. We have rising student loan debt and a higher cost of living. Now, millennials are getting older, they're earning more money and saving more. So now is about the time where a lot of them are going out and making those purchases.
And now, having been stuck at home for over a year, the same generation that embraced Ubers and Airbnbs wants something to call their own.
I got married and I have a child, so, looking for more space and thought about the conventional route of young and single and live in the city and then move out to the suburbs when you have a kid and a wife. I've seen a whole bunch of my friends just move on down to the West Palm Beach, Miami area, Austin, Texas. So they are certainly moving out of the city, but space was top of mind for them moving out.
We lived in Williamsburg for about 16 plus years, and week 2 in the pandemic, we just realized we needed more. So we started looking for a house right away. We now live in Goshen, New York, which is about an hour and a half from New York City.
Instagram accounts like Circa Houses and Cheap Old Houses offer a glimpse into the perfect suburban life, often at a price point not too dissimilar to what adults pay for rent in major cities. By the end of 2020, New Yorkers who didn't flee paid an average of $2,700 a month for an apartment, even as rent prices plummeted during the pandemic.
Millennials make a large percentage of spending right now, and that makes them a valuable consumer for brands. That means they're being courted by everyone out there to spend with them. They grew up online. They're comfortable with pretty much anything that you can do there. And that's buying things, selling things, Craigslist, eBay, all that. Making a $100 purchase on Craigslist or a $1,000 purchase on eBay, it's not that much of a leap to go even further if you're buying a fancy piece of jewelry or a house for $1 million.
The uptick in home demand fueled by the pandemic, combined with record low interest rates, has made home buying extremely competitive over the last year. So much so that some millennials look to social media to shop and actually buy their first house sight unseen.
I saw sort of something on my Instagram feed and, clicked, and we ended up seeing this house. Houses weren't really being shown at that time because we were in full lockdown. We became really interested. 1 YouTube video, 20 Zillow photos, that is it.
The red-hot housing market spells opportunities for developers targeting this demographic, getting eyeballs strictly through social media.
People are not looking in the back section of the Times anymore for real estate listings. Our demographic is between late 20s to mid 40s, and that demographic is spending a lot of time on social media, and they're doing a lot of shopping via Instagram and other social media platforms.
This is Joshua Gelb and Pele Hamburger. During the pandemic, the 2 New York City-based developers started Neville House, a new construction project 2 hours north of the city. Unlike most traditional real estate listings, the pair bypassed the use of a broker and advertised their homes directly on Instagram. No fees, no commissions.
You used to have to hire a broker, work with them, they would do showings on site. Now you basically put your renderings on Instagram, and within an hour you have 15, 20 replies saying, can I come see it directly with you, and let's see it tomorrow, and it's just completely changed the game.
Most people have that image in their head of the quintessential upstate modern cabin set in the woods. We've definitely tried to tap into that and create something that's attainable for these people. Say, you can have that. You can be swiping through Instagram and that can be your home too.
There's been quite a proliferation of these direct-to-consumer brands. There's just tons of them out there. It's not that hard to start up a website that sells things and get things manufactured for that e-commerce platform. So like Allbirds with shoes, Casper with mattresses, or Warby Parker with glasses. All of that means a lot more opportunity for brands in the online shopping space. So it's natural that real estate would want to get involved as well with these big-ticket items.
10 years ago, the broker would drive the search. Now, I think that my clients text me listings, they have alerts, they find things quicker than we do sometimes because we're out and about. I'd say that the buyer is much more involved these days.
Social selling is creating brand new ways to shop. So let's look at vintage clothing, for example. There are sellers on Instagram finding successful ways to sell one-of-a-kind items. It's that fleeting nature, the ephemeral nature of social media. You post the item online and whoever's first gets that one-of-a-kind item. Now, real estate has similar scarcity to it. There's one place to buy. It's one home, one apartment, one thing. It's one of a kind.
But the rise in social media real estate isn't just about the instant gratification. Researcher Andre Perry, who studies economic inclusion at the Brookings Institute, says social media has evolved from the days of online hangout spaces and mood boards to a powerful change agent.
Social media is a primary source to get news and information, but it's not just about social media, it's about the movement that we're in. The racial justice uprising really gave people a sense of worth and empowerment. And so people not only are getting information about what protects people in the long run from economic shocks, things like wealth.
In his research, Andre found that not only are more millennials buying homes during the pandemic, the rate of home ownership among Black millennials are at historic highs.
The fastest way to accumulate wealth in this country traditionally has been through home ownership. Millennials in particular are saying, hey, I want protection. I want to live longer. I want my education to go further. Let me acquire wealth. And the fastest way to do that is through home ownership. When the pandemic hit, many of the amenities or the comforts that came along with those living conditions were gone. Folks couldn't go to bars and fancy shops. And so you saw, instead of people going out and buying clothes, they saved their money and bought property and outside of the city generally. People are moving to the suburbs, to rural areas, places where home prices are a little bit cheaper.
Many home buyers are looking for houses outside the major metropolitan areas. Additionally, many home buyers are looking for direct outdoor access and added space as the uncertainty about the virus persists.
Millennials are also looking to influencers not just for the latest trends and TikTok dances, but to partake in important conversations, be it about politics or personal finance or anything in between.
Real estate ownership. Let's start small. Let's don't be scared to start small. Instead of renting a big house in the hills in California like most artists do, buy you one that's on the flat.
I meet folks like Brandon Rule and Charlemagne the God.
So you have residential real estate and you have commercial real estate.
They're talking about buying homes. When I was coming up, really home buying was a mysterious, shrouded process that only a few people could teach me. Now I can easily log on to Clubhouse or Instagram and find literally lessons on how to purchase a home, but done with savvy and finesse.
Today we're gonna make a greenhouse.
I am DIYing the entire closet.
Heather, having bought her fixer-upper sight unseen, also looked to internet personalities to help figure out how to modernize and to make sure her home was also an investment.
It gave us a lot of confidence. They make it look super easy, how we could do all of those things ourselves. My husband just installed a laundry chute, which is something we never would have thought of if we didn't see an influencer do that and how easy it actually is.
Really simple do-it-yourself project. You can do that. If you have any questions, go ahead and message me.
And in the case of Neville House, Josh and Pele hope that buyers see these homes as potential secondary income.
These young families look at these products or look at our homes and say, here's a turnkey Airbnb. This can serve our family, but this can also be the perfect rental. We've tried to strike a balance in the design of the home for, working well as a family home that's going to be lived in and also working as an investment.
A lot of this just points to how millennials can utilize and leverage social media to their benefit. But it also speaks to, again, this moment that folks want freedom. So millennials are really stepping up to this real estate game and taking ownership and building wealth.
Of course, not everything is as it seems online. While social media can be a useful tool for learning, there's still a lot it can't tell you about the home buying experience, or living in the suburbs for that matter.
We knew going into it, budgeting for a lot of renovations. We kind of thought if we buy it at $450,000, we could put $200,000-300,000 into the house and really make it ours and our own.
We can't wait to replace in this kitchen and update our built-in deep fryer, which was not in the listing photos.
We kind of got into the house and we realized that budget was completely unrealistic.
We have a lot of people who see our design on Instagram and they say, I love it, can you come build this on my property? And then they'll send us the lot, which they bought sight unseen during COVID, and because of site conditions or zoning, it's virtually unbuildable.
I think we all know that what you see on Instagram and what you see in real life are two very different things. So while we can definitely, as brokers, create these fantastic narratives, the one recommendation that I would give is do your homework. Don't believe everything you say. That's not to say that, there's dishonesty or anything where people are trying to manipulate you, but not everything you see is accurate.
This shift towards social media house hunting may also help to bring equilibrium to a market that has historically disadvantaged specific groups of buyers.
Many of the traditional ways that people got mortgages or loans often precluded Black people because they deemed us too risky for those loans. With technology, there's ways to get around that. As long as more Black people get educated on racism and discrimination in lending, we're going to figure out ways to get around that racism.
When I was 24 years old, I saw the UFC on a pay-per-view on TV, and I was so overwhelmed by the athleticism, the skill. And then at the end of the fight, the combatants hugged, they shook hands, and I just fell in love with it.
Part of UFC's appeal is it doesn't look like a balletic display of martial talent and mastery as much as it looks like a bar fight.
We choose to do this because we love the sport, but it is a business. And if you do not treat it like a business, I guarantee you that the promoter is, and you will be left broken at the end of your career.
Each of us have an individual story, but as with anything, you take enough of these individual stories and you see not only crossover, but intersectionality.
A group of former UFC fighters that are suing the UFC scored a key legal victory on Thursday when a federal judge said he would grant their lawsuit class action status.
There have been fights in every major U.S. sport about workers' power in the labor market.
I don't think there's a guy in the sport, from the guy who just got his first fight all the way up to the Conor McGregors, that is pleased with the way the UFC treats fighters. The way we've been strong-armed, the way we've been coerced.
Fights over unionization in some sports, fights over free agency in baseball, and in boxing, the Muhammad Ali Act, which restricts the kinds of contract terms that can be imposed on boxers. The fighters who brought this lawsuit see it as the continuation of a tradition in sports, of athletes fighting to have agency and power in the terms of their work and who they do it for. Mixed martial arts used to be pretty culturally and legally fringe in the United States. It was banned by most states. John McCain had famously called it human cockfighting. There are some rules in the UFC, but to a large extent, all sorts of body parts and tactics and attacks are on the table, and people get seriously injured at times.
My nose has been broken multiple times.
I had my right pectoral torn off, had to get that reattached.
I've had my jaw broken in 2 places. I've had my neck broken.
Had my left ankle broken, had to get that repaired.
I've had torn right labrum in my shoulder.
He broke my eyeball, the bone that holds up my eyeball.
I've had my left eye orbital fracture twice where my eye caved in.
I was swallowing my own blood and I knew, don't blow your nose or both eyes will blow.
At the time that UFC was bought for just $2 million by the former boxing coach, Dana White, and a casino owner he'd been friends with, Lorenzo Fertitta, and his brother Frank Fertitta, UFC was struggling, as were other mixed martial arts promoters. It was pretty much a fixer-upper. The money that they spent to actually purchase it for $2 million was much less than the money they quickly had to sink into it in order to revitalize it. They pulled off a multi-pronged strategy that was quite successful. First, they did what White has referred to as running towards regulation. They found ways to make compromises with state regulators so that the sport would not be illegal. And at the same time, they also popularized it. They made gambles like paying the production costs themselves for the first season of a reality TV show, The Ultimate Fighter, on Spike TV.
It's all over! It is all over! Diego Sanchez is the Ultimate Fighter!
UFC under Dana White had a gift for weaving compelling personal narratives and rivalries. People throwing shoes, a guy coming to the octagon with Who Let the Dogs Out playing while he was dragging another guy on a leash.
My first contract with the UFC is kind of an interesting story because here I am on this reality show, The Ultimate Fighter, and they started to realize how big of a stepping stone this was going to be for the UFC. Sat us all down individually, put a contract in front of us and said, hey, we realize that this is going to be huge and we really want to have you all a part of the UFC family moving forward. So we want to go ahead and get this out of the way, just sign this simple contract and we'll be able to move forward as one unit. But as I'm looking at this thick contract and wondering what I should do, Dana White looks at me and says, don't worry, if this thing takes off, we'll take care of you.
The fighters would say, at the heart of UFC's power is the contracts that it signs with fighters.
Before boxing had competition, boxing used to be dominated by a few dominant promoters, and the contracts were ported over from boxing. And the contracts are basically designed to control every aspect of a fighter's career. They're long-term. They last multiple fights.
Fighters under these contracts are bound to fight only for UFC for a period of time, and UFC can extend that time if a fighter declines a match or if a fighter gets injured.
They control who the fighter fights. They control when the fighter fights. And then they have a number of different clauses that make it very difficult for a fighter to ever break free from the UFC if that fighter ever did want to become a free agent.
contracts are so one-sided. There really is no negotiation room for any of the things, especially as you're coming up and as their stranglehold on the sport of MMA got so much stronger.
Part of what's at the heart of this lawsuit is the ways that UFC successfully took other competitors off the board.
The UFC had such a stranglehold on mixed martial arts, and as they were buying up so much of the competition, shutting them all down, they really became the only option for anybody that wanted to do this professionally.
If you follow Dana White's Twitter or watch him on YouTube, you could have seen Dana White calling himself the Grim Reaper and bragging about how he has defeated or derailed or acquired one after another company that tried to compete with the UFC. In 2011, UFC acquired Strikeforce, which at the time was the most prominent rival still standing.
Kung Lee is unbelievable. It was a great fight. Let's hear it for him one more time. Scott Smith and Kung Lee.
The CEO of Strikeforce, Scott Coker, has said in the past that he saw himself like Luke Skywalker up against the Death Star trying to compete with UFC.
Eventually, when Strikeforce was bought out by UFC, my only option was go to UFC because they had the rest of my contract. Now I'm under a contract where it's only an 18-month contract with 6 fights, but 5 years later, I'm still stuck in the contract.
The month before UFC's parent company, Zuffa, completed its acquisition of Strikeforce, a UFC executive sent an email, and the subject line of that email was, "We own MMA."
And the UFC has admitted in documents that have now become public that they've almost never lost a fighter that they wanted to keep.
In internal UFC emails, we now know the company referred to what it was doing as choking off oxygen to the competition. The most important oxygen that UFC allegedly ran afoul of the law by cutting off to its competitors is the fighters themselves.
And not only did they make it clear to us, they made it clear to the whole mixed martial arts world, there is no negotiating.
These are very strict, never-ending contracts, and that's the case to this day. The UFC just says, oh, you want to fight for us, you sign here. If you don't want to, we've got 20 other guys that'll take your spot.
They have 70, 80, 90% of the top fighters under exclusive contract, meaning that those fighters are not available to any other MMA promoter.
And fighters, even if they wiggled their way out of the very restrictive contracts that UFC imposed on them, didn't have another professional mixed martial arts option because there weren't robust rivals to go sell their work to.
On Tuesday afternoon, a class action lawsuit was filed in U.S. District Court in San Jose against Zuffa LLC with fighters Kung Lee, Nate Quarry, and John Fitch attached to the suit.
Rampage Jackson came to me and says, hey, Kung, I know this lawyer, he will help get some fairness for the fighters in the marketplace. And I decided I wanted to step up for all the fighters that's being affected.
At the end of 2014, more than 6 years ago now, a group of now all former fighters filed an antitrust class action lawsuit against UFC.
And in broad terms, the case is an antitrust case where we're claiming that the UFC is both a monopoly and a monopsony.
Usually when we talk about monopoly, we're talking about the power that a company has when it becomes the only one selling something. Monopsony is about the power of being a monopoly purchaser of something, and particularly a monopoly purchaser of labor. A key argument in this lawsuit has been about, as UFC succeeds and its revenue soars, how much should we expect that, absent illegal conduct, the fighters' pay would soar as well. In UFC, year after year, the share of the company's revenue that goes to actually paying the workers doing the fighting has hovered around or below 20%.
And what this analysis shows through complex statistical regression modeling is that if the UFC was competitive and did not allegedly violate the antitrust laws, it would pay its fighters 50% or more of the revenues it's generated, just like baseball, just like hockey, just like basketball, boxing. If instead of paying 20% of the revenues generated, it paid 50% or more of the revenues generated, the fighters would have made $1.6 billion more during the period that we measured, 2010 to 2017.
Sometimes when you write about allegations against companies, and particularly about lawsuits against companies, those companies don't want to say a whole lot about them or are pretty dismissive of the significance of litigation against them. UFC, in their comments to me, has been pretty feisty about this, saying that they see this lawsuit actually as a threat to the ability of businesses to take risks and succeed, and that they don't want to roll over, that they want to fight it and they want to defeat it. The fighters I talked to described having side jobs, being reliant on UFC in part because after taxes and expenses, they weren't making enough money to feel financially secure.
The overview of my career from a financial perspective is, something I've had a challenge in admitting. I can tell you now that I lived in my mom's detached garage the entire time I was fighting, and I had a second job as a bouncer and a bartender, a third job as a personal trainer, just to make ends meet.
Nate Quarry told me that over his time in UFC, he fought fights while he was tens of thousands of dollars in debt coming into the fight.
It gets so disheartening because I've seen fights that are called the fight of the year. This is just this brutal war, and they battled for 4.5 rounds until one guy's body just gave up. And then you find out, oh, that guy made $60,000 for that fight.
In one of the hearings in this lawsuit, UFC's attorney argued that if the fighters were really the product, if all that UFC were selling were the fighters, then the fighters wouldn't need UFC at all. That a fighter is not themselves the UFC product any more than an Apple engineer who makes a cool iPhone is the product that Apple is selling.
We, the fighters, make this whole thing happen. And it's been driven by Chuck Liddell. It's been driven by Randy Couture. It's been driven by Conor McGregor. It's been driven by Brock Lesnar. It's been driven by all the greats that have walked before us and that walk this path right now. We are the product.
If the fighters are not the product, then go ahead and release us from our contracts. You'll do fine without us, clearly.
It's the identity and rank and popularity of those fighters that attract the eyeballs and make the sport what it is. And if you can lock all those up and keep them from other promotions, you can dominate the sport, which is what they've admitted they've done.
William Isaacson, a lawyer for UFC, said in a statement that UFC has spent many years building a world-class organization, enhancing the brand of our athletes, and championing the sport of MMA. UFC pays its fighters more than any other MMA promoter, with average fighter compensation rising by over 600% since 2005. Our efforts have raised the global popularity of the sport and the overall revenue potential of all MMA organizations and athletes. In December of 2020, the judge announced a crucial step in this lawsuit, which is that he is going to certify it as a class action. Class certification makes this lawsuit a much more significant threat to UFC And the judge made clear, long before saying how he planned to rule, that he expected whatever he did to be appealed into federal appeals court and on from there to the U.S. Supreme Court. So we are likely in for many more months and years of wrangling over this. Kyle Kingsbury said that he doesn't think any settlement would be acceptable unless it includes a change to the restrictive contracts that UFC uses to keep fighters bound to the UFC.
My son's about to turn 6 years old, and it started when he was in the womb. You know, we're in this thing to the end to change the sport forever. We want the same freedoms that are offered in any other major sport, and every other major sport has gone through what we're going through right now.
People tell fighters, just shut up. Look at how lucky you are. Well, no, actually, we're fighting for what we believe in. We're going to continue being fighters, and that's how we're made.
Every nation that's a coastal state has some region of the seafloor that falls within their territorial waters, and many countries, including the US, the area that's underwater exceeds the area that's above water. So huge amounts of nations, areas, and regions are just really unexplored, uncharacterized. We don't really know what's there.
We know less about our seabed than we do about the surface of the Moon or Mars. Only 20% of it has been mapped. A map of the seafloor could lead to all kinds of discoveries, like new marine species and rare earth minerals like cobalt that we need for electric cars and mobile phones. The value of all the gold deposits alone on the seafloor is estimated to be around $150 trillion. A map could also help us when tragedy strikes.
Malaysia Airlines Flight 370 disappeared from radar screens.
Mapping of the ocean floor is being carried out. Problem is that the southern Indian Ocean is just so incredibly huge.
To me, a map is a fundamental piece of understanding of who we are, where things are. Once you understand something, you start to value it more. And when you start to value something, that's when you start to really think about making it healthy and preserving it and keeping it going. A map is the first step. It's the basic understanding that you need to figure out where you are.
Oceans. They cover over 70% of the planet, but most of what lies underneath is a mystery.
The seafloor is a really fascinating landscape. We don't have a lot of data to describe the shape of it in detail, but in places where we do, there are spectacular features. There's meandering channels with all kinds of interesting topography. There are canyons, there are seamounts, mid-ocean ridges, all kinds of things that we see on land that are just basically hidden from us by the water.
As it stands, this is what a map of the seabed looks like. All that black? Those are the parts we haven't mapped yet.
At present, most people think that the seafloor is actually mapped because you'll see a world ocean map and you can see some shape of the seafloor, but most of that is based on prediction. Roughly 80% of what you see for the world ocean floor is modeled based on measurements of the sea surface height and a computation based on gravity.
In 2017, the Nippon Foundation and the General Bathymetric Chart of the Oceans, or GEBCO, launched Seabed 2030. It's a collaborative project to collect and collate data ocean-wide and create a complete map of the seafloor by the end of the decade. To do this would take one ship around 350 years at a cost of up to $3 billion. That's why data is harvested by all kinds of vessels, from fishing boats to freighters.
Because there is so little data, it's important that vessels that are capable and willing to acquire data when they're just moving around the ocean do so. So we have a lot of data that's collected during transits. There's a lot of academic requirements to make data publicly available. There's industry data that's starting to become more and more available. There's government data. So there's a lot of different ways that this data is coming in, and it's a really messy and challenging puzzle to put together. But what's exciting is that it's a puzzle to put together.
Since Seabed 2030 launched, the area mapped has risen to 20%, and all the information collected is freely available.
The more data we have collectively and other people can access, the faster the discoveries are made, which really pushes forward our understanding at a faster rate than if you held on to that data and it was only you with that data. Things like machine learning and artificial intelligence are also going to kick in the next decade, because with all this data, they'll be able to make connections that a lot faster than perhaps we would have been able to, which then again feeds our human understanding and also gives us new ideas, new ways of thinking, of exploration.
Until the early 20th century, mapping technology was simple, usually a weight attached to a long rope known as a lead line. After the Titanic sank in 1912, explorers proposed using sound waves to find its hull in the North Atlantic. This led to sonar, the most common technique used for mapping today. Operated by the Schmidt Ocean Institute, the Falkor is an 82-meter-long research vessel, equipped with 2 multi-beam sonar systems that have helped Deborah Smith and a team of other marine technicians to map over 1 million square kilometers of the seafloor.
You know, you go from somebody with a rope with some knots to sonar acoustics that is, I call it math magic, but it is incredibly advanced mathematical technology to be able to measure the distance and time of travel of sound on a moving ship. Multi-beam mapping works by using sonars. So sonar is taking sound and a measurement of time. So you have a multi-beam sonar and it sends out a ping of sound. That sound travels through the water column, hits the seafloor and comes back to the ship, and we measure that time and we're able to calculate the distance. Each individual ping of sound has many, many beams. So it looks like a giant fan across the seafloor, and that fan is moving along the seafloor. So you have many tiny little beams going across, and they're traveling along a track. You can look at that data and look at both the peaks and the valleys and the highs and the lows and sort of create a three-dimensional image of the seafloor. The accuracy of multi-beam sonar really depends on the water depth that you're in. Think of it like a flashlight beam, and if you're holding a flashlight and you're shining it on the floor, the closer you get to the floor with your flashlight, the smaller that beam is. If you have 400 of these beams all across, so think of 400 people holding a flashlight, the closer they hold that flashlight to the seafloor, the smaller your beam is, which also means the smaller that you can find information or data about. So it really depends on the depth of the seafloor in order to see how much you can define an object.
This variation in depth means that mapping resolution will range from 100 by 100 meters in shallow waters to 800 by 800 meters in the deepest parts of the ocean, which go down as far as 11,000 meters. Remotely operated vehicles, or ROVs, can then be sent down to investigate seabed features up close.
We've just crossed the 1,000-metre mark. It's 4.6 degrees C, and now we're going to drive the ROV down at a higher rate towards the sea floor.
On a recent mapping expedition, scientists on the Falkor discovered a 500-metre-tall coral structure in Australia's Great Barrier Reef, the first to be discovered in over 120 years.
A place that is incredibly popular, well visited, well traveled, we're still finding new things. You don't know until you map it. And so until you get that sort of high resolution picture, you don't know the sand waves or the old riverbeds that used to be there or the waterfalls off the side of a volcano that used to be above the surface and now is below the surface. It's a little bit of everything. Think of, let's say, Hawaii or someplace where you see a volcano above the water. Picture that below the water.
I'm really kind of obsessed with the whole concept of scale here. Although we can create 3D models and, kind of come up with these visualizations, it's not the same as that feeling of looking out over this big landscape. But, I think we'll get there soon with VR and other kinds of technology, but it's really spectacular to think about, especially with the familiarity that some of us have with these features, like what it looks like. We look out at the ocean and it just looks flat, maybe with little bumps. We really don't think about all of this that's underneath, and it's really an amazing landscape that's just hidden from us.
With more than 90% of the ocean deeper than 200 meters, fleets of autonomous vehicles could make the data gathering process faster, cheaper, and safer. And new discoveries might help with exploration of all kinds.
I think the ocean can actually provide us with huge insights as we go out into space as well and look for life and other kinds of life forms. I also think in this next few years we will have a different kind of access to the ocean because of virtual reality and augmented reality, and so that will allow us to sit in our living rooms and really experience what's underwater in a different way and see this different alien planet.
Since the dawn of man, meat has been on the menu.
Then a pure beef hamburger.
Over a pound of meat. We have the meats.
And even with growing trends of vegetarian diets and plant-based substitutes, around 89% of the world population consider themselves omnivores.
We have come a long way from our hunter and gatherer roots. We have managed to establish a whole industry designed to feed almost 7.7 billion people. We've maximized production and we managed to reduce hunger over the past couple of decades.
And although we've become exceedingly efficient at putting meat on the table, raising livestock animals by the billions comes with its own set of consequences.
If animal agriculture continues to expand the way it has, there is a risk that we won't be able to stop climate change.
But with rapid advances in technology, we might soon see a food industry that leaves all those problems behind.
I'm about to be one of the world's first commercial customers for lab-grown meat, cultured meat, to eat just as the company, and I'm very, very excited. Here is the chicken. Looks pretty crispy outside. That's really good. I mean, look, it's really tasty.
Here at 1880 in Singapore, cultured chicken is being served under a regulatory approval granted by the Singaporean government. It's the very first time a cultured meat product, meat made from animal cells grown in a lab, has been approved for commercial sale. Eat Just, the company behind these chicken nugget-style dishes, is based out of San Francisco and got their start in 2011 developing plant-based egg substitutes like mung bean scrambled eggs and mayonnaise. But it wasn't until 2017 that they announced they were shifting focus to a cultured meat product.
In order to feed the world that we live in, a lot to animal protein, we need to take a third today, and it'll be more tomorrow, of our world and make it dedicated to feeding chickens and cows. We go to areas that are filled with biodiverse rainforests, taking a bulldozer to them and planting soy and corn to feed the chickens that we eat. Climate change is accelerated by the kind of animal production that we engage in. When we bring animals in tiny little spaces, that accelerates the probability that more zoonotic diseases are going to impact our families. And from a morality perspective, why do we need to cause any harm to any other living thing to have dinner that tastes good? It does not have to be that way. And those things underlie the force of this idea.
The meat alternatives that have made it to the market thus far have been plant-based. Imitation beef and pork made from ingredients like pea protein and coconut oil by companies like Beyond Meat and Impossible Foods. That's a very different proposition from cultured meat, which is made from actual animal cells.
I'm a huge fan of any company, of any person trying to make a product that's improving the food system, including all the plant-based proteins. Maybe in some future menu, you'll have this kind of cultivated chicken, and you'll also have a plant-based version. That's fine. But I guess you have to ask yourself, in our lifetime, is that diner likely to also remove the conventional option on the menu too? We do think we need a more permanent solution. We do think we sort of need, if you will, an end game to this problem. And we just think this is more likely to be the path to achieve that.
So animal cell technology has been around for several decades for applications such as development of vaccines and other biotherapeutics. The first known prototype of cultured meat was done by Mark Post earlier in 2011. And essentially, he was developing a beef patty. It was a very expensive prototype, if I'm not mistaken, above 250,000 euros at the time to produce just one beef patty. It was more of a proof of concept to really demonstrate that this technology is possible and that it can be done. The way that we grow and produce cultured chicken is essentially we isolate chicken cells from chickens without having to kill them. So from a small biopsy, for instance, we immerse these cells in a liquid broth that contains the nutrients that the cells need to survive and be healthy and to grow. We really need these cells to multiply to reach the numbers that are sufficient to make a meat product. We're looking into the cells that are really important for meat. So we think about muscle cells, fat cells. By that isolation, we are able to form those muscle tissues in culture. The culture happens inside of a fermentation tank, what we call the bioreactor, which is essentially providing the same conditions as the animal body. Warm temperatures, some sort of mechanical stimulation, so that the cells are exposed to very similar conditions that they had inside of the animal. After the cells proliferate and reach a certain density, the final step is essentially to separate those cells from the liquid broth that they are in. We just make sure that the product meets our quality and safety standards, and then those cells are ready for consumption. Milk, cheese, yogurt, a lot of those derive from fermentations. The only difference is that they're starting from a different cell type. In this case, we're just using the animal cells as the initial and beginning of the product.
Eat Just has developed chicken nuggets so far, with far more textured chicken breasts planned for the future. But another cell-based meat startup, Memphis Meats, has already started working on culturing other animal cells as well.
We've done beef, we've done duck, we've done chicken, and these are things that are favorites in various parts of the world. For instance, people in America love beef and chicken. People in China love duck. So we wanted to show that we at Memphis Meats can produce meats that we as a global population love to eat. There's a lot of similarity on how we grow the meats from various animals or fish. but they're also different because of nutrients they need and how they actually come together to form the final product, the meat. And I think it's very similar to how we also grow various animals. There's similarities in the feed that we give cows and pigs and chickens, but there's also differences how we cultivate, and it's very similar for us as well. So we've been working with the FDA and the USDA for the last 3 years and really developing the guidelines on how this food should be regulated when we come to the market. As soon as we get regulatory approval in the United States, people will be able to go to their supermarket and buy it and enjoy it. They'll be able to go to a restaurant near them and order meat directly from animal cells.
But it's not just getting the meat right. Once approved, the gates open to a very high potential demand, and scaling becomes the next big hurdle.
Before, we can only make chicken for myself, my friends, my girlfriend, my family, my colleagues. Now we actually have the ability to make chicken for millions of people. So that allows us to invest and to allow the economies of scale to drop the price. The second is we need to reduce the cost of the nutrients that these cells are consuming. So I think chicken feed raises or drops the price of chicken. The nutrients we feed ourselves does the same thing. So we need to drive that down. The cell density is another technical element. We need to continue to increase that, and hammering on those things over the course of the next 5, 10, 15 years will put us in a place where we're significantly below the cost of this animal protein. And that will be one of the main inflection points that will lead to a new way of eating meat.
So here is a close-up of a half-eaten crispy chicken bite. You know what? What I'm really thinking is, I'm eating chicken. I like chicken. You know, the normal chickens I eat, I don't know where they came from. And so I don't know why I should be very stressed where this came from either.
The meat market is worth more than $1 trillion annually, and there are over 60 startups in the cultured meat field.
Cultured meat has attracted several prominent investors, including Sergey Brin, Richard Branson, and Bill Gates. What is also interesting is that even meat giants such as Cargill and Tyson have invested in the space. It's this disruptive potential of the market, as well as the promise to greatly reduce the climate impact of meat production that has attracted investors.
It remains to be seen who will get regulatory approval in which countries, and whether consumers will like lab-grown meat enough to make the switch. And while there's no evidence that lab-grown meat is any less healthy than traditional meat, there's an ongoing debate over how healthy eating meat is in general. But if these products are a success, they could be the beginning of a more humane, less destructive meat industry.
The food and ag industry is the most innovative industry in the world. It's always figured out how to feed a growing population, and we've never failed doing so. And it's been very clear to us that we are part of that, and we're going to figure out how to feed the next 3 billion people joining us. And I just see an evolution.
We can do this a bit differently. We can do this in a way that is consistent with the kind of people that we want to be, the kind of planet that we all want to live in. We can build a food system that reflects really the best characteristics of who we are. And that makes me really hopeful.
Impossible Foods might be the world's most ambitious company. Just listen to founder and CEO Pat Brown.
People wonder how big the plant-based meat industry is going to be. It will be the meat industry in 20 years. We're going to look back and basically say, wow, remember back in the day when we used to use animals to make meat?
Yes, Impossible's stated goal really is to replace the use of animals as a food production technology globally by 2035. That would mean supplanting a $1.2 trillion industry, not to mention a source of sustenance as old as time. To be fair, the company has got a lot of people talking about its products.
So there's this thing called the Impossible Burger.
What's called artificial meat.
The realest, fakest burger in the world.
Not bad.
But before Impossible Foods can take over the world, it's going to have to overcome strong competitors, penetrate tough new markets, and generally transform its product from a conversation piece into a ubiquitous staple food. With the coronavirus turning the world of food upside down, this could be the moment when Impossible's newfangled meat goes mainstream. Impossible Foods was founded in 2011 when Pat Brown, a longtime vegan, was nearing the end of an accomplished career in biochemistry.
I've been a scientist my whole life and just came to this realization that by far the most important scientific question in the world is, what makes meat delicious?
Pat Brown, some would call a zealot for his mission. He really doesn't hold back when it comes to talking about wanting to completely replace animal agriculture.
Producing meat from animals is the most destructive technology on Earth, and if we're going to avert catastrophic climate change, we have to find a better way to produce meat.
You've probably heard about the dangers of cow flatulence. Their digestive systems produce large quantities of the powerful greenhouse gas, methane. In fact, it's estimated that livestock farming is responsible for nearly 15% of all greenhouse gas emissions. Impossible claims it takes 89% less GHGs, 87% less water, and 96% less land to produce its burger. The key, of course, would be to get people to actually eat the thing, which is where the company's secret ingredient comes in. Heme, a genetically engineered substance with a bloody iron-rich taste like red meat.
So heme is a very controversial part of the Impossible Burger. It's also what makes the Impossible Burger what it is. There are a lot of consumer groups and anti-GMO groups that oppose the Impossible Burger because of the heme. The studies on its safety are pretty short term, but the FDA has approved it and the company says it's completely safe, and there isn't any evidence that it isn't.
Critics have also challenged the company's claim to health advantages over traditional meat, pointing out that while the Impossible Burger has less fat, sodium, and calories than its beefy cousin, it's also more highly processed. But let's be real, we're talking about mimicking hamburgers here, not kale salads.
These burgers are definitely better for the environment, so that's a plus, but they are not necessarily better for your health.
After years in the lab, Pat and his colleagues were confident they had a product even Ron Swanson could love, and the Impossible Burger made its debut in 2016.
Their burger began its life in the public when it was sold at David Shank's Momofuku. And they went from sort of higher-end fine dining restaurants into higher-end burger restaurants like Bear Burger and Umami Burger. And then suddenly they started popping up everywhere.
This tastes like a burger. It tastes like meat.
This is all made from plants.
It's all made from plants.
This tastes like beef.
Doesn't that just look like real meat?
So meat-like.
They always say it's just like a burger. It tastes like yuckers.
Beef farmers of the world, relax.
That doesn't taste like a burger.
Opinions differed on the Impossible Burger's relative meatiness, but the debate itself was fantastic free advertising, helping to propel Impossible into major chains like White Castle, and then in the summer of 2019 into more than 7,000 Burger Kings across the US. To date, the company has raised over $1 billion, and a funding round in March valued the company at around $4 billion. But fake meat is a happening space these days, and Impossible faces some daunting competition.
Time now for the stock of the hour, and that is Beyond Meat. Shares of the faux meat or plant-based protein company are soaring today.
Beyond Meat is also making a very meaty burger from plants. They're very non-GMO. They stress that all the time to differentiate themselves from Impossible.
It would be much easier to genetically modify plant material to make it take on the texture and appearance and aroma of animal protein, but we won't do that.
Beyond Meat had one of the biggest IPOs of the year in 2019, so Impossible, which is still privately held, has some catching up to do. But you won't hear Pat Brown knocking his biggest competitor.
I wish them nothing but success. They have the same mission we have. The only rival we care about is the incumbent animal-based industry.
Rivals or not, Impossible and Beyond certainly agree on one thing. The true prize isn't the American market, it's China. 27% of the world's meat is consumed in China, compared to just 9% in the US.
The Chinese population eats a ton of meat. They're a huge market. China's a really interesting case because they have long had vegetarian cuisine as part of their culinary culture, and whether they are looking for meat replacements is still an open question. What we found in our reporting is that some consumers are excited about them. It's just, we don't know if it's going to be enough.
To improve its prospects, Impossible is developing a plant-based replacement for pork.
Globally, pork is the most widely consumed meat. It's almost 40% of all the meat consumed globally. Number one in Europe, number one in China. So if we're going to achieve our mission, pork is, right up there.
No word yet on when Impossible pork will be available.
This morning, growing concerns about the nation's food supply.
From butchers to national supermarkets, supplies now limited and prices rising.
The impact of the coronavirus on the price and availability of meat has given a boost to companies like Impossible Foods. Over the 4 weeks ending April 19th, sales of plant-based meat increased. But Impossible has acknowledged some negative effects from the pandemic as well.
This being a product that has primarily been served in restaurants, they took a pretty big hit with all the food service shutdowns. Although the company doesn't want to say, how much of a hit. They have, however, announced some new retail rollouts. Recently, they announced that they're going to be rolling out with Kroger supermarkets, and that's big. That's great for them. The question of whether this is like a long-term sea change for these companies, I don't know. Just have to wait and see.
It's safe to say Impossible stands a slim chance of achieving its goal of replacing the entire meat industry. But it's early days for the science of plant-based meat, and it's not impossible that these products could one day contribute to a greener, more humane future. In the meantime, as the technology improves, we get to look forward to many more years of this.
This is meat.
Wait,
no, this is Impossible.
Yeah, that's what I thought.
This is the meat burger. I like it better.
It's not even close to a veggie burger or a tofu burger or anything like that. It's very, very much.
Gwadar is a strategically important point on the map of Pakistan. It sits very close to Iran, actually, on the very southern coast. It's about a 10-hour drive west of Karachi, but it's only about an hour drive to Iran. The area is extremely poor. It's very arid. It doesn't have enough water. Electricity has been very spotty. One of the most surprising things about visiting Gwadar is the high degree of security that is absolutely everywhere. There are armed guards that are required to escort foreign visitors everywhere you go because it is a contested region, because there have been militant attacks in the past.
Despite all this, Gwadar is a key part of the China-Pakistan Economic Corridor, also known as CPEC, the crown jewel of President Xi Jinping's Belt and Road Initiative.
We will leave no stone unturned in ensuring that CPEC and all the projects under its umbrella are materialized in time and in full.
So far, just 1/3 of all CPEC projects have been completed. In Gwadar, none of them have been, and the promised improvements for local people like job creation and better infrastructure have not materialized. So, what has China got to gain from developing this seemingly obscure city on the Pakistani coast?
We have seen this movie before. An outside power comes into Pakistan. It spends heavily on big infrastructure projects. China's not the first to do it. Right after Pakistan became independent in the late 1940s, early 50s, the U.S. was sending advisors into Pakistan to help plan its economy. The U.S. was doing infrastructure projects there too.
Those early projects helped the US gain Pakistan as an ally against the Soviet Union during the Cold War. The US has provided about $80 billion in aid to Pakistan since its independence, but overall the result is disappointing. One of the recent attempts was in the late 2000s as part of the US effort to combat terrorism in Afghanistan.
The number one item on that aid package was to build these high visibility infrastructure projects. So there are literally projects that the United States tried to do or Pakistan proposed to the United States in the 2000s during that period that have become Belt and Road projects.
China is stepping into a gap which has been left by retreating ambition from the US.
为“一带一路”建设美好的未来，为各国发展繁荣干杯。
The Belt and Road Initiative is China's President Xi Jinping's signature foreign policy initiative. Launched in 2013, it comprises an overland belt stretching through China, Central Asia into Europe, and a maritime road stretching around Southeast Asia through the Indian Ocean and up past East Africa. So a benign way of characterizing China's Belt and Road Initiative would be infrastructure for influence.
So when Xi Jinping announced the Belt and Road Initiative, shortly afterwards China designated Pakistan as its showcase flagship project. So the China-Pakistan Economic Corridor was going to be the biggest and most important showcase for the success of the Belt and Road. Pakistan is in great need of infrastructure development. They wanted to create a railway, a highway, roads, all kinds of economic development that is intended to help Pakistan. And it's meant to provide jobs, 2.3 million jobs for Pakistanis. It's meant to provide a 2.5% boost to GDP growth.
And China would gain economically as well. CPEC was intended to reduce oil and gas routes from the Middle East by thousands of miles, a way to cut overland into Western China instead of going around Southeast Asia by ship. Projects in Pakistan also provide Chinese state-owned companies with an additional market. Chinese workers are brought to Pakistan to build infrastructure and then take wages home. CPEC is also strategically significant for China and Pakistan. China wants to strengthen this relationship to counter their shared rival India.
CPEC is both an instrument of Chinese power as well as a test of Chinese power. If it succeeds, China will be demonstrating that it's able to do what great powers have not been able to do in Pakistan, including the United States.
Which is why Gwadar is so important. It's in Pakistan's Balochistan province, an area with serious electricity and water shortages.
Balochistan province is actually populated by people who are of Baloch origin. They're a different ethnicity, they speak a different language from the majority in power in Islamabad. And they feel, as the poorest province in Pakistan, they have not sufficiently benefited from some of the economic achievements that the rest of Pakistan has had. That area is quite contested by the Balochistan Liberation Army, the people who feel that Even Pakistani people have encroached into their territory. So quite a number of people are still staging attacks, and they attacked the biggest international hotel in Gwadar, shot up the lobby and killed, I think, 5 people.
But this unsettled city is where the China-Pakistan economic corridor is supposed to lead to. Authorities plan to develop Gwadar into an international port city.
Gwadar port has an interesting history and an interesting location too. It's located in Baluchistan. It's about 120 kilometers from Iran. Pakistan purchased this territory from Oman, I think in the 1950s. And so for a long time, Pakistan has had on its agenda trying to develop this area. Since the 70s, it's wanted to build a port in Gwadar. Actually approached the United States in the 1970s and tried to convince the Nixon administration to pay for a port. Even offered naval access if the United States was willing to pay for that.
The US rejected Pakistan's offer, concerned that the port would not be commercially viable and would cause geopolitical tension. But in the early 2000s, a Chinese company was awarded the contract to build the port, and they completed phase 1 of construction in 2006. The port was then managed by a Singaporean government entity. In 2013, a Chinese port operator took over from the Singaporeans. In 2015, China announced that it will expand the port as part of the CPEC initiative, but 5 years later, little has happened.
When you look out at the port, you can see it has only 3 berths, and all of them were empty. And the only ship that was in the port at the time was a Pakistan naval frigate. And so it indicated to me that the port is not particularly operational for commercial purposes, and a number of analysts have talked about the strategic importance in a military sense if eventually China were able to use the port of Gwadar as a military base.
You know, no one would be surprised if China did use it in that way. I don't think in the short term, like it is set up in Djibouti, where it has a permanent base. I think it's more likely to use it as almost like a sort of forward-based resupply option, something it can use when it wants to.
Other projects, like building Pakistan's largest airport in Gwadar and 2 special economic zones, have been delayed. A 19-kilometre highway linking the port with the Makran Coastal Highway in Balochistan is under construction too.
Most of the people who live there and work there already are fishermen. They rely on access to the sea. The way that the express highway from the port was originally proposed would have cut off their sea access, and so that was a real point of contention with the community. There have been some proposals to allow them an underpass. It's still a little bit unclear how that is finally going to be resolved.
Even if those projects are eventually built, there are serious questions about who will work there.
There is a problem with manpower, of course, in Gwadar. It's a very small city, and so one proposal has been, well, we'll just ship Chinese workers in from China and build lots of fancy housing for them.
The first Chinese-built community in Pakistan, a $500 million development spanning over 10 million square feet, with over 60% open spaces.
That kind of proposal is what makes a lot of the Pakistani local people quite upset.
A Gwadar-based journalist expressed concerns to Bloomberg over projects like this. The journalist spoke anonymously for fear of persecution from the Pakistan government.
These projects are creating jobs, but they're not really creating jobs for the local people of Gwadar. They're not against economic prosperity, but they're against the development that leaves them behind.
Pakistan doesn't have the money to build these projects. It's gone to the IMF for its 13th bailout since the 1980s. By engaging in CPEC projects, the government of Pakistan has incurred more debts from China, not only posing challenges for Pakistan, but possibly the international community if Pakistan eventually defaults on its debts. But CPEC is still set to go on. Even if most current projects haven't been completed, the 2 countries have recently signed new projects worth $11 billion. Pakistan's Prime Minister said the country's economic future is linked with China.
It's hard to imagine how the China-Pakistan economic corridor is going to be the game changer that the Pakistan government would like it to be. We're not seeing the economic growth or benefit from the projects that were set out and we're supposed to have seen by now. We're not seeing the job creation.
Project delays, accumulating debts, commercial viability. These problems of CPEC are also typical of Belt and Road projects around the world.
For China, though, it's never the narrow accounting perspective that matters. It's the bigger strategic benefits. As China's dollars continue to flow, as China's concrete continues to pour, China's influence continues to increase.
There was some degree of runaway expectations. I think there was also some degree that they weren't extremely forthcoming with the state of the game.
The Cyberpunk 2077 story is very much kind of a story of everything that can and will go wrong in game development.
What is this bug? Jackie's AI flipped out. It wasn't there before.
Where's my gun?
Keep her steady.
I can't shoot.
The release of Cyberpunk 2077 in December of 2020 will go down as one of the most disastrous game launches in history, and it instantly rewrote the narrative of its celebrated developer, CD Projekt Red.
Larger studios with bigger budgets weren't able to create the same quality of open-world game.
The inside story of the making of Cyberpunk depicts a process marred by unchecked ambition, unrealistic timelines, and a focus on marketing at the expense of development.
When CD Projekt stock was at its high, it was the largest stock in the Polish stock market.
Cyberpunk was supposed to be the biggest game of 2020. This was a game that was starring Keanu Reeves. This was a game that was from the makers of The Witcher 3. This was supposed to be the big tentpole release of last year. And for it to become such a disaster for so many people, I think will have pretty far-reaching consequences.
CD Projekt's origins are somewhat unique in the games industry. In the West and Japan, the late 80s and 90s were dominated by games for the home console market, and characters like Mario and Sonic the Hedgehog were becoming household names. The same was not true in a post-Soviet and economically depressed Poland. Most gaming was done on PCs, and most games were copied and sold in small markets around the country.
You could go to the market down the street in Warsaw and buy and sell CDs. And these two guys, Marcin Nowinski and Michał Kaczynski, decided they were going to start selling CDs, and they wound up striking a deal with the people who made a game called Baldur's Gate, which was kind of like the seminal role-playing game in the late 90s.
It was never a business, it was kind of lifestyle, so we're actually pretty bad with counting money.
So you can kind of think of it almost like Nike, you know, where Phil Knight was selling shoes out of the trunk of his car. You know, you can kind of think about it the same way. It was, you know, just selling physical goods and then evolving that into a much broader enterprise.
CD Projekt, named for selling CDs, would move on from just reselling games to localizing Western and Japanese-made games into the Polish language. But it wasn't until 2002 that the company would make its own game, The Witcher.
The Witcher is a huge series, huge fantasy series in Poland, and so it was a pretty big deal that these guys got the rights to make the video games.
The Witcher book series is a source of national pride in Poland, and as CD Projekt released The Witcher 2, the video game series would become an important economic symbol for Poland as well.
CD Projekt Red had become this behemoth of an institution in Poland, and they were really big in the Polish technology scene because they were getting more worldwide attention than most Polish companies do, and making a lot of money. And in 2011, when Barack Obama came to visit Poland, the Prime Minister actually gave him a copy of The Witcher 2.
I confess I'm not very good at video games, but I've been told that it is a great example of Poland's place in the new global economy.
But it would be the launch of The Witcher 3 in 2015 that would elevate CD Projekt Red from representing the best of Poland to representing the best of the games industry.
I mean, really, the thing people look for first and foremost, I think, is that the game is just good, and Witcher 3 was just a phenomenal game. There's a level of just storytelling, an emphasis on making every side quest count, on top of the atmosphere, the dialogue, the character interactions, the different ways stories can end. They nail that.
Other open world games felt empty and forced, and the developers of them gave excuses as to why there couldn't be more rich story or interactions. And The Witcher 3 blew them out of the water. CD Projekt Red was beloved. They were seen as a studio that was willing to make what the player wanted and to truly put in the love and effort required to make a high quality game that really connects with the people playing with it.
And the winner for Game of the Year 2015 is The Witcher 3.
The Witcher 3 would go on to win over 250 Game of the Year awards, but along with being a critical success, for CD Projekt, it was also a financial success. Estimates put the sales of Witcher 3 at around 28 million copies in 2019. A huge step up considering by 2014, The Witcher and The Witcher 2 had only combined to sell 8 million copies. And with two large expansions for The Witcher 3, CD Projekt also helped separate themselves from other AAA publishers at the time.
And the game award goes to, oh man, I have to pay a microtransaction to unlock. That's so stupid that this has to, hold on, I got this, guys, here we go.
Other games, and the most notorious, one to do this was EA's Star Wars Battlefront 2. They got really aggressive on microtransactions in a game that already cost at least $60. You could have paid more if you bought the premium editions. But not only was it that they were being very aggressive and trying to get you to spend money, but you could actually get items that helped you win. Well, gamers kind of draw the line in the sand there, and they don't like that.
CD Projekt had done this phenomenal job of marketing themselves as a gamer-friendly company.
We've said this a million times, and I'll say it again. We're gamers, first of all, and we all like to be treated fairly. So it only makes sense that as developers, we apply the same principle to everything we do here at CD Projekt Red. So giving everyone a bunch of free DLC was an absolutely no-brainer.
They said, we're not going to sell you DLC that's like horse armor packs and other nonsense. We're going to just give you free stuff, and then we're going to sell big expansions as part of The Witcher 3.
And not only were they really good, they were offered at a fair price.
And this was a company that was seen as just like a company that really cared about quality and cared about its customers and would not do anything to kind of screw fans over the way that fans see that EA and Activision and all the other big publishers do.
With a critically and financially successful game, as well as the goodwill from the gaming audience, all the focus would shift to CD Projekt's next release, Cyberpunk 2077.
It's actually funny. They first announced it through like a press release, and then they showed off a trailer at the beginning of 2013 that was like the CGI trailer of like a woman, and there was all sorts of cool cyberpunk stuff, flying cars, lots of stuff. But it wasn't really until after The Witcher 3 that cyberpunk began really like building up this feverish level of hype.
CD Projekt Red, though, wouldn't put out another trailer for Cyberpunk until 2018 at the E3 trade show.
And they showed off it was like a 2-minute trailer of Cyberpunk. Looked pretty rad. And then they showed behind the scenes for E3 attendees, for press, and anyone else who could get score an appointment in there. They showed this 45-minute demo, and it blew people away.
Welcome to the gameplay demo walkthrough of CD Projekt Red's upcoming title, Cyberpunk 2077. The gameplay you're about to see is from a work-in-progress version of the game. Everything you see is potentially subject to change.
Holy this, if they can live up to what they showed me, it's game over.
It all looked incredibly impressive. They had enough action, enough narrative beats with just the right amount of tension. They touted how each of these NPCs, there are thousands of them, each one with their own daily routines and everything.
We've greatly enhanced our crowd and community system to create the most believable city in any open world game to date.
So yeah, people were certainly blown away by this demo. It won E3 awards, and just people left the theater just in awe. What they didn't know, of course, is that the demo was completely fake.
Fake demos are common at E3. Studios put together builds of games to show off what they intend the game to be like, rather than the actual state of the game. What was unique about this demo was that it was impressively long.
It kind of plays into this idea that CD Projekt is very much a marketing-driven company, and so demos were really, really important to them. So it was really important that they make this demo blow people away, which it did. But that might have come at the cost of like some time they could have been spending on the game.
A year later, at E3 2019, fans would get another big surprise.
Whoa! No way! Oh, what? Please welcome
The feeling of being there, of walking the streets of the future, is really going to be breathtaking. You're breathtaking! You're breathtaking!
The Cyberpunk trailers showed gorgeous cities, beautiful lighting, really cutting-edge technology when it comes to the rendering of the game itself. People were very excited to be immersed in this gorgeous cyberpunk world. They saw over 8 million pre-orders, which is a ridiculously large amount for any title to sell, let alone pre-sell.
And you saw the stock price start to go up and up and up and to the right, you know, pretty much in a straight line. If you just look at like the Polish stock market, like the WIG index, when CD Projekt stock was at its high, it was the largest stock in the index.
And that was around the time that they announced that the game would be coming in April of 2020. Behind the scenes, people were pretty shocked that they were saying April. I don't think a single person who worked on that game actually thought they had a chance of coming out in April of 2020. So in April of 2019, I published an article for Kotaku about the making of a game called Anthem, which was a game from BioWare that was disastrous in many ways, and the article kind of ran through why that was. And afterwards, I started hearing from other developers who had stories to share that they said sounded a whole lot like Anthem's. The deadline is unrealistic, the direction keeps changing, things are floundering, we're going through a lot of problems. This sounds exactly like what you wrote about Anthem. Around that same time, perhaps coincidentally, I heard from the CEO of CD Projekt Red who wanted to reach out to me specifically to talk about crunch.
CD Projekt Red had a reputation for crunch, especially during the development of Witcher 3.
their management wanted them to have a reputation for treating workers well and not forcing them to go through crunch. So Marcin Nowinski, who's the co-founder and co-CEO of CD Projekt Red, came to me and said, hey, I want to make a vow right now that we're not going to force anybody to crunch, that people will not have to work mandatory overtime on this project.
Over the course of reporting, Bloomberg has conducted interviews with more than 20 current and former CD Projekt staff, most of whom requested anonymity so as not to risk their careers. CD Projekt declined to comment on the process or provide interviews for this story. The company would end up delaying the game 3 different times, first pushing from an April 2020 release to September, then November, and once again to December 2020. In order to meet the deadline, the studio would scale down the size of Cyberpunk's main city, as well as canceling some features. And while those measures helped, developers still said they were under significant crunch, including one former audio programmer who claimed to work up to 13 hours a day, 5 days a week, and stating he had seen friends who had lost their families over this.
This was not a big secret in the office that the game was not going to be ready, but a similar sort of thing happened with The Witcher 3, and a similar sort of thing happens with a lot of games where they don't seem ready until suddenly everything just clicks. Some of the best games ever made, were created through this process. I don't know that it's the most efficient or the wisest way to make video games, but it's what a lot of people do. I think that management there has genuinely tried to change it, or at least said they wanted to change it, but it has proven very difficult to change that when you make games in this one specific way.
Game studios, some of them see crunch as part of their core culture, that all of their games that they've made under crunch have been successful, so it must be a core element to the magic recipe for creating good games. And that's really not the case. We've run studies and seen that at 8 weeks of working 60 hours plus, the output of a professional is the same as if they were working 40 hours a week. So chronic overwork degrades how effective someone is to the point where then it becomes negative, and overworking them is just getting you less and less productivity.
And so these guys, the people at CD Projekt, having made The Witcher 3, were kind of riding on that high, you could call it arrogance or confidence or whatever you want to call it, of having made The Witcher 3. And I think that having a certain level of confidence can certainly be a good thing, but in this case it could also be dangerous because it kind of blinded them to the reality, which was that this game wasn't going to coalesce.
Sony Pictures Entertainment is reeling from what may be the biggest and most devastating computer hacking in Hollywood's history.
Hackers attacked in waves, first crippling Sony's internal systems, then leaking 5 Sony movies online.
Today, the U.S. government pointed the finger of blame directly at North Korea for the devastating cyber attack against Sony Pictures.
Sony pulling the plug on the interview, saying it will not show the controversial comedy about an assassination attempt on North Korea's leader.
The Sony Pictures hacking was taken very seriously because it was an attack on the free world. What we had been building in terms of our civilization and our freedom and our ability to exchange information freely had been disrupted by a country that we knew very little about.
North Korea has reportedly made attempts to steal COVID-19 vaccine technology by hacking pharmaceutical giant Pfizer.
The Justice Department has charged 3 North Korean hackers over a wide-ranging scheme that included the attempt theft of billions of dollars from multiple companies.
Despite so many attacks blamed on North Korea, there was not much known about the people behind the hacking attacks. And my aim was to reveal who these people are, what they are like, what their operations are like, and on what their dreams and fears were. My name is Sam Kim. I'm a reporter for Bloomberg News, and I wrote a story for Business Week about North Korean hackers. My story is about people who are sent from North Korea to countries like China to hack for the regime, spy on enemies, and make money. North Korea's cyber abilities began about in the 1970s with a lot of students going to countries like Russia, China, and even East Germany to learn coding. It was aimed at improving the productivity of factories at home. But in some time in the 1980s and 1990s, the current leader, Kim Jong-un's father, Kim Jong-il, thought that it would be a good idea to develop a team, an army of people who could hack for North Korea's military. So they began this team of basically hackers who would spy for the North Korean regime and also go out there and make hard currency for the regime. I think Kim Jong-un takes the hacking ability more seriously than his father. He also enjoys a bit of tech savviness as well. You know, he's often shown traveling on his airplane where on the desk there's a Mac computer. He understands the importance of computers. He understands the importance of employing technology to improve productivity of his economy. North Korea is an isolated country with its economy pretty much dilapidated nowadays. It's been under increasing pressure and sanctions from the US and the international community, basically. It does not have the resources and money to build the kind of conventional weapons that other countries are able to build. So what happens is North Korea concentrates its resources on building nuclear arms and missiles, which experts call basically asymmetric weapons. It's the kind of weapons that gives North Korea an instant edge. Think of cyber hacking abilities in that context. It doesn't cost them much money, but if you have the right people and if you have the right training, you are able to cultivate an army of people who are able to penetrate into computer systems of other countries. And that's what North Korea is after. But if you consider the fact that there are only about 1,000 IP addresses in North Korea available, and many of them are basically loaned from Chinese communications companies, you can kind of tell why North Korea is willing to send its hackers abroad rather than operate from within. What's the matter with operating from within? Well, first of all, it would mean that a lot of information would have to be coming in from the outside world, which could risk exposing the government and the people to whatever truth there might be about them. So they're sending their trained hackers to China and other countries where access to information is better. But at the same time, because these are allies, and also because they have their diplomats stationed in countries like these, like China, they're able to regulate and control these hackers better.
But formally, North Korea denies engaging in hacking and describes accusations to that effect as enemy propaganda.
It took me at least half a year to track down these people. It felt like a wild goose chase in the beginning. Because, see, a lot of the people like these are protected by the government in South Korea. But at the end, I was able to find a person who had pretty extensive ties to the North Korean defector community here. And then I was also able to gain access to the people who had actually done programming, hacking for North Korea before coming to South Korea. And Jung is one of them. Zheng actually is not a real name. I knew before meeting Zheng that he was in his late 30s. But when I actually met him, he looked at least a decade older. He wouldn't open up. I mean, it took me, I think, at least an hour to make sure that he would trust me enough that he would share with me his life story. When he was first sent to China, he was a student studying computer science at a university near the border with North Korea. And he came back and realized that there was a lot more to do in China because he had more access to information. And he asked that he'd be sent back to China. And there was also recruitment going on for people who would actually do coding officially, but really hacking for North Korea. So he applied and he got the job. Once he got to the border, he crossed by foot. And from there, he took a bus. And then when he arrived at the station that he would spend years in later, he learned that that three-story building in the heart of a city was actually provided for free, actually, by a Chinese man who had business ties in North Korea. There were actually two other people that I had met. They all said that they go onto this freelance website for programmers, and clients from around the world would come and give them orders, give them jobs to do. Some of the jobs given to Zheng were cracking open commercially successful antivirus programs. And once he was able to open that up, he replicated that program into another product, which his client would repackage as a whole different product to be sold to other people. He also created what we now call bots. There are very popular online games, including Lineage. He would create a bot that would just roam around without any supervision from the user and basically trade items with other users on that game.
He would grow that bot on Lineage and sell it for almost $100.
Another defector said the money from clients was wired primarily via PayPal to accounts controlled by minders because they were the only ones with access to legitimate bank accounts.
Zheng had to make at least $100,000 a year, and he doesn't get to keep most of it. Actually, most of that money goes to the minders, to the North Korean regime. But if you don't meet the quota, and the minders will make sure that they'll put enough pressure on you. And if that happens repeatedly, you will face the growing odds of being sent back home. Among the three people that I spoke to, there's a common thing that they all tell me, which is that on every Saturday, they have to do this propaganda session, which is basically about gathering all the hackers together into a room, and they have to recite whatever messages, whatever lines come from Pyongyang about the Kim family, about socialism. If you're especially someone who with a free set of mind, that's stressful. One person actually was really stressed out what he heard about North Korea once he was in China during the propaganda sessions. He just couldn't take it. Zheng was a senior member of the unit that he belonged to, and he was good at Chinese as well. Whenever a senior North Korean official came from North Korea to check on the hacking units in China, Zheng would accompany that official. He doesn't provide me details, but he calls it unsavory incident that happened between him and an official that he was traveling with. And that altercation prompted him to defect. But there was no one that he could turn to after defecting. He would, in disguise, roam around China. He told me that he actually enjoyed it. He actually enjoyed the freedom of, not being known to anybody, just roaming around a country that was huge. How did he make the money that he needed to carry on, he did the same thing he did, at the North Korean unit. He would take orders, he would reverse engineer software to make money. But at one point, he said he was just sick and tired of it all of a sudden. He wanted to find a place where he could just settle down. And he contacted South Korean authorities. Now, he lives in Korea. He met a woman here. Last time I checked, they had a baby. He works for a software company, ironically, an antivirus company. What keeps coming up in my head, even long after I spoke to these people, is there was one common thing about them, which was the sense of disillusionment. Once they had access to outside information, once they were able to freely roam in the internet, there was a spark. And once they realized that there's a discrepancy between what they think is really happening and what North Korea is telling them every Saturday morning, that's when the spark gets bigger. That little fire is what eventually drives them to decide to leave, even if it takes a huge risk on their lives.
Step into the shopping center of the future, a world filled with exciting ideas.
Since they started popping up in the 1950s, malls have been the quintessential American shopping experience. Bustling temples dedicated to the wonders and excesses of retail, food service, and entertainment, the rise of the mall coincided with the growth of the suburbs.
The heyday of the malls really is the 1970s, sometimes referred to as the malling of America. They really thrived at providing some sort of public gathering space, some sort of social life, in addition to actually giving people places to shop.
Over the past few decades before then, lots of developers were building malls, and it kind of coincided with the growth of highways. So as more people started traveling and interstates started being built, developers really wanted to put something to attract people to stop.
Take a look at an average American mall today, however, and you'll see a very different picture. Closed stores and empty hallways became the norm in many malls even before COVID-19 delivered them another set of problems in 2020. So, what happened? This is the story of the rise and fall of American malls. When malls worked best, they survived and thrived thanks to their anchor stores.
Those are the stores that are on the edges of the malls and that are outward facing to the parking lot. So if you're a shopper, you're gonna walk through one of these big, usually a department store. So if you're thinking about Macy's or Sears or JCPenney, those are called the anchor stores. So once shoppers are done shopping there, maybe they wander to the middle part of the mall, shopping at the other apparel shops, or even going to buy some food. But you really had to have, a reason for people to shop in the first place.
Because anchors bring in all those people, they tend to pay very little rent. Around 80% of income for mall owners come from the inline stores inside the mall. Over the past few decades, malls have been facing challenges from all sides. The first being, there's just too many of them.
As early as in the 90s, the malls were beginning to compete with each other. We have a lot more retail square footage per capita than Canada. We have almost 7 times more retail square footage per capita than Europe.
After the 2008 financial crisis lowered retail spending across the board, malls, and especially their department stores, also had to contend with a new challenge that was growing fast.
Malls started to suffer in the early 2000s with the rise of online shopping. Suddenly, they didn't have that captive audience who had to go to the mall to buy something. You didn't have to get up, get in your car, drive all the way to the mall, and then see a bunch of other people. You could just do it from the comfort of your home. Department stores overall have become less relevant over the years. Many have fallen totally off, and that's Sears, JCPenney. Several bankruptcies in this space have really hurt the industry.
But as department stores go, so does the mall oftentimes. So if department stores start closing locations, that means they're usually leaving malls.
This is the Greenbrier Mall in southwest Atlanta, Georgia. It's in many ways emblematic of the problems facing malls today.
It's been there since 1965, so for more than half of a century, it's been serving this area of Atlanta that's predominantly Black and also is middle-class neighborhood. It started with anchor stores that were department stores. So you had JCPenney and then Rich's, which was later bought by Macy's. So you had these 2 national chains. It had the first Chick-fil-A in a mall, like that type of format. So when you think about the history of malls, like Greenbrier had like the perfect template. But now Macy's will be exiting the mall, meaning that the mall will be left without an anchor, which is vital to attracting other shoppers to come into the stores. Greenbrier then becomes kind of an example or a test for all these other middling malls across America about what do you do when these large department stores, as a business decision on their end, are trying to just stay in the high quality malls. How does a middling mall survive? What's their next strategy?
Greenbrier is a textbook example of how closely the deterioration of the middle class in the US is tied to the health of its malls. The median income for the surrounding area has reduced by $6,905 over the past 15 years, to a total of $20,756 per year. And yet, residents and store owners hope that Greenbrier Mall will see better days. Malls are made up of the people and communities that help fuel them. Greenbrier is still a place that people go to and cherish, even if on paper it doesn't have the elements that make it a thriving mall.
A lot of the existing constituents and residents there feel in many respects that they worked hard their whole lives, to be able to experience the American dream, the single-family suburban house in a leafy yard near a big mall that had a great Macy's, then, they're very reluctant to see that taken away from them.
Now that Macy's is gone, Greenbrier may try to take inspiration from what many malls were doing in the years following the financial crisis, focusing not on shopping, but experiences.
That was a trend we were seeing, in 2016 up into the pandemic pretty much. And by experiences, I mean everything as dramatic as a water park or hosting like concerts to have people want to come other than just to buy stuff. Having Instagrammable moments, making sure your store is pretty that people want to take a photo and post it on Instagram or Twitter. Historically, the mall has always been a place for teenagers. You like to hang out, see your friends, and also kind of be seen at the mall. And that hasn't completely changed. Like before the pandemic, about 95% of Gen Zs, so today's teenagers, had gone to a mall in a 3-month period. So teenagers are still going to the mall. And they've always been key to having thriving malls because they're coming into their spending power. And once you win over teens, hopefully you're really winning over a loyal customer for life.
But thanks to lockdowns across the country, most malls at one point or another were shuttered in 2020. That means no one using the multi-billion-dollar American Dream Mall's indoor ski slope. No one going to the King of Prussia Mall's indoor skydiving attraction. Basically, the pandemic gave malls what they didn't need, another problem.
What would your net income or net operating income have been in 2022 without COVID, and what is it now in a post-COVID world? So our view is a roughly 10% hit to net income over that period.
That's Vince Taboni from the analytics firm Green Street Advisors, which rates American malls from A to D just like a report card. And if malls did have a report card, they wouldn't exactly make honor roll.
Here in the US, out of the 1,000 malls in the country, there are roughly 250 malls we grade A- or better. The B and C quality malls, which is the vast majority of the malls by count, we think are on a negative trajectory. And it's going to depend on a lot of the local dynamics, ownership decisions around how much money to invest in the property will determine whether this mall can survive as retail or it's a rapidly melting ice cube.
While there have been a few bankruptcies among real estate investment trusts that own mostly B to D malls in the past few years, A malls really are doing just fine.
Some of the most productive shopping centers in the country are super high-end. So I'm talking about Bal Harbor Shops down in Miami, Florida. There's Americana Manhasset in Long Island's Gold Coast. The Grove in Los Angeles. These are places that have all high-end stores and have done quite well. A lot of that has to do with efficiency of their property, so their sales per square foot are really high, but also they've invested a lot in their actual mall because it has to look beautiful. It has to have all the services that a wealthy shopper expects.
So what will the future hold for less sought-after malls that can't revive their golden years? For many of these malls, it will mean closure and then hopefully conversion.
If they can't get a new use to come in, it's expensive, but you can just demolish it. And there are still quite a lot of sites just sitting, waiting. Amazon has been picking up more and more of those, building their big fulfillment centers. Also, a lot of communities see this as an opportunity, to redevelop, re-inhabit this dead mall to help that community meet the challenges it was never originally designed for. The number one reuse of an existing mall is as workspace. It's actually pretty easy to just throw some carpeting down, cut a few more windows, and turn it into office space. The sort of number two reuse of malls is either medical, healthcare, or education. Lots of great examples of community colleges all the way down to elementary schools moving into malls. And then the third strategy that I wish happened more is actually just demolishing the mall and re-greening. either reconstructing the wetlands that used to be there and that, frankly, we never should have built on in the first place, or providing community parks and gardens.
While most analysts say post-pandemic retail shopping could breathe some life back into the American mall, many are not long for this world. Depending on where you live, it might be time to make one last visit, grab some food, do some shopping, and say farewell.
President Trump traveled to Utah today, where he dramatically cut back the size of two national monuments in that state.
When former President Donald Trump announced plans to scale back two national monuments in Utah, there was outcry from a lot of people. One company in particular.
Patagonia really is a resistance brand. They embraced the liberal resistance against President Donald Trump and really put themselves at the forefront of that movement.
In 2017, it sued the Trump administration for sort of slashing the size of these two national monuments in Utah that were kind of meccas for climbers. It said at the time, joining the legal fracas was both extraordinary and obvious. So the company's general counsel said it took exactly one email to the board to decide to actually do this, and the case is still out.
Well, I think the only thing this administration understands is lawsuits. We're losing this planet, and we have an evil government, and I'm not going to stand back and just let evil win.
This year it got even more active. It changed its mission statement to, quote, Patagonia is in business to save our home planet. And then it manufactured these little tags on some of its clothes that if you flip them up, it says, vote the assholes out. Very implicit, running up to the election. And it launched a digital tool to help people find their polling place. And on that digital platform, it says, vote the climate deniers out of office, again and again on loop.
This isn't the first time that taking a stand has paid off for Patagonia. The business, which is now worth over $1 billion, was built on it.
I couldn't care less about making more money, but by doing the right thing, it always ends up making me more money.
So is this all a strategy, a sort of premeditated strategy? Who knows? I mean, Shonard's been very vocal from the start and makes no bones about, he calls himself a dirtbag climber and an accidental entrepreneur. So I don't think he's fudging this, but what's important is that it's sort of a textbook marriage of philanthropy and profit.
If you want to understand the entrepreneur, study the juvenile delinquent. Because, you know, they're saying, you know, this sucks. And I'm going to do it my own way. Of course, like every other teenage kid, I had no idea what I wanted to do with my life. When I was 16 years old, I took off and drove across the country. Went into the Wind River Range and discovered mountains.
Patagonia was born out of rock climber Yvon Chouinard's first business, Chouinard Equipment, which made and sold climbing supplies.
Yvon Chouinard was a blacksmith in the 50s, and he started selling climbing gear out of the back of his car that was less harmful to rock faces. This is sort of the origin story of the company. It's called itself the activist company, not a activist company.
6 months out of the year, Yvon Chouinard is a blacksmith. He makes mountain climbing gear. The other half of the year, he climbs.
In 1968, Yvon Chouinard and 4 friends, including Doug Tompkins, the late founders of the North Face brand, embarked on the ultimate road trip from California, where they were based, to Patagonia in Argentina.
The mountain's in a good mood, dazzling sun, calm air all day. If this weather holds, they could be on the summit within days.
This trip became a documentary about these friends who were hippies in the 70s climbing in Yosemite, where the sport became a lifestyle, and how these friends became pioneers of the outdoor industry.
Chouinard moved from selling pitons to polyester, and in the 70s, Patagonia was born. In 1973, Chouinard and his wife Melinda opened the very first Patagonia store in Ventura, California, where the company's headquarters remain today. Melinda Chouinard was the driving force behind many of the employee benefits, like on-site childcare, that helped the company achieve an impressive 4% employee turnover rate. The retail and consumer product sector average is more than triple that, at 13%.
I do think that Patagonia was a leader, one of the first corporations to take into account, the human capital and make sure that their staff, all their employees were cared for in many ways, not just wages, but also they just cared about their people and knew that that's a good business model.
Patagonia began donating 10% of its profits to grassroots organizations in 1985. This later became the 1% of sales that Chouinard labels an earth tax.
I don't think it's philanthropy. It's rent for us living on this planet.
While Patagonia was creating the blueprint of how to be a socially conscious brand, it was also turning a profit. It even made Inc. magazine's list of the fastest growing privately held companies.
So every time the company makes a decision to do something socially and environmentally active, it is met with success, and that isn't lost on Chouinard or any of the other leaders of the company.
The more money Patagonia made, the more it gave away under its philanthropic program. Between 1989 and 1991, the payroll grew by 40%. But trouble was on the horizon.
I think for 1991, we are looking at a recession. The question is how deep that recession is going to be and how long we'll be in it.
Sales fell flat and the bank called in the company's revolving loans. A company that prided itself on taking care of its own laid off 120 people, roughly 20% of its workforce.
That was when we decided that we were going to start doing things differently. We were going to start running the company as if it's going to be here 100 years.
With a renewed sense of purpose, Patagonia was ready for what it called business unusual. It started with the costly move to recycled and organic materials before launching a clothing repair service to discourage fast fashion. And Patagonia's influence was growing. What was intended as Chouinard's philosophical handbook for employees became an international blueprint for sustainable business, printed in 10 languages.
What's interesting to me is that all this, I hate the term on brand, but it's very on brand. It really works for the kind of company he's created. It works for the kind of employees he's been able to recruit and retain. It all is very seamless in terms of the identity of him and the company and what it means in the marketplace. So over time, the company's mission and its marketing have become the same thing. The inflection point came in 2011. Actually, Black Friday, Patagonia took out a huge ad in the New York Times that said, "Don't buy this jacket." And it sort of got into the nitty-gritty on, the carbon footprint and the water footprint that goes into, a piece of apparel like a parka. And at the time, Chouinard said, the best jacket for our planet is one that already exists. So the company at that time said it needed to address the issue of consumerism, which, coming from a for-profit business, hits pretty hypocritical.
As the company encouraged its customers to buy less, its annual sales increased by almost 40%.
The stance of this is hypocritical was loud and constant, talking about consumerism in a critical light while very much being a part of it.
Fast fashion is top on the list of environmental destruction, and not just destroying the environment, but impacting human health. They are in the fashion industry, they're a clothing retailer, and to come head to head with that is courageous. You're not only just trying to create a product that'll last, but you're also educating an entire generation of people to understand that whole ideology that you don't need to change out our outfits.
In 2014, Rose Macario was appointed as CEO. During the next 6 years, she grew Patagonia into $1 billion company, while also scaling up its environmental goals and bringing a more political voice to its activism.
Yvon had this model where he was basically saying you can have a great business, you can make quality product, but you can also do the right thing by the environment, by your employees, by your community. And that, to me, was like the most holistic vision of business that I'd ever seen.
So right now, Patagonia has a team of about 20 people solely focused on activism and grants. And this all comes at a time in the past decade when consumers are paying much more attention to the social footprint of companies and where they buy their goods. So what's happened is all this is good business for Patagonia. In the past 10 years, revenue and profit at the company have roughly quadrupled. It's private, but estimates are it does about $1 billion in annual sales, which is sizable. And that's part of the reason why it's been such a fortuitous cycle as it's ramped up its activism and become more vocal on these things. It's resonated with the market.
As the company branched out into other areas, including a venture capital fund for environmental causes and sustainable food, revenue reached a new peak of over $1 billion in 2017. But this was still small change compared to fast fashion heavyweights like Nike, who made $37 billion that same year. Patagonia's conscience hasn't always been reflected in its customer base either. Personalized vests have become the go-to corporate uniform, and the expensive price tag has helped the brand earn the nickname Patagucci.
It's expensive stuff, it's expensive apparel, and that is part of their calculus in terms of the activism. A lot of the more sustainable parts of the supply chain there's a premium for organic cotton or sustainable down. The Patagucci label is a symptom of that.
So Patagonia products are very popular, of course, with people who are active in the outdoors, but also with people who are not as active. For instance, people in finance wear the Patagonia vest to go to the office. And that's because of the image that the brand projects. And so they have to live with the fact, although they, preach for the environment and want to stand for good, they're victims of their own success.
Patagonia set sales records in the first 3 years of the Trump administration. Now, in 2020, things have changed.
As COVID-19 brought the business world to a halt and the American people voted in a new administration, Patagonia appointed Ryan Gellert as CEO.
As far as its CEO transition goes, this one's happening quite strangely. There's no real budget for next year yet because of everything that's going on and all the uncertainty around that. Patagonia's new focus is going to be on forging
a relationship with the Biden administration. It should be a more close relationship, but Geller still has his guard up. During the Obama administration, they didn't always agree, and he expects the same with Biden in the White House. They plan to bring litigation wherever needed against any government needed about the issues that they care about, and that's climate change and the environment.
built this? So this is all...
This is new since the pandemic. We assumed Googlers would want more indoor-outdoor options.
I mean, it's so exciting. It's such a fun job.
It is. But I would say the thing we're really excited about are these new buildings because we're building sustainability into everything we do. So really forward-looking.
Good? Okay.
From one of the newest workspaces at the Googleplex in Mountain View, California, this is Bloomberg Studio 1.0 with Alphabet CFO Ruth Porat. We're not far from her childhood home. Her father was a physicist at Stanford, her mother a psychologist. After graduating from Stanford herself and then earning a couple more advanced degrees, Porat landed her first job on Wall Street in 1987, where she would spend almost 3 decades, until Google's co-founders lured her to Silicon Valley.
Ruth, it's wonderful to be here with you.
It's great to have you here at the Googleplex.
Thank you for having us. So we are at Google headquarters in Mountain View, and at this very same time, you are making massive investments in New York office real estate. You're expanding headcount in Atlanta and Chicago and Washington, D.C. What's the strategy behind all of this?
Well, at the core, we believe in hybrid work. So we do want to bring people back on campuses, but not full-time. We're thinking it'd probably be a 3-2 work week, but we think coming together is just such a core part of innovation, serendipity, culture, every element of it. And we're growing at a really rapid clip. So we are excited to be expanding our real estate footprint. And then we also wanted to make sure that we're meeting people where they want to be. And so enlarging the number of sites that we have available for people, in particular sites where you have great diverse populations.
Sundar just told me that Googlers will have this option to work in a hybrid mode forever, like literally forever. Obviously, you're embracing this massive cultural shift, but what are the risks? What do you worry about?
So the positive we've seen is there's a productivity uplift, we believe, in giving people the opportunity to be at home some of the time, not do the commute, be able to deal with everything else in their life, and coming into the office. So the risk is, I think about my career, and so much of the benefit in my career was the informal coaching, being brought into meetings, all of the touch points that you have. And so I think that one of the most important things for all of us as leaders is we need to evolve the way we lead. We need to make sure that we're thinking about this hybrid work life and why that's the way to be the best magnet for talent, and make sure that we're continuing to reinforce all of those great practices while opening up new great practices.
Speaking of your career, before you were CFO of Alphabet, you were CFO of Morgan Stanley, and you started your career on Wall Street in 1987. Talk to us about the journey of going from big banks to big tech. Why did you make that leap, and what impact did you want to have?
Well, I loved being at Morgan Stanley, and I became CFO the day James Gorman became CEO. He asked me to join him in that journey, and that was January 2010. And we were still recovering coming out of the financial crisis. There were still some pretty rocky days and a lot of decisions that needed to be made. And then I got to a point where I felt like we were in a great spot at Morgan Stanley, and obviously it's continued to do really well. And I just wanted that next chapter. My view in my career, I've always been focused on kind of continually learning, and I feel like when you hit a plateau, the right questions, what's my highest and best use? And it's been an extraordinary time.
You also survived Wall Street in the 80s and 90s, which is, notorious boys club. And Silicon Valley has sort of come to be known as a boys club of its own. How would you compare those two cultures?
Well, when I was starting my career many decades ago, it was tough and much worse than it is now, and it evolved, no question about it. Not where it needs to be, but certainly evolved, and I saw it through my career. I would say the biggest difference out here is the level of impatience. Mm-hmm. And I love it. It's the view is if you can do some of the extraordinary breakthroughs that we have out here, if you can do natural language translation, everything we do with AI, with VR, with self-driving cars, why can't you fix this now? And that level of impatience, I think, is fantastic.
Legend has it that when you got to Google, you were going to rein in the spending, tighten up on the moonshots. Your nickname, I believe, was Ruth Vader. Was that a tough job to take on?
So I think the narrative was written before I got here. And what I find most interesting about that is I firmly believe the single most important thing in capital allocation is investing for long-term growth. I think if you don't, you are sowing the seeds of your long-term decline. And I learned that really early on in my career. Now, if you're investing in an industry like this and trying to do truly transformative things, by definition, everything can't succeed. And so by definition, you should have the metrics and data and milestones to assess, is it working or is it not? Because if everything's working, or if you think everything's working, I would say one of two things are wrong. Either you're not reaching high enough, or you're not being honest enough with yourself about the pace of breakthrough, whether you're going to get there. So to me, a really natural part, kind of the sister organization to investing for long-term growth is actually thinking about how are you doing with the risks that you're taking, stack rack them, and figure out what's at the bottom so you can redeploy those resources to the top. They go together, actually. And so I find the narrative, it's a false choice to think that it's either about growth or it's about pruning, stack ranking. They go together, and you have to think of them as actually empowering one another.
You advised the Treasury Department during the Great Recession. What lessons did you take away from that?
What struck me is a lot of the lessons from the financial crisis are relevant in good times and bad times. So the most important is it's easier to prevent than to fix. And so, that was really clear during the financial crisis. The financial crisis was about liquidity, and it dried up quickly. And it would have been really easy 6 to 12 months prior to build in durable liquidity. You couldn't do it in the moment. And so this notion about really building a solid foundation on which you operate, you need to do that ahead of time. It needs to be all of the work we do on trust and safety and content moderation, security. That is the foundation on which you can build everything else. Hank Paulson at one point said to me, you have to have the will and the means. And too often by the time you have the will, you no longer have the means. His comment was, be decisive, act early, even in the absence of information. I think that's true in this whole notion of investing for long-term growth. Because if you're not actually assessing progress along the way, and you just assume, we can keep investing in everything, at some point down the road, you'll say, I wish I had made those tough calls to double down on the things that really mattered.
What times are we in now? What's your read on the economy today, especially with rising inflation?
Well, I think back to March of 2020 and where we were. And I think of all of the intervention and steps that have been taken since then. And you've certainly seen the recovery coming out the back end. And it's been really gratifying from those painful days to see the breakthroughs that we've had, not just on the medical front, but we've also seen the improvement across businesses. I think one of the biggest concerns in particular, as you're seeing us go through a digital transformation and the acceleration of it, is ensuring that everyone has the skills, the digital training and skills to thrive in this new economy.
Google now reaches more than half the people on the planet. Why shouldn't we view Google as a monopoly?
We often say that people come to Google not because they have to, but because they want to. It's really opening the world for so many people, so that's the intent.
I want to talk a little bit about regulation. You were drawn to M&A in your early days at Morgan Stanley. Microsoft is making some big acquisitions, deals that some think Google maybe would have wanted to win in a former life. Is antitrust scrutiny constraining any of your business plans and your ability to compete?
So the main thing that we've done throughout the life of Google is really invest in innovation, it's organic growth. And we're continuing to do that at a really rapid clip. We have then layered onto it tuck-in acquisitions and larger acquisitions, and we're continuing to be active more in the smaller ones and the add-ons, to be fair. But we think there's a lot of opportunity still ahead of us, and so we're continuing to invest in partnerships, in some acquisitions, and do think that there's still upside in a lot of different areas.
So would you say this regulatory scrutiny isn't slowing you down?
It's really important for those of us in certain leadership positions to be very focused on constructively engaging and working with regulators on what are the issues, what is it they're trying to solve, and how can we constructively engage with them. At the same time, our engineers should focus on innovation and continuing to kind of up the bar on everything we're doing, address what is most helpful for our users.
Google is facing more serious legal threats at this time in the United States than the other big tech companies. How are those conversations with regulators going? And are they frustrating at this point?
Well, there's certain elements that are frustrating because I listened to the outline of some of the proposed legislation, and I think it's inconsistent with some of the priorities for public policy. So, as an example, there's a lot of focus on what is called self-preferencing. Are you putting too many of your own products together? But during the pandemic, 1 in 3 small businesses said they would have failed without digital skills. Why? Because what they were able to do is connect with their users in different ways. So if you go search for a small business, you can then go to a map and you can get directed to the small business. That's a good thing. We have 6,000 small businesses who wrote in and said, you know what, we need these digital tools and skills. Same with a number of things on racial equity, a real surge in searches about where's a Black-owned business near me, and the ability to direct people through search and maps. So I think that what's really important, and that's why I said it's about constructive engagement, let's make sure we understand what they're trying to solve and work with them on what is it that we're trying to address through products so that the products are helpful in the ways that they want.
Facebook has taken a serious reputational hit. Has that had ripple effects or created collateral damage for Google?
Well, I think that whenever there's a backdrop that's challenging, it has ripple effects. But what we're really underscoring is all of the steps and investments that we are making to really protect the ecosystem the way our commitment to our users. So we know how sacrosanct that trust is, and it's all about privacy and what are the steps that we're taking to make privacy protected for our users. What is it that we're looking at to protect content and content moderations?
Google now reaches more than half the people on the planet. Why shouldn't we view Google as a monopoly?
So, you know, I go back to the earliest days when I first learned about Google back in 1998. And in those earliest days, when I heard about this 8th search engine, the question is, why do you actually need it? And back at Morgan Stanley, I was working with our research analyst, Mary Meeker. She actually had her team put up white pages all around the conference room and was doing this comparison. What provided the most responsive results most rapidly? And all of a sudden you could see, well, wait a minute, this Google thing, actually, maybe we do need something new. And that's been the ethos at Google since inception, is just continue to innovate to make this an ever better experience for users. And so if we can deliver on that, which is what drives people here, it's really opening the world for so many people. So that's the intent.
Facebook and Twitter are exploring digital currency. What is your thought on the crypto market? And is there a play for Google?
So we look at it. There's nothing to comment on now. I think we're much more interested in blockchain and the underlying technology and the implications for the business and also for the way we can support our cloud customers. So certainly a lot of effort there.
There's considerable chatter in the crypto universe that Web3 and the blockchain could circumvent the power of Facebook and Google and more. what do you think about the next frontier of the internet?
At this point, I think there are a lot of different things ahead of us that are actually stunningly exciting that enable us to actually continue to address different needs and requirements. Like I look at, for example, in something like health, where I think blockchain will be very valuable when you think about health and health records. There are also a whole host of other areas where the data analytics that we provide are absolutely critical.
Should we make excuses to our employers? Should we tell our, like, if I have to head to a parent-teacher conference or take a kid to the doctor, do I tell my boss that?
You don't tell
no?
your boss. You've got to get over the guilt.
You survived breast cancer twice. What was your biggest fear at that time, and how did you overcome it?
Well, the biggest fear was I wouldn't make it. And I remember when someone at some interview while I was going through chemo said, "Where do you want to be in 5 years?" And I froze because it was, I want to be alive. And I learned a couple of really important things. One, given breakthroughs in medical technology, I learned to love the word manageable. This journey does become manageable, not for all cancers, but for many more cancers. And that gave me a lot of confidence talking with other survivors about it is manageable, get the best care, and just plow through it. I'm very grateful. I'm grateful for all of the investments people have made over the years, but for anybody out there, and I think everybody sadly will be touched by cancer, either themselves or someone they know and love. Many of these cancers are manageable, and just go at it with gusto. So that's what I did.
You're a mom of 3 sons, and I find that especially remarkable because I also have 3 sons. How have you managed that over the course of this, incredible career? How do you find that right mix of focus and free time to spend time with your family and doing the things that you love?
So my kids give me energy. They're remarkable. And I think one of the important things for me is this notion that you do have to have a mix. It's not about trying to find balance, the physics of which is really challenging. I think when people try for balance, they always feel they're failing on something because something's out of whack. So this metaphor that life is like a kaleidoscope, and you need to have different shaped pieces of glass and different color, and sometimes one is larger than the other. And what's beautiful about life is when it's constantly moving around. And so to me, that metaphor has actually been sort of an anchoring principle. The other is you have to put the kids first. So like they know that I'm there, when they need, always. And I think that just making sure that you're setting the boundaries the way you need to. I would say it's much easier today than when I was growing up in banking. When we had a cubicle, there was a computer room, you were anchored to the computer room. One of the many beautiful things about going through this evolution in work is understanding that hybrid works.
So how do we get rid of mom guilt, especially in this new work world? I want to shake my mom guilt. How do I do that?
Okay, so even when you feel it, just say, you know what, it's an investment in my career because I can stay in this longer and be operating at a higher level if I'm really getting the stimulus from all parts of my life. So you've got to drop the mom guilt, and when on the other side, mom guilt with kids, I think they get it. I think they understand what we're doing. And you know, I'll never forget during the financial crisis, at one point I was working on AIG. We went around the clock. I came home to shower that one, like right as we were landing AIG, and my 3 kids had each written me a yellow sticky note with a message on it. And one of them was based, you know, the essence of which was, I get why you're doing this. And they saw it as the right thing for the country. I don't mean to over dramatize what it was, but that's what it felt like at the time. And that level of pride, I still have those 3 stickies right by my bedside because I get it. I get the mom guilt. I wish there were certain elements I could have done differently, but I also see the relationship we have, and they understand what it means to actually be engaged in society and doing something you care about.
No mom guilt.
No mom guilt.
Thank you.
It's not allowed.
Thank you. Should we make excuses to our employers? Should we tell our, like, if I have to head to a parent-teacher conference or take a kid to the doctor, do I tell my boss that?
You don't tell
no?
your boss. You don't tell your boss. Guys don't tell their boss.
So what do we say?
I don't think you say anything. I actually made this point at an event at Morgan Stanley. I'm like, do not tell your boss. You've got to get over the guilt. The only way to move on from it is realize I'm a professional. I do things when I can, and it makes sense, and I get it all done. I just do it on my own timeline. And I actually had a woman who emailed me afterwards and said, I know you said I'm not supposed to tell my boss, so I won't, but I can't not tell somebody, so I'm going to email you. And I'm like, okay, that's step 1 of a 5-step journey. Do not tell your boss. Tell your boss, you know what, I need to do certain things for myself, and I feel guilty doing it, but I get everything done. There's no question. You are so beyond having to check in with people.
Well, thank you.
Do not.
We're in the middle of this so-called great resignation, and people are reflecting and changing and making big decisions. What's your advice to people in this, you know, big evolution, you know, with huge choices ahead?
Well, I think you framed it really well. I don't think it's the great resignation. I think it's the great reshuffle, and people are reflecting on what do they want and how do they want to work and how do they want to live their life. So I think for all of us thinking about what does that mean for our institutions, it is about evolving the way we work, the way we interact, the expectations that we have to say, but I grew up in a cubicle on the 26th floor of a skyrise doesn't work anymore. And so what should we do as leaders? And I think that this generation appropriately, and it's very exciting, expects more from all of us. And so it's not just in how we work, but it is in what we do. And I think all elements of what's the mission, are you delivering on the mission is really important.
Okay, so a few rapid fire questions. Someone you'd love to have dinner with?
Well, I'd love to say my parents because they passed away a number of years ago.
Favorite family ritual?
We do this crazy thing that we've done for years, which is everybody gets to pick where we travel. We come up with the five different locations, and then we all vote, and then we get the grid, and that's where we go.
What's your favorite getaway?
Probably, I would say maybe Iceland was the best. That's an amazing one.
New York or California?
Ooh, so unfair. Well, sitting here outdoors right now and knowing I can do that for the rest of the year is pretty nice, but the energy from New York, so I'm not gonna, it's like I don't pick amongst children.
So in closing, Google's a massive company, multiple divisions, many bets. Where are you spending most of your time now?
I'm spending most of my time on your very important question about capital allocation, because if it really goes to this core point, you've got to invest for long-term growth and making sure that you're investing with the right intensity. I often say I don't want to get to the 2-yard line but not score. So you need to make sure you're investing with the right intensity to support long-term growth. That's the most important area where I would say I spend the bulk of my time. And then, of course, you have to prioritize in order to recycle to support those efforts.
What kind of discussions are you having with Larry and Sergey now about this next phase of Google?
So when they made the announcement about the role change, they were very serious about moving to this board role, and they're amazing board members. Sundar, of course, relies on them for counsel wherever, whenever, but most of the interaction is really around what are we doing at the board level. It's been great.
And you have your freedom to allocate capital as you like.
I work closely with Sundar and Philip and Thomas. But yes, we work as a great team.
So what's the vision for Google then, 10 years from now?
You know, it's fascinating I think I had the same reaction you did when I heard Sundar say search is the biggest moonshot. Yeah. And I think that continuing to find ways to be helpful to users to solve what they need where. So many people are coming online, and is video going to be the way they understand it's going to be about, search is going to be a different type of experience. So much of it's going to be about voice first and language translation. So it's going to continue to evolve.
And what about for you personally? Like where will you, it's been so amazing to hear about your journey, and I'm just curious about your personal growth, like what you feel you've accomplished in the last, since you've been here, and what you hope to accomplish.
I find that the opportunity to try new things and to invest in new things, and as we think about, well, what does that mean for each one of our areas, I think that intellectual curiosity keeps you young. And I think that continuing to learn is like your brain is like silly putty getting pulled in a lot of directions. So to me, it's continuous learning.
Ruth Porat, thank you so much for joining us. It's been
Thank
wonderful
you.
to be
Great
here
to
with
have you on
Thank
campus.
you.
Come back anytime.
Thank you.
So much for doing this.
Well, thanks for doing it. I'm so
course.
sorry I'm late. I know I'm coming late. But
not at all. It gave us more chance to tweak the lights for the 50,000th time. So
you're doing well?
Yes. How often are you coming into the office these days?
About 2 to 3 days a week, yeah. How about you? I guess you come in.
Yeah, I'm in every day now, so no more kids on the set. I have to ask, is your son still mining Ethereum?
He and I literally were talking about it last night. He's like, Dad, you are the one who made me give up on it. I'm like, no, I didn't. But yeah, the thing that's good about this is I think it excites a whole new generation about technology, which is good.
I really appreciate you taking the time.
Well, thank you for doing it, and thank you for coming down to do it.
I'm ready to go when you guys are.
From Google headquarters in Mountain View, California, this is Bloomberg Studio 1.0 with Alphabet CEO Sundar Pichai. Born and raised in India, Pichai had almost no access to a computer until college, but just years later found himself rising through the ranks of the world's largest search engine. In 2015, it was Pichai that Google co-founders Larry Page and Sergey Brin chose to run Google and later Alphabet. Now valued at more than $2 trillion, it's one of the most powerful companies on the planet.
Sundar, it's great to be with you today.
Thanks for doing this.
Great to be here in person. Google just hit a $2 trillion market cap. Alphabet, I should say. Where is the next $1 trillion going to come from?
I've always felt, your market cap valuation is an effect of the value you provide. And I feel fortunate our mission is timeless. There is more need to organize information than ever before. I still feel search is our biggest moonshot as a company. People will want radically more conversational experiences. They will want what we call multimodal experiences. They may speak to search. They may look at something and ask what the information is. Being able to adapt to all that and evolve search will continue to be the biggest opportunity. We are so excited about, be it YouTube, cloud, our hardware products, Google Play. So we're building a diverse set of businesses, and underlying all of it is the investments we are making in AI. We've invested $100 billion in R&D in the past 5 years. And so applying AI in a deep way is probably where we will create the biggest opportunity ahead.
Microsoft is making some big acquisitions. Apple's anti-ad tracking technology is shaking up the industry. What do you make of these competitive moves? Your competitors say they're on the right side of history. Are they?
I look at the fact that there are 3 billion people who have access to knowledge at their fingertips. I look at the opportunity we provide. I look at the skills people are learning through YouTube. I feel it everywhere when I go talk to people. And providing access to information and knowledge, I think will end up being on the right side of history as well.
Your predecessor, Eric Schmidt, told me that he feels the latest Facebook revelations are disturbing. Google also has access to massive amounts of our data. Why should half the world's population, more than half the world's population, trust Google to do the right thing?
We are trying to do more with less data. One of the biggest changes we made was making auto-delete the default setting for new users signing in, and now over 2 billion users have their data continuously being deleted. Look, we rely on trust for people. Every day when people come to Google, they place their trust in us in vulnerable moments. It may be a health issue on which they are trying to understand. There's no more important responsibility we have than doing right by that trust. When we provide Gmail to journalists and realize that their accounts may be under attack by an authoritarian government, that's what motivates us to make sure, be it privacy, be it security, be it trust, we are doing the right thing. Over time, regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important. And so I think, those will be part of the answers as well.
The Facebook fallout, that Instagram can be toxic to teens, for example. Has this raised more or new concerns for you about the impact of technology, tech addiction, algorithms, YouTube even, on our children and their development and their mental health? You're a parent and you also have a lot of power over how this plays out.
Like you, bringing kids up in this modern digital world is something I think all parents are anxious about, rightfully so. I think, it's part of why a few years ago when in YouTube, we were exposed to a set of concerns, we invested. It became our number one priority to work hard at it. The reason YouTube invested so much in developing YouTube Kids as a safe destination for young children and so on. Look, technology is going to play a big role in helping give children the next wave of opportunity as well. So the answer is to develop it responsibly. We have changed our balance in these areas and saying we think about content responsibility first, and then the pace of development or new features in areas like YouTube. And so that's how we have approached it for a while.
Facebook and Microsoft are all in on the metaverse. What do you think about the metaverse? What's Google's metaverse strategy?
It's always been obvious to me that computing over time will adapt to people and people adapting to computers. You won't always interact with computing in a black rectangle in front of you. So just like you speak to people, you see and interact, computers will become more immersive. They'll be there when you need it to be. So I've always been excited about the future of immersive computing, ambient computing, AR, And we are
Does that count as the metaverse? Is that what that is?
Metaverse is, I think it means different things to different people. The way I think about it is evolving computing in an immersive way with augmented reality. As part of that, there'll be many experiences, some of which will be immersive, interactive virtual worlds, which is the metaverse concept. And but I think this doesn't belong to any company, right? I mean, this is the evolution of internet and the web, the internet. All of it will continue to evolve.
Google was famous for its campuses where you could go and never leave. You had everything you ever wanted. Now you've said they can be flexible. They can work from home. They can work at the office. They can be hybrid. They can work remotely permanently, perhaps. Are you committed to really letting them do this forever? And if so, how does that change the future of work and society?
Look, we've really embraced the fact that the future is going to be flexible. At Google, we've always tried to give agency to our employees. But we do realize the importance of bringing people together, the creativity, community, and collaboration that comes with it. So the balance we are striking is this notion of 3-2. But we are giving the strength of our company is we have more locations than most other companies. So we're giving people choice to move anywhere in the world. 4 weeks they can work from anywhere. Mm-hmm. We're going to accommodate 20% of our workforce to be remote over time. So we're going to embrace that flexibility and
forever.
Forever, yeah. And we're committed to it. Through it all, it forces us to design better products. And since people use Google Workspace to run their companies, I think it gives us a chance to innovate and bring all that out. I think there is so much value in giving people more flexibility between their personal and professional lives. And I think it'll lead to people being happier. And I think companies can be successful in that model. And so we are trying to get the best of both worlds, but embrace the flexibility and see where we go.
How confident are you that when you look back, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it.
You grew up in India, you lived through droughts, water was scarce. How has that experience shaped your feelings about the urgency of stopping climate change?
I grew up in Chennai, India, and a big part of my childhood was, really pretty severe water scarcity. We would get water trucked in for the streets and stand in lines and carry a few buckets of water home. There was no running water for many years. And, but fast forward a few years ago, Chennai had 1 in a 100-year flood, which was a very extreme event, kind of drove home. That combined with a few years ago, waking up to the orange skies here in the Bay Area, seeing the look of concern on my children's faces and having to explain it, all kind of drove home in a deeply personal way for me. So I think it's the most defining issue we all face, and definitely something very motivated on working towards.
I remember waking up to those orange skies too and having to have that same conversation with my kids. Do you think the commitments at COP26 went far enough?
I'm encouraged by many things. We have to tip our hat to the people who are working super hard. The issues and the trade-offs are genuinely difficult. You have to keep the economies growing. It really matters. But at the same time, it's a pretty severe, urgent issue. So I'm encouraged by the progress. I think it builds on the Paris Agreement. So I can see the forward progress. There is the deep anxiety that it all may not be enough. But we have to be optimistic and keep pushing.
Google has set some aggressive targets to run entirely on clean energy, to be the first tech giant to do so 24 hours a day. How confident are you that when you look back on this time, let's say a decade from now, you'll be able to say Google did enough to help save the world?
We are putting so much energy and resource into it. It's always been kind of a founding value for us. We've been carbon neutral since 2007. We've been matching our energy consumption with renewable energy over the past few years. So this, we are now pushing, it's a moonshot to be 24/7 carbon free. That means every search you do, every email you send, that we can do it carbon free. We were at 61% in 2019. The number is now 67%. We have set our goals to be 100% by 2030. And to do it globally, that means we have to solve new things which we haven't done before.
Mm-hmm.
Wind and solar alone won't be enough.
Mm-hmm.
We just started geothermal in Nevada. We will be investing in newer technologies, including carbon capture, et cetera, over time. So that's what excites me. We are a technology company at heart. So there are many answers to this problem. Some of it is that we are going to have to innovate our way out of it.
Mm-hmm.
And we want to push as hard as possible in doing that.
Our Bloomberg New Economy Forum is happening this year in Singapore, and the Asia Pacific region is one of the fastest growing internet economies on the planet. Where do you see the most room, the most opportunity for Google to grow there?
It's such a fitting time frame. I'm glad you're focused on the region. It's the most vibrant region we see. It's our 20th year since we opened our office in Tokyo. It was the first office outside the Bay Area. You have 2.5 billion people on the internet. There are many areas in which they're leapfrogging trends which are here and embracing the future. Digital payments is a great example. So many of our products originated from APAC, Google Maps, Google Pay. A lot of our journey to bring computing to more people is playing out in Asia as well. I am excited about also the work we are doing through cloud, because the companies there are rapidly transforming themselves digitally. So a chance to provide that is something very exciting for us. So super dynamic region. I feel like we are learning as Google, being in the region. And so I think it'll transform. The first 10 years, I would have said we took products here and brought it to APAC. Over the past few years, we are beginning to build things there. And some of our future global products will be APAC first and rest of the world later.
You can't talk about APAC without talking about China, and you're facing stiff competition from Chinese tech giants there and beyond. What should U.S. policymakers know about competing with China?
There's a lot of conversations about U.S. and China. The competition is fierce. When you look at areas like AI and quantum computing, where we are investing a lot, the Chinese companies are neck to neck. What I think about, I was encouraged by the news coming out of Glasgow about the U.S.-China agreement on climate. To me, while we talk about all the areas where we are competing, some of the biggest areas which are common challenges for all of humanity. The pandemic was one. AI and AI safety over time will be a shared one. Obviously, sustainability is another area like that. So I think these are all areas in which the countries can come together. And so I think that's a way by which we think about as, when we compete on the internet, and there may be different visions of how the internet plays out. So I see opportunities both sides.
What are the chances that Google Search will ever come back to China, or that Google Cloud would ever come to China?
Today we don't provide most of our signed-in services in China, and I don't see that changing. But there are ways, as I said, in areas like AI or sustainability. I think there'll be opportunities for us to work together. Through cloud, we will support multinational companies which have presence everywhere, and so maybe there are opportunities to work that way as well.
AI is advancing at an astonishing rate, and it is hard to understand sometimes what this really means. In concrete terms, how will our lives look different, let's say 10 years from now, as a result of AI?
Done correctly, in many ways, it's going to be helpful to you. You'll take it for granted. The same way today, for example, in India, over 1/3 of the queries on many phones come through voice. That is something people take for granted. You can do it. So over time, you'll expect to speak and be able to understand any language in the world. And those are all ways it's going to make it better. You may go to a doctor's office and go through a scan, and the system may be prioritizing for the radiologist so that they don't miss some important things, maybe giving them a second opinion. So these are all ways in which it will seamlessly start playing a role, and I think we'll see the effects of that.
You mentioned if done correctly, and there are concerns. There are fears that AI will replicate the worst of society, even under Google's own roof, from your own researchers. What scares you most about AI? What keeps you up at night?
It's the most profound thing we are working on as humanity, and anytime you're developing technology, there is a dual side to it. I think the journey of humanity is harnessing the benefits while minimizing the downsides. The good thing with AI is it's both going to take time. I think I've seen more focus on the downsides early on than most other technology we've developed. So in some ways, I'm encouraged by how much concern there is. And you're right, even within Google, people think about it deeply. We publish a lot of research. I think it's more important that there are outside academic institutions, governments, nonprofits looking at this issue as well. So I think it'll be an issue which will have a lot of attention, which gives me a lot of comfort as well.
You said you'd pick up some new hobbies in the pandemic. What did you start?
Cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
You have presided over Google through massive social movements that reverberated in and outside the company. What have you learned as CEO since the walkout?
For me, it was a moment. I think it changed the company for the better. We've always been committed. It gave us an insight on what more we could do. We undertook deep commitments, and the biggest, overall in diversity and inclusion, I think if you're committed and you actually put in the effort behind it, you can make a difference. Now we have stated clear goals. we are on track to meet those goals. But it forced us to think about new answers. So for example, tech companies used to talk about the pipeline problem, but we are now going to places where the talent is. We are working much harder. So going to Atlanta, going to DC, going to Chicago, going to New York, that's improving our diversity and representation at all levels.
The war for talent is even more competitive now in this new world. What are you offering? Elon Musk has said big tech is a place where talent goes to die. How do you respond to that?
Look, I look at the fact that we are looking to hire 30,000 people next year. I look at the impact we have on many people coming and working in the latest cutting edge things. And many people come in, people leave Google. We are proud of people who have left Google. I think there are over 2,000 companies that have been started by whom we call as Zooglers. I'm equally proud of that, right? I think we are one part of a big system, and I think I'm proud of the role we play in bringing in people and the impact they have over time in the outside world.
All right, that's most of the heavy stuff out of the way. We're going to do some rapid fire just to get to know you a little bit better. You said you'd pick up some new hobbies in the pandemic. What did you start?
Pizza, cooking pizza, just learning to cook, which I was never good at. I've gotten a little bit better.
Cricket or soccer/football?
Wow, it's tough. Both. Please don't make me choose.
Okay. Squid Game or Ted Lasso?
I watched both, though Ted Lasso is much more calming, and so I'd rather take Ted Lasso over Squid Games any day.
I know you're a voracious reader, so what's the last good book that you read?
I've been on a podcast binge. So a lot more podcasts than books nowadays.
Okay. Favorite videos you watch on YouTube with your kids?
A lot of music videos. This whole notion where creators are watching other things and commenting on it, it's a trend which my kids are really into, and I've kind of gotten used to it now. So, watching other games, etc. It's a phenomenon.
Screen time policy that's worked for you as a parent, and what's not worked?
I've kind of given agency to my kids. The only thing I tell them is that I can look at their digital well-being once in a while with them, and so.
How do you do that?
I ask them to show it to me, and they show it on their phones. So, so that's pretty much the only thing. So beyond that, it's agency and talking to them about it and making sure we are spending time doing other things.
And making sure they develop good habits,
That's
basically.
Right, yeah.
Metaverse or real world?
Done correctly, you shouldn't feel the need to make a choice. You always want to be present in the real world, and when you feel the need to do something, you want to do that. But I do think presence and the realness of the real world will end up mattering for humans for a long time.
Do you own any crypto?
I wish I did. I've dabbled in it, but in and out.
In and out. Okay. Larry and Sergey, I'm not going to make you choose. How many times a week do you talk to them?
I talk to them regularly. It kind of ebbs and flows. And so there are times we get excited about something and we spend a lot of time talking it through, but it depends on, what I need.
A piece of advice you wish you had in your 20s and a piece of advice you wish you had in your 40s.
20s would be, being patient. I think when you're young, you're very impatient, which is a great thing. But sometimes you do amazing things by slowing down and being really focused and doing it over a period of time. And so I would advise the younger version of me to be more patient. Maybe at 40, I would say, when I look at climate, I want all of us to be impatient. So, I feel like when there's an urgency towards something, I think the world needs to be impatient. So that's the advice I would give to an older version of me.
How much do you personally wrestle with the decisions that you have to make? And how much longer do you see yourself being the CEO of Alphabet? Not just Alphabet, but also Google.
Yeah. On the first one, there are moments we all have to make tough decisions, and some decisions weigh on me. But it's a privilege to do it. I have very good people helping me think things through. So I think the combination makes it all, fine. On the second thing, I'm so energized by the things we need to do. I didn't have much access to computing growing up. It changed my life a lot.
Mm-hmm.
The one laptop per child goal really motivated me to come into technology. And when I look at last week, us launching an affordable smartphone in India, the chance to bring the next billion users in Asia and in Africa online, that gives me a lot of energy.
All right. Well, we'll be watching from afar. Sundar Pichai, thank you so much for joining us. It's
Thanks,
wonderful
Emily.
to
Pleasure
have
to
you
be here.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Jeff Bezos shocked the world when he stepped down as CEO of Amazon. Less shocking was his choice for successor. Andy Jassy was not only one of his longest tenured lieutenants, but the architect of Amazon's multi-billion-dollar cloud business, Amazon Web Services, a moonshot that helped transform Amazon into not just e-commerce, but enterprise juggernaut. Jassy then needed to find his own successor, tapping a former colleague who helped grow AWS in its earliest days, but had since left to run Seattle software giant Tableau. His job, to continue the reinvention of AWS and, in turn, Amazon. Joining me on this edition of Bloomberg Studio 1.0, new AWS CEO, Adam Selipsky.
You worked for AWS for 11 years and then went on to become CEO of Tableau Software in 2016. Then you get a call from Amazon to come back and run AWS as CEO. Tell me about that call.
Well, I was having a one-on-one at my prior company, and my Apple News alerts went off like everybody else's did, and it said Jeff Bezos is taking on a new role, and Andy Jassy is taking on the CEO role of Amazon. And of course, Andy and I worked shoulder to shoulder about 20 feet apart for 11 years. So of course, I reached out and congratulated him, and we started talking. And the conversation turned to some of the possibilities. And next thing I know, a little while later, here I am back at Amazon, absolutely delighted and honored to be the CEO of AWS and helping to shepherd this amazing business for our customers.
In that process, did you talk to Jeff as well?
Yeah, I had some communication, but it was principally with Andy, who of course was knew the AWS business best, and of course was taking on the CEO role. But yeah, there was contact, as you might expect, with a small handful of other people.
So what did Andy tell you he wanted in the next chapter for AWS?
Andy reminded me, not that I needed reminding, but that it is really still day one for AWS and for our customers. It is still so early in this business, and we shouldn't think that just because the business has grown rapidly, or just because we're currently the leader in the cloud, that it's anything close to mature. And so he really reminded me that we have to stay hungry, innovate as quickly as we ever have done in the past.
You're about half a year into the job.
Mm-hmm.
What changed while you were gone that surprised you?
Well, I think that so many more customers have really adopted the cloud and have really decided that they're going all in. So, I mean, it was a pretty decent-sized business when I left, but it's really grown, and the customer base has really expanded. And so now we have very deep relationships at the CEO level, the CIO level, across every country, every industry, every use case, and we're regularly interacting with the most senior people at our client organizations.
So you were working at Real Networks
Yes.
in the early 2000s,
Mm-hmm.
and I understand you were offered a job at AWS without even really knowing what it was. I guess AWS was in stealth mode.
Well, it was very secret, so it was hard that the company didn't want to talk too much about it, but of course we had to talk a certain amount about it. So the call I got went something like, we have this initiative to turn the guts of Amazon inside out and expose it to other people. And it sounded intriguing, although I confess I didn't fully understand what that was all about. So I came in and started talking to Andy and a few of the other senior leaders, and eventually to Jeff. And I would have to say that even by the time I took the job, I thought I mostly understand what they're talking about, and it sounds like a good idea, and I'm in. But I also was like, well, we'll just have to see how it goes, and Amazon's a big place. And so I think we got a lot of intent to succeed here, and that's the thing that impressed me, was Amazon really had the desire and the intent and the belief that this could be a really good business.
AWS comes out of stealth mode and is the first to market with a cloud infrastructure service in 2006. How important was that first start? And do you think AWS still has an advantage today because of that?
I think the time to market advantage that we had, which was probably honestly 5 to 7 years head start before other companies really started to take this seriously, was an enormous. Frankly, it was just one of the biggest things that happened to us in the early years. Because at the beginning, a lot of people didn't get it. I would get asked a lot in 2006, so what does this have to do with selling books? And I even had a slide with kind of a pile of books on it and a question mark next to it. And the answer was, it has nothing to do with selling books, but the technology which enables us to sell books, being global, being at a massive scale, being secure, being low cost, being highly performant, all that technology has everything to do with offering these types of services externally.
Now, AWS isn't a scrappy startup anymore, and you do have big rivals, even though AWS is still the leader. Microsoft and Google are big rivals. How do you make sure that being big doesn't slow you down?
It's a great question, because we are currently the leader, and I mean, depending on which third party you look at, we're probably a little bit more than twice as big as number 2. And it's really important to continue to act as if we're insurgents, and to be insurgents, and not to start to act like incumbents. And I like to talk about actually managing the business. We want our senior leaders to be managing product and managing customers. And I think as you get bigger and you put more and more layers into your company, it's all too frequent that you start managing math. You start managing ratios and percentages and growth. And I think it's a real disease if you stray away from really focusing in a deep way on the product you're building and in a deep way on what your customers are telling you. And so we try and organize, both with our org structure as well as just with our culture and what we choose to focus on really making sure that everybody is thinking about one or both of those two things, product and customers. And if you keep even the most senior leaders engaged at that level, then all of a sudden you maintain the urgency and you keep acting like an insurgent. We got to feel that urgency every day.
So keep acting like an insurgent. That's the motto.
Absolutely, and structure yourself and build a culture that allows you to. It's one thing to say it, but it's easy to say it, but it's much harder to put in place the enabling mechanisms that enable you to do so. And we focus a lot of effort on those mechanisms.
Now, do you think the cloud keeps getting bigger and that AWS and Microsoft and Google just get bigger pieces of an ever-expanding pie? Or at some point, does it become a zero-sum game and that fight for market share becomes more brutal and more bloody?
Well, I mean, this is a very large market segment. If you look at the global IT spend, it's in the trillions of dollars. I've seen estimates like $3 trillion. It doesn't really matter how many trillions it is. It's very, very large. And we've always believed that this was too good a market segment opportunity for there really to only be one winner. And sure enough, you've seen robust competition emerge, and we all compete vigorously. But the segment is just growing so rapidly that I think really for us, we believe that the winning business strategy for a long time to come, and I would maintain forever, is to focus not on the competitors, but to focus maniacally on customers and wake up every day understanding exactly what it is that they need us to build next, and then work backwards from there, back internally to how can we build those things. And if we do the best job at building the most quickly the things that are most important for our customers, then I'm really not worried about what the competitors will do.
You worked 10 feet away from Andy Jassy in the early days. Tell us something about the Amazon CEO that no one knows but you.
You're going to get me in trouble, aren't you?
worked 10 feet away from Andy Jassy in the early days. Tell us something about the Amazon CEO that no one knows but you.
You're going to get me in trouble, aren't you? I grew up in Seattle, and Andy, coming from New York, has this fascination I don't understand with New York sports teams. So I've had to endure that for a lot of years. New Yorkers, yeah. So what are you going to do? Although he's I think come to adopt some of the Seattle teams, particularly the new hockey team, the Kraken here.
As he should.
As he should, exactly. Exactly.
So how do you expect Andy will be different from Jeff? Or how has Andy already been different from Jeff?
Well, I think we're all different as leaders. I think it's all important that it's important that we all bring our own stamp to it and operate within ourselves. I don't think I would be a very good Andy. I don't want to presume, but I would assume that Andy wouldn't be a great Jeff, because Jeff's Jeff, Andy's Andy, and I'm me. So I think that Andy will certainly bring a great depth of experience from AWS, which is one important part of the business, and having operated that business for so long. And I expect that'll also give him an opportunity, although he was involved in other parts of Amazon, certainly for a number of years. We'll be able to bring a fresh perspective to the whole company, just as I hope to bring to AWS. And I think that fresh perspective is often helpful. I think just the mere act of change is useful for the business, for customers, for employees, and just to shake things up a little bit. So I think just a fresh perspective.
How will you be different from Andy?
Well, I think that the world around us is changing so much that we're going to have to be different. It doesn't matter what we did yesterday. And right after I joined, we actually added 2 new leadership principles, which is very exciting. One's around striving to be Earth's best employer, and the second around focusing on the fact that success and scale bring broad responsibility. And those are things about which I personally am very passionate. And so I really personally look forward to digging in and helping the company to figure out what are those things that we have to figure out. Where can we innovate to be Earth's best employer? And then also to figure out externally, what can we do to really be great citizens of our local communities, to be great citizens of our national communities, and to be great citizens of the global community. And I care a lot about those things, as a lot of other people do here, but I plan to put a good amount of energy and time and focus, and hopefully help Amazon innovate in all of those areas.
How closely do you work with Andy day to day? Does he, regularly weigh in on AWS decisions or not?
Well, he's got a pretty broad scope of things to worry about now, so he's got a pretty intense day job, I believe. So he's really focused across the company, as you would expect him to be. But that being said, obviously AWS remains an important part of Amazon, and so we touch base regularly, be it in person or via email, just on the most important things going on in the business.
Does Jeff ever weigh in on AWS decisions?
Yes, I mean, really from the beginning. Jeff was involved at the very, very beginning at some of the most fundamental decisions. How do you price EC2? What do you name S3? What does the detail page look like? Obviously, over time, the business grew, and but Jeff was always available when we needed him, and I certainly anticipate that'll be the same going forward.
So is he still available now? And what do you understand that Jeff's priorities are?
Sure. Well, I'll let Jeff speak to his own priorities, but certainly Jeff has been available when, for example, we've been doing our annual planning cycle, as many companies have, and it's been great to have Jeff weigh in on really where we're heading for the next year and beyond, and to just make sure it's easy to get focused on the details of the business, and it's great to have multiple people who can help you pick your eyes up a little bit.
Now, you joined AWS in the middle of a pandemic. You came back to AWS in the middle of a pandemic. That's hopefully moving into the rearview mirror. Moderna is one of AWS's biggest customers. If it weren't for the cloud, if it weren't for AWS, would we have had a vaccine as quickly as we did?
I've got to tell you, Emily, it's been an absolute privilege for us to work with Moderna, because what they're doing obviously is literally life-saving, and they've been so innovative and so creative. So Moderna took a drug development process to get to a vaccine candidate. That process would typically have taken them 20 months. And doing that on AWS in conjunction with all the innovation on their side reduced that 20 months to 42 days. 42 days to get the vaccine candidate, the mRNA vaccine candidate for COVID-19. And that was really running multiple parts of Moderna on AWS. So if you look at the drug design part, they had their drug design studio running on AWS, all the way to manufacturing with the new digitized manufacturing that they call their digital manufacturing platform. So it's really end-to-end, and the ability to use massive amounts of resources and to pick the exact type of service and capability for each part of the job, and to really bring the full set of resources to bear. In addition to not having to focus on the IT and the infrastructure and the technology, and rather letting Moderna focus on the all-important job of drug discovery. So working in partnership, it was just magnificent to see what they accomplished.
Since you joined AWS, a number of longtime AWS leaders have moved on to Microsoft, to Stripe, to Tableau. Does that concern you?
Well, actually, retention has been very good. If you mentioned the senior leaders, if you look at the VP plus ranks, the VP and above ranks at Amazon, the average tenure is over a decade, over 10 years. So that's actually very, very strong retention. So of course, you're always going to have some level of people coming and people going, and at the end of the day, that's actually healthy for the business. You want new perspectives to come in, of course, in the right proportion.
Amazon has opened an investigation after 550 employees supported a petition claiming a culture of discrimination, harassment, bullying, and bias. What's the status of this?
Well, we are incredibly focused, and I personally believe it's incredibly important to really have a very diverse, inclusive and equitable environment. And we're going to make sure that whatever it takes that we've got that. So we believe that we're really doing a lot of things to deliver on that. And we've got a lot of innovative efforts around bringing in a diverse workforce, which we have to have both because we're going to serve our customers best. They're diverse. We have to match that diversity. And also, I just believe it's our responsibility and it's the right thing to do. Anytime there is any possibility that things are not, something has not gone the way we want it to, we're going to investigate it thoroughly. That's what we're in the middle of doing in this case, and we'll make sure that we're operating in a way that's consistent with our values, and that's always the only goal.
If you could rewind to the early 2000s, the earliest days of AWS, is there anything you would have done differently to build an inclusive culture, to start with a more inclusive culture, to make sure that it didn't become a boys' club?
Well, I don't think that's what we have. I think that we do have a really fun, exciting, innovation-led, and inclusive culture. And that being said, these are hard problems. I think we've done a lot, but we are nowhere close to where we need to be. We're going to be restless and dissatisfied with our progress on DE&I, just as we are with every other part of our business.
Mark Zuckerberg is making a big bet on the metaverse. How big do you think it's going to be?
It's such an interesting sentence. The metaverse is real.
AWS has the biggest trove of sensitive corporate data in the world. I'm curious how you think about the balance between data and privacy and freedom and civil liberties in the modern era. I mean, there are governments, there are nation states around the world that want that information. Hackers and criminals want that information.
Well, we're very clear to start with that our first job is security. We often say security is job zero. It was on the first page of our operating plan pretty much every year that I can remember.
But what about when governments request that information,
So,
or subpoena that information?
Sure. Well, we are very clear that our customers' data is their data. So the data belongs to our customers, and not everybody operates that way. We are not going to look at customers' data. We are not going to compete against our customers using their data. Their data is their data. And furthermore, we have all sorts of architectural best practices that our customers should be and are using for any sensitive data. And so a lot of that really relies around encryption. And so we've built a lot of different encryption capabilities so that any sensitive data, which could leak for any reason, be it to a government, be it to a hacker, be it to anyone else, any form of security breach, that it's encrypted and useless to anybody else. Given the broad array of encryption solutions that we provide, it's actually very doable and powerful for our customers to safeguard their data that way.
Mark Zuckerberg is making a big bet on the metaverse. Is AWS going to have a role in the metaverse?
I think AWS already has a big role in the metaverse. So I think the cloud enables the metaverse. So if you think about all of the compute capacity, all of the storage, all of the machine learning which is required to create compelling and delightful end user experiences in the metaverse, a lot of that is already today running on AWS. So if you take Epic Games, for example, so Epic runs Fortnite, massively popular game, 350 million users worldwide, and Epic runs almost everything on AWS, from the back-end servers to the analytics and everything in between. So I think that's a great example of the metaverse at work, and all that's happening today on AWS. And we anticipate that's only going to grow really rapidly in the future.
How big do you think it's going to be?
Such an interesting sentence. The metaverse is real, and yet it's virtual at the same time. I think that if we continue to do what we've always done, which is to provide a technology platform that allows organizations to transform, then these gaming and entertainment and social media and other companies will be able to do what they do best, which is to focus on innovating on behalf of their end users. And I think that the metaverse and many other areas will be rich with invention.
So this next conversation will happen in the spheres, in the metaverse. That's where we'll next meet. How about that?
That could be. I'll meet you in the metaverse.
All right, see you there. Now, I know that climate change, and stopping climate change, and your data center footprint is a big passion of yours. How fast will Amazon's data centers get to carbon neutral?
Amazon is already the largest purchaser of renewable energy in the world. And we intend to be 100% renewable energy by the year 2025. We had originally said 2030. We actually accelerated that by 5 years to 2025. And that's part of our broader climate pledge that Amazon created, and to which we've now gotten 200 other organizations to sign on to. And the climate pledge is to be net zero carbon by 2040, 10 years ahead of the Paris Accord target. Yeah. So we know how to do some of that. Other part are going to require invention, but we really look forward to it, and I think it's one of the most important things we can do for our generation.
Amazon counts some of the biggest oil and gas producers as its customers. Isn't that a contradiction? Should you be kicking them off your platforms?
Those customers are trying to get to sustainable business models which rely on new energy sources. And so many of those customers are figuring out how do they get to wind, how do they get to solar, how do they get into batteries, all new business models relying on renewable energy. And I think rather than abandoning them and having them maybe dig in more on fossil fuels, if we can enable them to move faster, to be more innovative, and to be more agile in figuring out new business models, new technical solutions, experimenting, failing fast, and moving on to the next idea, then the whole world will get to the renewable energy solutions that we need.
At this year's reInvent conference, it'll be the first time that Andy Jassy is not giving the keynote. You will be. Give us a preview. What can we expect to hear?
I think we're going to have a lot of really exciting announcements. So I think across our service portfolio, you'll see that. We have a lot of exciting partner announcements. The partner ecosystem still remains, to this day, so important to what AWS is doing, and we have some great announcements lined up for that. And then I think people are going to want to see that we're making it easier and easier for them to consume the cloud and to work with AWS. And so we're going to continue to, in addition to building more powerful basic capabilities, we're going to continue to make it easier and easier in a variety of ways to interact with AWS.
Adam Selipsky, CEO of AWS, thank you so much for joining us.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
All right, so here we are in front of the elephants.
Since this very first YouTube video was uploaded 16 years ago, the world's most popular video network has exploded to more than 2 billion users in the farthest corners of the planet, now raking in billions of dollars every year. It's evolved a long way from cat videos to become a one-click journey to the center of the zeitgeist, pop culture, and kid culture, amplifying some of the brightest and sometimes darkest traits in all of us. While YouTube has elevated a generation of creators and educated and entertained generations of viewers, it's fought misinformation, terrorism, racism, and violence many clicks along the way. Lately, YouTube's biggest battles are focused on eliminating COVID and vaccine misinformation and keeping the platform safe for kids and teens. On this edition of Bloomberg Studio 1.0, we rewind to talk about where YouTube has been and fast forward to where it's going next with one of the longest tenured employees and women at Google, the CEO of YouTube, Susan Wojcicki.
It's been 5 years since we last talked on camera, and we have a new president. We are weathering a pandemic. The most watched video on YouTube is
Baby Shark.
Baby Shark. So a lot's changed since 2016. How do you feel about YouTube 2021 versus 2016?
I feel good about it. It's definitely been a while, and in technology, things move so quickly. So a lot of things have changed since 2016. And I mean, overall, I've been really pleased that we've continued to grow our ecosystem of creators. We've invested a lot in responsibility, and that's been a really big focus for us. And we've weathered through a pandemic and a lot of hard challenges, but overall, I'm feeling really good.
You've been at Google for 20 plus years, going all the way back to Larry and Sergey in the garage. You've been the CEO of YouTube for 7 plus years. How has your job changed in that time?
Since I joined being the CEO of YouTube, I would say one of the biggest things that has changed certainly has just been maybe the recognition of the importance of digital video. So when I first joined, actually a lot of people would say, oh, like, why did you join? I was running ads beforehand, and that's been the main way Google generates revenue. And so a lot of people said, like, why did you leave that and go to YouTube? But I always believed in digital video. And I believe that now we see that the world also believes. We've seen a lot of adoption of digital video and the benefits that that can have.
You've championed this diversification strategy at YouTube since you started. What's working and what's not working?
Well, our main way of generating revenue is from advertising, but we also have really grown our subscription revenue, and that has been really, really important for many different reasons. So that has enabled our users to have an experience where they can have music, YouTube Music and Premium. We just announced the 50 million subscribers that we were really excited about. But we also see other ways that our creators generate revenue. So our creators, for example, generate revenue with channel subscriptions. They may sell merchandise. We also have things like digital goods, so like super chat, super thanks. And so we've basically diversified the number of ways that our ecosystem is generating revenue.
The original tagline for YouTube was broadcast yourself, and that concept has exploded. You have ordinary people in the spotlight. When they grow up, they want to be an influencer. They want to be a YouTube star or a YouTube creator. What do you see as the future of the creator economy?
I see a lot of possibility with the creator economy, and because I see that many people have a lot of interest and they have a lot to offer, and beforehand they wouldn't have been able to have shared that with the world. And so there's so many people, depending upon what their talent or their interest is, whether it's a sport or cooking or gaming or hairstyles, that people have come out and really been able to share that and create a lot of jobs. So we actually see like we actually saw a 35% increase in the number of creators that are generating six-figure income out of YouTube and in the last year. And so that's just an example of like how the creator economy is continuing to grow.
Well, and for years, YouTube was the only company that actually paid creators, but now a lot of companies are paying creators. You know, Facebook and Instagram, Snap, TikTok. How do you see that competition playing out? Who wins?
Well, it is a competitive landscape, and in general, competition's good. It makes everyone work harder, and that's good. I mean, we look at creators and we say they're going to come to us if we do the best job. And creators come to us looking basically for fame and fortune. Like, how can I have a skill or I have a talent, something I want to share with the world, like, and YouTube can help that be known, can help them provide that fame, but also we can generate revenue for them. And so as long as we're doing a good job of that, creators are going to come to us. If we start to fail, then they're going to leave us and they're going to go to another platform. And so we just need to work really hard to make sure that we deliver that for our creators.
A year ago, during the Black Lives Matter protest, YouTube made big commitments to Black creators in particular. What's been the progress there? And how do you see YouTube, the potential for YouTube to be used as a tool for social justice?
Well, so we'd made an announcement that we were going to do a $100 million Black Voices Fund. And so we're continuing to develop content there. But one of the other things, and I think there's been a lot of great content that's come out, and we'll certainly see more. But you know, because YouTube doesn't have any gatekeepers, like you can just post and become a creator. You know, we have seen a lot of people of different backgrounds and underrepresented backgrounds become creators and have audiences. We never really measured it beforehand because we didn't have a way. And so one of the things that we've done is we've enabled creators to now tell us what backgrounds they affiliate with, so we can have a better understanding of how they're doing on our platform.
Let's talk about YouTube Shorts. It seems to be a top priority.
Yeah.
We all know that TikTok is on the rise.
Yeah.
How important are YouTube Shorts to the platform, to the company?
So YouTube Shorts is very important. We see that creators and users want to watch all types of content, long form, short form. It turns out that the first video that was actually ever uploaded to YouTube, me at the zoo, was an 18-second video. So it was a short form video. And we have lots of short form videos, and we've had it way before TikTok did. But what we have really been leaning into more is just enabling those to be found. And then a lot of the creation tools. And so bringing a lot more mobile creation is really important for us going forward.
Did you notice that viewing time was being lost to TikTok? Did you see that trend? And do you see TikTok as a sort of existential threat?
I mean, we definitely see many competitors in this space. What we're just focused on are our own metrics, like do we see our users engaging? Where's our opportunity? And we're always looking around and seeing what our competitors are doing. And if they're doing something that we think would be good for our users and our creators, we're also gonna look at how we can improve our own economy, creator economy, and what's good for our users.
I think a lot of people, we talk about vaccine hesitancy and they blame social media. They say YouTube's not doing enough.
One of the big things for us is to continue to work with public health experts to get their messages across.
Today's your big day. Are you excited?
Mama is tired.
6 feet apart.
You have to feed your creativity.
Built this tree house.
You guys ready for the movie?
See what we can do.
At this point, YouTube has become a hub for discovery, for information, for, it satisfies our curiosities, right? That comes with a lot of inspiration, but also with misinformation. When it comes to vaccines, vaccine hesitancy, videos that cause a public health risk, where do you want to see YouTube do better?
We've taken responsibility very seriously. It's been one of my top priorities. So first of all, we want to make sure that if there's information that violates our policies, we came up with 10 different policies around COVID. Then if that's a violation of policies, then that's something that we'll remove. We removed over 1 million videos associated with COVID, but we also want to make sure that we're raising up information that we think that come from trusted and authoritative sources. And we've really been able to do that.
I think a lot of people, we talk about vaccine hesitancy and they blame social media. They say YouTube's not doing enough, How do you respond to that?
Yeah, I mean, I think, well, first of all, we're always learning. Just to be fair, we're always thinking about how can we do better. We're looking at the feedback and working with public health experts across the board. And, I think one of the big things for us is to continue to work with public health experts to understand, what are the ways that we can partner with them to get their messages across. And I really believe that is something that's really changed is the evolution of bringing creators, musicians, experts talking about public health. We never would have seen that before the pandemic.
How much do you internalize the criticism of YouTube's content? Do you take it personally? And how does that influence the decisions that you make as CEO?
I want to be doing the right thing. And I care about that. I care about the legacy that we leave. I care about the world that we leave to our children. I care about how media is consumed by the next generation and by everyone today. And so I really have put a lot of time and effort to make sure that we are acting responsibly. And there's always a balance between the free speech and the right, but being responsible and taking down content that we think could lead to some kind of real world harm. And so, I mean, sure, I think whenever you're in a position like that, there's going to be a lot of criticism. But our goal is just to continue to talk to experts and evolve.
And how do you make decisions in those tough moments where it's a tough call? Like, how much of it is making a decision or leading by consensus, and how much does it come down to you?
The goal is that when we have tough decisions, they are like improvising in some way. Like, we've made a concrete set of decisions beforehand, and then we're looking and saying, is this something that meets our standards? Is it a violation or not a violation? And if it seems like there's some set of issues with the content that we have on the platform, we're going to go back to experts and then reevaluate. Should we be making changes to our policies?
YouTube helped keep a generation of children connected, educated, entertained, distracted through the pandemic. What have you learned from that experience, and what do you see as the potential future of YouTube as a tool for learning, as a tool in schools?
When I meet people and they find out I'm the CEO of YouTube, almost always they tell me about something they learned on YouTube or something their family member learned. So I see that as being a very significant part of YouTube. And during the pandemic, we certainly saw that a lot more education went online, and we had all the homeschooling. We had people who had to also just learn a lot of skills that they hadn't learned beforehand. But probably the biggest thing that we also learned was and that I really saw, was a need for us to continue to work with educational institutions, and the need for us to be able to integrate with some of the learning tools that the kids are all using, because they are using YouTube, and there's a lot more that we can do to really help educators have YouTube be a key part of the curriculum.
My kids are on YouTube a lot, and sometimes more than I want them to be, and sometimes it's super productive and they're learning something cool, and sometimes it's not productive at all. How are you innovating to make the time that kids spend on YouTube more valuable and, of course, safe?
It's very important to me as a parent to make sure that we're giving parents options about what they want their kids to see. And that's one of the reasons that pretty much as soon as I got to YouTube, we started working on YouTube Kids, which is a separate app, which is important for kids in terms of how we can control the quality, and we can give parents a lot more control about what kind of content is appropriate for them and their family. And there are many other things, like we actually just came out with a supervised experience for tweens, because tweens was one of the age groups that was actually hardest. They usually don't want to be on the kids app, but they're not 13 to be on the main app, and so the supervised experience is something that we recently came out with.
The Wall Street Journal has been doing some in-depth reporting on Facebook. The report is that Facebook knew that Instagram was toxic for teen girls and didn't do anything about it. Does YouTube look at the impact it has on teen users, the influence it might have on someone's body image or self-esteem?
First of all, I think it's a very important topic, and we do have a panel of experts that we work with to be able to help us understand what are the different ways that our product could be used, or how do we face some of these challenging issues to make sure that we're getting the best advice. We certainly do see, for a lot of really tough issues, that YouTube can be a really valuable resource. So body positivity, mental health, we see a lot of creators actually talk about mental health, and that for a lot of kids, it like destigmatizes and enables people to talk about what's happening and what's going on with them.
The potential long-term impacts of YouTube on teens and on children, whether it is toxic or whether it's addictive, is that something that you wonder about? Is that something that you struggle with, not just as a CEO, but as a mom?
We certainly want to make sure that we are doing what we can to be responsible with kids and in every way possible. And that's one of the reasons that we actually have worked hard to give parents as many options as possible for them to decide what is important for them and their family, whether that's like limiting screen time, like limiting what is the content they actually have access to. I mean, even letting parents just say, these are like the 10 videos. My kid can only see these 10 videos. And so that is really important for us to give the tools back to parents for them to decide what is best for them and their family.
Are you concerned about looming regulation?
There may be regulation that is well-intended, but actually then has a really negative impact.
I would like to begin by addressing the heinous attack on the United States Capitol. Like all Americans, I am outraged by the violence, lawlessness, and mayhem.
How much did President Trump test YouTube, and how much did it test you as a leader?
Election integrity is something that we see incredibly important, and we've leaned into in every way we possibly can. We treat all public figures and all public leaders the same as we treat any individual. And so meaning that everybody is held to the same standards. And so we definitely held President Trump as we would hold all other presidents and all other elected officials to the same standards that we hold our creators and anyone else on YouTube.
But was that difficult for you as the CEO of the company? I mean, that's like a big responsibility.
I mean, yeah, it is difficult, but it is very important. And we also are global. So we're dealing with leaders from all over the world. And there were a number of leaders and there continue to be a number of leaders that post or that there's content that may be a violation of our policies. But we do hold a consistent standard across everything that we do.
YouTube was the last platform to ban Trump, and you have said his channel will be reinstated when an elevated risk of violence has subsided. How and when specifically will you make that decision?
Well, we'll make that decision based on a number of different factors, whether that is like events in the news, signals we're seeing from the government, and we'll certainly continue to evaluate that based on a large number of signals that we see.
And will he ultimately be reinstated?
I mean, we've stated that we will reinstate him when we believe that there is no risk to public safety or no public danger.
Google just removed a voting app for Russian opposition leader Alexei Navalny. Yeah. The Russian government seems to be stepping up requests to take down content. You've talked in the past about your family history, your grandparents living behind the Iron Curtain, being concerned about censorship back then. And Russia is a huge YouTube audience.
Yeah.
How concerned are you about Russian government overreach?
One of the things that is important to us at YouTube is the fact that we do enable so many voices and that we do enable people to express themselves and really celebrate the freedom of speech. And we certainly, that's a core value of ours. But when we work with governments, there are many things that we have to take in consideration, like whether it's like local laws or what's happening on the ground. And so there's always going to be multiple considerations that we're going to have to take into consideration.
Navalny said that YouTube deleted a video, one of his videos. Was that at the request of the Russian government?
We certainly get requests from governments, and we look and consider why are we getting the request, what's actually happening on the ground, and based on a whole bunch of different factors, we make a decision. So we don't always, those are not always requests that make sense for us to honor, but in certain cases, we will honor them in that country.
The Biden administration seems to be targeting big tech. We've seen Mark Zuckerberg, we've seen Jack Dorsey now testify before Congress multiple times. And I've heard it said that YouTube is getting a pass. Do you think you should be up there testifying?
Well, I think we do get a lot of scrutiny. I feel like there's a lot of scrutiny. And because YouTube is part of Google, Sundar has testified a number of different times and answered many different questions on YouTube. So I do believe there's a certain amount of scrutiny. And if I were ever asked to testify, I certainly would go and testify as well.
You're one of the most senior women at Google, if not the most senior woman at Google. Google has faced a lot of scrutiny for how it treats women in recent years. How much progress do you think Google has made in hiring and promoting women across the company? And how much progress do you think still needs to be made?
I see a really big effort across technology as a whole to be able to be more inclusive. And I think that is really positive. I've been a big supporter of it since the very beginning. And I mean, I think at Google, there are many efforts and there's a lot of work that has been done. And I'm sure there's a lot more for us to continue to do. And if you just look at the stats, you can see there are not enough women. We need more women in technology. And I think we have made a lot of progress, but it's still hard. It's hard to be, it's harder to be a woman in technology. It's harder to be a minority of any kind. And so I think there's still a lot of work for us to do.
When we last spoke 5 years ago, I asked you about being a mom. You have 5 kids, and you said something that really stuck with me. You said being a mom makes me a better leader. I prioritize better. I see something growing fast, and I run towards that. If something's growing closely, I'm like, I don't have time for that. How has that management strategy played out for you?
I think it's played out really well. I think it's been, prioritization is everything when you look at it, because we have a lot of opportunity. There's a lot of moving pieces, very dynamic environment. So if you can prioritize and say, these are like the most important things to do, then you're gonna get there faster.
Larry and Sergey have now left. How long do you plan to keep running YouTube? How long do you plan to stay at Google?
As long as I have a mission that I believe in and things that I'm excited about getting done. So I have a lot of ways that I see that YouTube can continue to grow. I have a lot of products and ideas and things that aren't yet released and things that we aren't yet doing. And I'm excited about getting those done. So I think if there comes a time where I no longer have a list of projects, or I feel like I don't have that much more to add, then it'll be probably time to do something else.
Would you throw your hat into the ring to be Alphabet's next CEO? Or if the board asked you, would you step up and do that?
Well, I think Sundar's doing a great job. I'm very pleased. I think he's doing, it's a very challenging job. There's a lot of different constituents and a lot of product, a lot of different issues. And I'll just say I'll always do whatever would be wherever I could be most helpful to the company.
Do you still talk much to Larry and Sergey?
I do still see them socially, though, not work-wise.
Do you ever talk about work?
Sometimes maybe casually, but our business is very complex right now. And there's a lot of things that are happening. And so it's hard for, people may have different opinions, but to really engage, it's a long conversation.
What do you want your legacy to be?
I am proud of the way that we've been able to enable people to have a channel, to have an audience. I just met with a number of three creators, and like YouTube really was able to let them shine and create audiences in a business and employ people that otherwise never would have happened. And so that's certainly one, continuing to grow that. I'd say second, it's been really important to me too to see a lot more women in technology. That has been just a personal goal of mine, is to like be a role model and try to support women. And I feel very fortunate to have gotten to where I have, and I know it was due to like many different factors. And I want to support the next generation of women and see technology as like an open place where anyone can come and be successful. And then probably lastly, continue to grow what we're doing with education.
Susan Wojcicki, CEO of YouTube. Really great to have you on the
Thank you
show
so
today.
much for having me.
This is Bloomberg Daybreak Middle East. Your top stories this morning.
Stocks fall and gold hits the highest level since January of last year as Vladimir Putin decides to conduct an operation in Ukraine and vows to demilitarize the country.
President Biden accuses Putin of choosing a premeditated war and says he will announce further consequences for Russia later. Brent hits $100 a barrel for the first time since 2014.
The Bank of Korea leaves interest rates untouched but warns inflation will remain above 3% for a considerable time.
And Iran's chief nuclear negotiator is returning to Tehran to consult with the leadership as efforts to revive the 2015 deal reach a critical juncture.
Just got 9 a.m. across the Emirates. I'm Yusuf Gamenedine in Dubai.
And I'm Anas Crowley right alongside you. Biden calls this a premeditated war. Of course, we are talking about the special military operation launched by Putin into eastern Ukraine. To the markets, Yusuf, oil blasting through $100. We're up through that level. Just some benchmarks for you. This is the first time since 2014 on the Brent market that you are seeing this level. You are looking at a constriction around the energy markets. What will happen next from OPEC Plus? And Yusuf, of course, where do you go? The havens. You did Euro Swiss just before I came to the bond market. You're seeing this quite dramatic move in yields, breaking 1.9%. That's critically important. If these tensions persist, TD Waterhouse say we're going to continue through there. Of course, the discussion today is going to be, will this move, will these incursions delay or stymie the Fed, A, from moving by 25 basis points in March, as is presumed, but it certainly will unseat the discussion of a 50 basis point hike.
Yeah, what really caught my eye is what was said around the Russian entity basically looking to demilitarize the Ukraine. And the moves came sharp and quickly across the border, it appears, and the situation is still unfolding. But on equity futures, an aggressive repricing. The market was completely caught off guard by this latest step up. The S&P 500 mini currently called lower by as much as 2%. NASDAQ pain clearly much more significant. We could see a bear market by the end of today, with losses before today being in the vicinity of about 16%. Bear in mind that the Ukraine and Russia play such an important role in the global supply chain for rare earth metals. So think along the lines of semiconductors. They're involved in the production of key gases. That all it needs to be factored in. I want to flip the board and show you where the haven play is. It's not cryptocurrencies, it is gold. We're seeing the move to the highest level since about January of 2021 on these tensions. I was speaking earlier to Eric Robertson from Standard Chartered for real-time reaction. He said, look, we called the gold unloading play, and this is the moment to make your portfolios are anti-fragile, load up additionally on some of the defensives, and it is way, way too early to start even thinking about a way to get back into risk assets.
Yeah, the one line from one person I spoke to this morning, today is not the day to perhaps make a career-ending choice to go long of Russia. Let's see what the Asian market reaction has been. Juliet Sally has that. Jules, this is one of those convulsing moments of risk.
Absolutely, Manis. At one point, we have seen the regional benchmark index down as much as 2.7%, its biggest drop in a year. And Asian stocks are holding at their lowest levels since November 2020. Remember where we were at that point in the cycle. That was also when we learned that President Trump had got COVID at that point. So we are seeing quite a bit of sell-off coming through across these markets. You've got the Nikkei at November 2020 lows, Australia dropping the most since May 2020. Even the likes of Singapore, which has been one of the best performing globally as we see this rotation into value, has been falling quite significantly. It's down by around 3%. Let's flip the board and look at where the other risk-off moves are coming, particularly as we look at the flight to safety that Yusuf was talking about. We've seen yields on Australia's 10-year drop by as much as 10 basis points, similar on the 2-year. And of course, as you would expect, you are seeing the yen really lead those gains in G10 currencies. We've been focusing in a lot on the specific stocks in Asia that are exposed to the tension between Russia, Ukraine. Rusal came back yesterday. That was kind of on investor bets that perhaps those sanctions by the US weren't as harsh as some were expecting. But of course, today you are seeing Rusal fall in the afternoon session, extending those declines. And we're watching weakness too in the won. We had the Bank of Korea leaving interest rates on hold, but Governor Lee noting that the Ukraine crisis could have a significant impact on inflation. He has reaffirmed the central bank is prepared to buy government bonds when needed, which is something, Yusuf, no doubt we will hear from a number of central banks around the globe.
Jules, thank you for the moment. That's Juliet Saleh there. Let's flesh out then our top story. President Putin has decided to conduct what Russia is calling a special military operation in the Ukraine. President Biden is calling it a premeditated war. For the latest, we're now joined by Bloomberg's John Harney in Washington. Bruce Einhorn is also here to weigh in. He joins us from Hong Kong. John, I want to start with you in terms of the latest conversations that the U.S. president is having with his Ukrainian counterpart, and what exactly is happening in the White House.
Early Thursday morning here, late Wednesday night, issued a statement condemning President Putin and the invasion, and said that more punishments, more sanctions are on the way, and he plans to, after meeting with G7 leaders in a virtual session on Thursday, address the American people about the crisis on Thursday afternoon. And he has spoken with President Zelensky as well in the last couple of hours.
Bruce, let's take it to you and build around that narrative. The president says the world will hold Russia accountable. We have a state of martial law called in Ukraine. Your take on Putin's actions and how it will be perceived around the world?
Well, Manus, one question up until now has been whether Russia would do a limited incursion into the areas that Russian separatists in eastern Ukraine already control, or whether there would be a full-fledged invasion across the country. The Ukrainian government is saying that is now what's happening, that this is a full-fledged invasion. There are reports that there are attacks from the Russian attacks against Black Sea ports like Odessa. The Ukrainian government says that there are airstrikes throughout the country. So this is, according to Ukraine, not just a limited action in the eastern part of the countries, but full-fledged war.
John, I want to get back to you just in terms of what happens with the U.S. domestic conversation as the U.S. begins to wake up to this reality. How much capacity does the U.S. president have to initiate more engagement in the Ukraine, and how much resistance will there be for something like that from U.S. citizens?
Well, that's a very interesting question. He has certainly been preparing the American people and lawmakers over the last several weeks and months as this threat has emerged and grown. It remains to be seen how people react and what this will do to gasoline prices, say, to inflation, which is already a big problem or perceived as a big problem by the general public. But in times of crisis, sometimes the public rallies around a president. In these times of great division, will that happen? Well, we still don't know.
Okay, Bruce, John, thank you very much. Bruce Einhorn, John Harney with the very latest on the reaction from the White House to this escalating situation, which is manifest in the crude markets. Brent crude breaching the $100 barrel that we've talked a lot about on the worsening geopolitical situation. Let's get to Andrew James. He's in Singapore on the commodities market. JP Morgan say we're on our way to $110. We've just had the reporters there call this along with Biden in terms of a war. And we're breaking $100. How do you think the market is? Is liquidity there at this time? What's the momentum?
Hi, Manus. I think the momentum is definitely upward. That forecast from JP Morgan is actually an average forecast for the second quarter, meaning implying, it could go quite a lot higher than that at points. And it's hard to see how we could sort of restrain prices. I mean, the US is talking about another SPR release, but that's unlikely to have a major price impact. OPEC Plus, maybe the Saudis and the UAE could pump more. A lot of other OPEC Plus countries are having problems meeting current targets to restore more output. And it also raises an interesting question for OPEC Plus, given that Saudi Arabia and Russia are the biggest members. So, are they going to be able to agree on any course of action there? Yeah, so it's hard to see prices going anywhere other than up at the moment, Manus.
Yeah. I'll take it from here. Thank you very much for that. That is Andrew Janes. He's our energy and commodities editor. Let's get you a bit of a preview of what else is still to come on this program. We're going to get an overview of regional assets with the EFG Hermes Managing Director. With oil prices spiking, how does that change his approach to asset allocation? That's going to be with Simon Kitchen this hour.
But up next, we discuss these wild swings in the markets. The geopolitical tensions are escalating. Paul Mackel standing by from HSBC to discuss the FX risk. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
The readout is in from Zelensky-Biden. A discussion. Prepare for severe sanctions is the line from the President of the United States on the call. Biden will be imposing severe sanctions on Russia. Some of the main banks were spurred. Sberbank, VTB was spurred in the first round. Nord Stream 2 was tackled, not Nord Stream 1. Biden will impose the severe sanctions on Russia, and this is on a special briefing that took place between the two. The U.S. will continue to provide support to Ukraine.
Yeah, also an update here from Germany's Olaf Scholz, the German Chancellor, saying basically that nothing can justify the Russian attack on the Ukraine. They're going to coordinate with G7, NATO, and the EU framework. Also an update from on the ground. The Ukrainian Defense Ministry is saying that the army is repelling an attack. Intensive shelling is being reported by Ukraine troops in the east, with shelling affecting airports as well as military sites.
Okay, it's a premeditated war, according to the President of the United States of America. How's it bearing out on the commodity market? We know Russia is a huge deliverer of commodities into the world, from wheat to the softs. But here are the hard commodities. The havens are bid. Gold 1940, Brent breaking $100. JPM says we will make it to $120. You're seeing some of the biggest moves in the oil market in Brent since February 2015. Natural gas is flying higher as the risk of weaponizing commodities comes to play. Show you very quickly what's going on with the FX board, because we're going to start that conversation with Paul Mackel in just a moment. The dollar's up by 0.4%. The ruble is breaking through record lows, down another 5%. Money goes into Swiss franc, the highest level on Euro Swiss since 2015. And money goes into yen. Dollar down by 1/3%. Paul Mackel is the head of FX for global research at HSBC. Paul, good day to you. Here we are. The risk is shifted dramatically in the past 24 hours. In the very first instance, give us a perspective on the flows right now. Good day.
Well, I think in general right now, I mean, you're hitting the nail on the head that a couple of days ago, it seemed like things were relatively calm despite the tensions ratcheting up. But in the last, say, 12 hours or 24 hours, things have become a lot darker in terms of the news flow and headline risk. But we're also seeing the FX market responding in a lot more of a risk-off behavior. And the way that the playbook is playing out for the currency market is becoming very evident. That is, the dollar is catching quite a strong bid alongside the Japanese yen. So people don't want to be short these so-called safe haven currencies. And as long as this uncertainty persists, I think the flows will be gravitating in that direction and supporting those currencies.
How would a basket of currencies get chopped up at the moment in terms of sort of haven reliance or reliability? So if you had to choose, you just pointed out the dollar and sort of the Swissy and the yen. I mean, how would that get put together?
Well, I don't think that people would be expressing it versus a basket at this point, because it's more about just trying to find a safe harbor and finding liquidity and moving quickly, because the situation seems to be very unclear and there's a rapid amount of headlines that are coming out. So I think, again, leaving the basket aside, and it's just going back to what I mentioned about the playbook, it's very clear for the FX market when you have these type of uncertainties and which currencies tend to do better than others. So these safe haven ones, very liquid ones, tend to benefit. And also at the opposite end of the spectrum, the playbook is still pretty clear. Currencies that are going to be more exposed to from a location perspective, or they're big energy importers, those currencies are going to be feeling the pressure, including like the euro and even
what we're showing our viewers right now, Paul, what we're showing our viewers right now is Euro Swiss at the strongest level since 2015. You're looking at, this is the debate, whether this is a localized Russia-Ukraine conflict or whether it's going to have a global impact. And that's the view from Nomura. Right now, do you think this is a localized pan-European incident, or has it the ability to become a global contagion moment?
I think the market can't rule out the latter, because it's very dependent on what happens with energy prices. I mean, if they're going to be spiking a lot higher, that will have a global impact and just be adding to the nervousness. So to assume that it's just fully going to be localized, I don't think that that's the right path at this point. You need to be very careful at this juncture, because risk aversion could get a lot more intense.
I mean, the moves we're seeing in some of these global asset benchmarks is reminiscent of sort of a quasi-tightening of financial conditions. Paul, how do you expect the Fed to kind of calibrate its approach to this reality? I mean, they're not going to be able to ignore it. And it's going to have a meaningful impact on not just what they're going to do in March, but what they're going to do for the remainder of the year.
Well, I think that's a good point. And I think that some of the Fed members, even talking this week, have suggested that it is something that's on their radar. It's not anything significant enough yet to make them think differently. But again, like all of us, we're just watching the developments very closely. And if it goes down a very dark tunnel or even darker path than where we are currently, it'll be harder for the Fed and other central banks to ignore it fully. But again, back to the playbook for the Fed at this juncture, I think that there's still the way that they're talking about the need for tightening monetary policy come the March meeting. That's the game plan. But, we have this very significant event risk, and if it becomes a lot more disorderly, again, it might make them think a little bit differently.
And Mary Daly from San Francisco yesterday using that very language. Absent of any significant surprises, March is a live meeting. What, in your view, they got to assess what happens between now and then, and none of us knows what that is. To not go ahead with a 0.25 percentage point hike in interest rates as inflation is at a 40-year high, even in the specter of heightened geopolitical tensions, would that diminish their credibility even further?
Not necessarily if it's associated with this event risk that we're discussing right now. Because if they're pausing because of that, then perhaps that the situation is deteriorating much more than what we're witnessing currently. So, in other words, it might be a prudent course of action than anything else. And you have to bear in mind that some of the central banks that are talking quite hawkish lately are responding to higher energy prices, which is taxing consumers, real income squeeze that is occurring. And that is not necessarily the right approach. And we know who's very much been hawkish lately. That's been the European Central Bank. So, again, I think that these central banks will look at this, digest it. If it gets worse, they might think a little bit differently, want to proceed more slowly. But as you said just now, we don't have a crystal ball at this point. It's very, very, very fluid.
Paul, some of the high-vol, high-carry currency along the lines of the MEX and sort of the South African rand, they've kind of proven very resilient in the last few trading sessions. I'm wondering whether that is going to endure or whether there's going to be a wake-up call and perhaps an adjustment to that.
I think that's, again, a very good observation that the South African rand, which is typically a very high beta currency in periods of significant risk aversion, it would be weakening fast. I think, again, near-term implications, this currency, I struggle to think it can be completely resilient to it. But again, there are good reasons why it is held up. It doesn't have the same external vulnerabilities as it had a number of years ago. So I think that there's a little bit of anchoring from that perspective. But if tensions become increasingly problematic and the market's nervous, then these currencies will prove to be vulnerable too.
Paul, great catching up at this point in time. That's Paul Mackel. He's the HSBC head of global FX research. Let's consider how all of the latest headlines on the Ukraine could play out in the Middle East region. Simone Foxman has those details from Doha. Simone, let's start with Brent crude above $100 a barrel. That is going to be, a fantastic kind of scenario for all the major producers in this part of the world.
Yeah, that's right, because a lot of them were assuming something like $60 to $70 dollars per barrel when they built their budgets. So now we see a much higher oil price. That better allows them to meet their fiscal obligations, means they have to go out and issue less debt. But frankly, a lot of these energy producers are going to be under a lot of pressure from the United States, from other consumers, to boost production of both natural gas and of oil. Frankly, Qatar, the likes of Qatar, Libya, Nigeria, Egypt have already been approached about whether or not they have excess natural gas supplies that they could send to Europe, particularly in the event, which we have not yet seen, that Russia would cut off natural gas supplies to Europe. Europe very dependent on Russia for its natural gas. We're also going to watch that OPEC meeting next week because consumers likely to put a lot of pressure on OPEC to also ramp up supply now with Brent over $100 a barrel.
And politically, in terms of what do we know so far from the countries in the region and how they will react? I mean, you talk about OPEC Plus, but of course we saw the Saudis not react at all in the eye of the Omicron storm. So I don't get the sense they're going to immediately react. What are you hearing?
Yeah, no, and I think when I was talking to a lot of energy ministers from these producing countries earlier this week, the message was, geopolitical tensions are sort of short-term things, and we're going to see how this plays out. We're not going to change our increase in production plan, at least immediately. But I think even more broadly, there are a lot of push and pull between Russia and the United States in this region. There are a lot of big investments that the likes of Qatar, Rosneft, for example, have made in Russia. Also, Saudi Arabia has signed a military pact with Russia in the past. So there's going to be some pull from the Russian side, even though these folks are really strong allies with the United States. Elsewhere, we could also see some involvement, some impact on conflicts in Syria, as well as the situation in Libya, a very tense political situation there right now, because Russia has a really important international role to play in both of those places. One thing that has been brought up by some experts is, could Russia weaponize essentially refugees that are going to Europe? That would create a real headache for Europe at a time when it's also dealing with the stress of Ukraine.
What are some of the other considerations that investors need to monitor as we count down to the open in the Middle East?
Yeah, two places I think that really could be in play today. One is Egypt, very, very dependent on Russian wheat supplies. 80% of their wheat coming from Russia, according to a cabinet minister there. The government clearly trying to figure out how to deal with this, but this would clearly add to inflation. It would add to consumer prices. Another place we're watching also that inflation story is Turkey. We've seen 50% year-on-year inflation, 48% year-on-year inflation. I'll give them that extra 2% in January. How do food prices, how do energy prices factor in? Turkey also reasonably dependent on those countries for wheat supplies. Also, they're very dependent on Russia and Ukraine for tourists. 23% of Turkey's tourists last year came from Russia and Ukraine. That's an important part of its GDP. So let's see how this plays out. But those, I think, the top two markets to watch as we head into the trading day here in the Middle East.
Simone, thank you very much. Simone Foxman at the Qatar Financial Centre in Doha. We've just caught up with the global head of FX from HSBC. The playbook is go for the classics, which is your Euro-Swiss trade, which is just off its highest level since 2015. There's an exodus from risk assets. And the question you must now debate as you look at the Aussie imploding Yusuf there is whether this is a regional conflict or has it the capacity to go global in terms of its inflation, destruction to the world. And Biden talks about more severe sanctions. So right now you're seeing the dollar rise and the ruble implode to a record low. Interesting, I was with Nomura yesterday and they said, actually, fast money is still long these Russian assets, but do you want a career-ending move to step in and buy ruble today, as one trader said to me?
I mean, yeah, the other anomaly has been this year that EMFX has been where to hunt for some of the best haven assets in 2022, high vol, high carry currencies that could correct. So think along the lines of the South African Rand and the MEX. We just were speaking with HSBC around that theme. I want to flip the board and get to equity futures in a bit more color because we're seeing a sharp sell-off on futures on the S&P 500 mini and on the NASDAQ futures as well. You think along the lines of how supply chains already stretched and under a lot of stress, how they could get affected, rare earth metals getting produced out of Ukraine and out of Russia. So semiconductors could get hit quite hard. And that is why you're seeing a bigger correction on the NASDAQ futures. It is something to keep in mind for sure as we count down to the open later in the day, especially in Europe.
Keep an eye on this because you've broken some very important levels on the S&P 500. We're deeper into correction territory. The NASDAQ is in its first bear market since 2020. But Evercore yesterday said, fight the temptation to buy an ephemeral rally. And they said a break of 4,200 takes you down a further 16%. Bitcoin, we'll leave you with a snapshot for the crypto boys and girls, implodes by 7.5%. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Daybreak Middle East. Our top stories this morning.
Stocks fall and gold hits the highest level since January last year as Vladimir Putin decides to conduct an operation in Ukraine and vows to demilitarize the country.
President Biden accuses the Russian president of choosing a premeditated war and says he will announce further consequences for Russia later. Brent crude pops through $100 a barrel for the first time since 2014.
And the Bank of Korea leaves interest rates untouched but warns inflation will remain above 3% for a considerable time.
And Iran's chief nuclear negotiator is returning to Tehran to consult with the leadership as efforts to revive the 2015 nuclear deal reach a critical juncture.
Okay, markets are grappling with the perspective of risk. There is an exodus from risk assets. Let's see how that plays out in Asia. Juliet, this is a concern about the potential global impact from this escalation in Ukraine and Russia.
Yeah, absolutely, Manus. And investors just repricing global assets here too. As you see, there's money going into bonds. Have a look at the yield on the 10-year US note, down by some 11 basis points. Similar moves in Australia's 10-year, now dropping by 11 basis points too, as we look to the fact that it is going to be an ugly session for Europe and US markets as well. You mentioned the Nasdaq futures towards that bear market territory. You've got Germany's DAX futures off by about 4%. We are seeing money going in, as we've been talking about, to the safe havens of gold, the yen as well. But have a look at the big moves in these soft commodities that are also trading at multi-decade highs. The likelihood of shipments being paused, being disrupted from Russia, Ukraine, adding to the gains you're seeing in the likes of wheat and soybean. And of course, we can't forget the big move we've been talking about in Brent, above $100 a barrel. When it comes to the ruble, I know you've been touching on that too, towards those record lows, those lows we haven't seen since 2016. And then here in Asia, you're seeing even the markets like Singapore, which had been one of the global outperformers, being hit hard today, down by around 3%. You see the likes of Hong Kong's Hang Seng Index extending its losses to more than 3% too. Yusuf, the regional benchmark index is on track for its worst day since February last year and is actually now holding at November 2020 lows.
I mean, COVID-19 hit the airlines hard, and then in the last few months, the thinking was, well, you know, reopening plays back in vogue. That's now changing again, isn't it?
It is. The reopening theme had been a front runner in January. Have a look, though, at the impact of these geopolitical tensions and the fact that you've got Brent above $100 a barrel, to a Bloomberg index of airline stocks falling by some 4%, seeing big falls across all of these regional airlines, the likes of Japan down by 6%. You can see Qantas there in Sydney off by 5%. We were speaking to the airline CEO, Alan Joyce, earlier on Bloomberg television. He did indicate they are hedged until June, but he did not indicate at what point price that was. Yusuf.
Jules, thank you very much for the analysis. That is Juliet Sally with the finger on the pulse of the Asian markets. I want to flesh out the political tension surrounding Russia and Ukraine. A breaking line hitting the Bloomberg. Let's get to that first. So this is a tweet from the British Prime Minister Boris Johnson. He writes that President Putin has chosen a path of bloodshed and destruction by launching this unprovoked attack on the Ukraine. As we consider kind of the implications for markets around the world, I want to get to this part of the world, because a higher oil price in theory would mean a supportive force for sentiment in terms of equity markets. Simon Kitchen, the managing director and head of strategy at EFG Hermes, joins us now. Simon, this is higher oil prices, but for the wrong reasons. How do you expect Middle East equities to handle that in the coming hours?
So I think they'll take their lead from Asia today. You know, it's very difficult for MENA markets to do well when the S&P is down, when Asian markets are down so heavily. And obviously in Saudi in particular, you've got a very retail-driven market, and those investors will take fright. As you say, oil is up, but it's up for the wrong reasons. So for much of last year, it was up on a global recovery, and that was very good for regional markets. But being up on a sort of global political crisis is not the best reason. I do think when you look a little bit further out, I think actually the Middle East is quite a good place to hide for EM investors. There's a lot of momentum in our markets, and gem funds are very underweight the region, and I think they'll continue to rotate money into the region where we've got fixed exchange rates, and also they'll be rotating money away from Russia into GCC, the other major oil-exporting area in in EM.
So you expect an actual equity flow rotation, exit Russia, enter GCC, Saudi or the UAE?
I would say Saudi. I think Saudi is really coming into its own now. It's one of the major EM markets, right? If you look past East Asia, it's up there with South Africa, for example. And I think the breadth, the depth of the Saudi market is more and more attractive to these EM funds and also to global hedge funds. You know, there's a lot of liquidity there. You can play big global themes very easily in Saudi. And as I say, the EM funds are very underweight Saudi. It's coming onto their radar. They're a little bit late to the party, but I think that they'll be shifting more and more money into the GCC over the next few months.
Yeah. I mean, we're looking at a board here of the best performing indexes globally on the equity front. It's actually the Tadawul, the Saudi Tadawul, that is the world's best performing market, up 11% a year to date. You compare that with losses to the tune of about 12-13% for the S&P 500. Simon, how does that leave the Saudi market maybe vulnerable? Because going into this, there was already a concern around valuations. Maybe it could go the other way here as a bit of a reality check begins to take shape.
I think, you know, you're going to, as I say, it's a retail-driven market. You saw a nice, very healthy shakeout in the Saudi market in December last year when the Omicron phase was coming through in the COVID pandemic, and I think you'll see, you know, another shakeout today. But to be honest, that's quite healthy. You're right; the valuations are pretty punchy. You look at, you know, Tadawul relative to EM. Relative to the other MENA markets, it is expensive, but the earnings momentum right now is pretty good. You've had some very strong results coming out from the fourth quarter. You've got a leveraging up going on in the economy, which is very good for the banks. You've got rising U.S. rates, right? That story is still yet to play out, but that's very good for the Saudi banks, and you do have this oil price. So the momentum is, I think, very strong as you look out over the next few months. But like you say, valuations are punchy, and that's a reason why the IPO pipeline is so busy.
Given the rise in tensions and the escalation of conflict, Simon, do you expect the Fed to go ahead at this level of tension with a rate hike in March?
To be honest, I think they will. I think that the inflation pressure in the U.S. has been building for some time. It's sort of well above the long-run averages. I think you can argue as you look out over the year whether they decide to, they decide to go for slightly fewer hikes, but they are to some extent behind the curve. I think that the Fed does need to keep hiking rates. It was interesting. The comment from the Korean Central Bank earlier today saying, look, we're going to hold, but, you know, the outlook for inflation means we're going to have to keep hiking further down the line. So, yes, I think they'll continue to go ahead. The political tensions are a problem, but they are inflationary as well.
Indeed, it is about credibility. Simon, thank you very much. Managing Director and Head of EFG Hermes, our guest this morning. A breaking news line from Antony Blinken in the U.S., having spoken to Stoltenberg at NATO to secure the Allied territory. I spoke with Jens Stoltenberg. This is in a tweet from the Secretary, Antony Blinken, and he's saying, Yusuf, Russia's attack on Ukraine to discuss the alliance's coordinated response. We are united in responding to Russia and strengthening NATO's eastern flank. I think this is going to be interesting. What is the strengthening given this current state of play where Putin launches this military operation into eastern Ukraine?
Yeah, there's been quite a scramble on trying to understand where exactly Russian troops and attacks are taking place. For their part, the Ukrainian Defense Ministry has denied that Russian troops have landed in Odessa. We will be across all the news lines and the market reaction. Much more ahead. This is Bloomberg.
difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Saudi British Bank has returned to full-year profit, posting 3.2 billion riyals for 2021 versus a loss of 4.17 billion. That was a year ago, primarily driven by lower provision for credit losses and total operating expenses. Good news for the man at the top. Managing Director Tony Cripps joins us now for his first interview. Welcome to the show, Tony. Good to have you with us this morning. It's a fairly tough day to come and talk about things about running a bank. But let's start with the business first of all. We're trying to understand what $100 oil means for Saudi Arabia, means for the economy. Give us your outlook for the Saudi economy this year and what role you'll play in that. Where will you win?
We have had a positive outlook on the Saudi economy as the world comes out of COVID. It's a reflationary environment, as we know, maybe a bit too much for central bankers, but all of that underpins the Saudi economy as a big producer. But on top of that, the areas that are opening up for Saudi British Bank and other banks, but particularly our franchise, which is connected to HSBC and very international. As the economy opens up to tourism, it's one sector we really like, clearly. And, you know, I've been here 9 months. It's a country that a lot of tourists haven't been to, clearly, and it is quite phenomenal, the development that's going on the Red Sea and Alula and others. But in addition to that, the opening up is bringing investment into Saudi in infrastructure, which is clearly required in the transition to net zero. There's a huge amount of infrastructure development and some very exciting new technologies.
And we'll get to that, Tony. Sorry, just because we want to cover a lot of ground with you, so we'll try and squeeze as much as we can into this. Tony, I look at the unfolding crisis between Russia and the Ukraine. I look at the repricing that's happening across asset classes. How exposed is SAB to a potential further deterioration in this crisis? And what does that mean for financial conditions as far as you can tell?
Well, financial conditions are tightening a bit and will tighten more. Credit spreads have widened a little and nominal interest rates have risen, of course, as well, and central banks are looking at tightening. But overall, the outlook for the Saudi economy is positive, and the impact specifically of this conflict is, of course, unpredictable to some extent, but we haven't changed our view on GDP growth, nor have we changed our view on elevated commodity prices, which overall is a benefit to a country that's such a big producer. And the expansion of the...
What is the risk from $100 oil, Tony? Because this is what we're trying to grapple with. For you, you could see it as a tailwind, Manus, in terms of what happens around my economy. But it has got a global repercussion. Our guests this morning are warning of the inflation shock. What's your first take? Is it tailwind or a potential headwind for the consumer and the economy?
There's no doubt there's going to be a squeeze from higher interest rates and on top of that higher prices, which does squeeze consumers. But again, the impact of that in Saudi is not something so far that we're particularly worried about. The economy is expanding very well and higher prices are being absorbed and managed in the economy. And there's sectors like housing, which has been very strong, which continue to underpin growth. And the opening up of the economy is something that we're very positive on.
I mean, we talk about the inflationary pressures and rising commodity prices. Now, aluminum hitting a record high in London, surpassing the 2008 peak. Tony, what is your outlook for the relationship with HSBC, and to what extent could we see perhaps more involvement going forward? What's the conversation?
Well, HSBC owns roughly 32% of SAB and has been in the region for over 70 years. And in turn, SAB has a partnership with HSBC Saudi and owns 49%. So it's an intertwined relationship. And clearly, with the economy opening up the way it is, both socially, internationally, from a corporate and institutional point of view, that partnership is a perfect way to service clients in the kingdom, both at a retail level, particularly the affluent space, but also companies coming into Saudi to base their operations here regionally, which is, of course, a drive from the government. So we're perfectly positioned to be able to facilitate inbound and outbound flows across retail, corporate, institutional, investment banking, the whole universal operations of HSBC and Saudi in the kingdom. So we're very excited about that opportunity, and we're seeing huge interest in Saudi, notwithstanding challenges that we'll face with volatility. If you take a longer-term view, the transition economy is really
Tony,
exciting.
just on those opportunities for the bank, I mean, we started the conversation, you were optimistic about tourism. Every broker and his mother and father has come on this show saying buy Saudi banks because of the mortgage market and the housing market. My question to you is this. As you look across the books of Saab, are you going to play for more mortgage market share? Because some people would say to us, look, you've missed the boat on this as an institution, not you personally, that Saab missed the boat just as this market slows down. So will you grab market share in the mortgage market? And do you agree? Is it slowing? And if so, by how much?
It has slowed down a bit, but it's a relative position. If you look at the start of the year, the start of 2021 was exceptionally strong in mortgage growth, so it's relative to that performance. So it slowed a bit, and the policy tightening has been very gradual, and the objectives of the government are on track, in fact, ahead of the targets that were set. So it's going to come off the frenetic pace that we saw in 2021. So Saab was in the process of merging, and during that process, we missed some of the market share gains in mortgages, but we're back in the market post-integration. We're in full product range, and actually our volumes were very strong last year on origination and continued to be quite stable in the early part of this year. Saab is on track to look for about a 30% composition of its retail business and about 70% as an institutional and corporate business. So we're not overly skewed to the retail growth. We have a very, very strong corporate business in the kingdom.
All right, Tony, this has been a fantastic conversation. Thank you for making it to the program. We look forward to having you back again later in the year. That is Tony Cripps. He's the Saudi British Bank Managing Director. I want to get straight back to some of the big moves in global markets. The Russian ruble coming under significant pressure. We're down as much as 1% about a couple of hours ago, the lowest since 2016. But that sell-off has exacerbated now. We're now to a record low against the dollar in the interbank trade at 89.74, just short of the key 90 mark. Much more ahead. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Natural gas prices are on the move, and they've soared on tensions around the Ukraine. And consumers have begun putting pressure on producers in North Africa to boost supply. Bloomberg's Simone Foxman spoke to the Egyptian Minister of Petroleum and Mineral Resources on Tuesday. She started off by asking about the impact of geopolitics on the natural gas market.
Geopolitics do not have longer term, and this could, in my opinion, after winter time, because now also we are in the peak season of winter in Europe. So I think it will relax coming to spring.
We've reported that the White House has actually approached Egypt to try and see if there's any excess natural gas that could potentially be sent on to Europe if Russia were to cut natural gas supplies. How do those discussions go?
Well, I wouldn't say it like that. I would say that Egypt has got friends everywhere, and we would like to help with our infrastructure, with our additional gas if there will be additional cargoes. So in these cases, we definitely are going to give a hand if, as I say, this would be possible, because some of the, some of the contracts are on long term, and some of the contracts are perhaps tied more on contractual obligations. So therefore, having some free cargoes would help us in diverting them when this is required and needed. And as I said, since this mechanism of trading and purchase of cargoes in Europe are being done through private sector and private companies. So we have seen lately that, and not only lately, if I would say in January, which is last month that has ended, we have seen the cargoes that has left Egypt were all directed and sold to Europe. So definitely we are positioned to support anytime.
You mentioned earlier LNG capacity expansion. Do you have kind of targets in mind for that? What should we expect in Egypt from LNG?
No, expansion would be tied up with new discoveries, new added reserves. In this case, this would justify economics. So at the scale that we currently are running our operations, with the current reserves that we have in Egypt, perhaps even with coordination with what we currently get from Israel and potentially from Cyprus, this is all good for the current capacity on a short term and medium term. Perhaps on a longer term, if we together in Egypt and Eastern Mediterranean countries would be lucky enough to discover more gas and are seeking the development of this gas, I think this will be a mandatory step to expand our LNG plants. And I think in this case, a lot of investors, including the developers, the upstreamers, will be ready also to invest.
You have COP27 coming up in Egypt later this year. What is your goal, essentially? What's the message that you're going to try and send to the world as you host this event?
It is an important event, definitely, and we will carry a lot of responsibility hosting this COP. We think that it is important to echo what we would like to have as countries where and representing Africa from one side and representing the kind alike or mind alike countries. So what we would consider and make sure that this would be good is to make sure that the resources that are there could be optimized for the countries there, as well as we would have a fair transition to energy, as well as just and reasonable requirements, all coupled with adequate funds and technology. So we all are committed to Paris agreements and to all COPs and to the let me say greenhouse gas emissions and the climate change compact, definitely, and carbon reduction and all the emissions that are not needed, definitely. But meanwhile, we need to come to senses and to be reasonable. Therefore, we would like to have a successful COP by be vocal to the majority of non-developed countries.
Markets are in a decidedly risk-off mood, but there are consequences to the oil market on this special military operation launched by Putin into eastern Ukraine. Yusuf, to the oil market, JP Morgan said it could make it to $110, RBC say $115, but that has global inflation consequences.
Yeah, and as we look to further reaction, we're seeing Germany's Scholz, who's apparently spoken with his counterpart from the Ukraine. Equity futures called lower dramatically here. On the Euro Stoxx futures down 3.7%. Nasdaq could be heading for a bear market. Much more ahead. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This is Bloomberg Daybreak Europe. Your top stories this morning with me, Menace Cranny in Dubai. Russia attacks targets across Ukraine after President Putin orders strikes. Ukraine calls it a full-scale invasion. President Biden condemns the action, saying he'll impose further sanctions and consequences on Russia. NATO calls the attacks a serious threat to security. Markets convulse. Stocks plunge. The ruble sinks. The dollar and gold and treasuries surge. Brent tops $100 a barrel. Biden says Putin launched premeditated war. The words of the United States president on Ukraine that will result in a catastrophic loss of life and human suffering. The responses are starting to come in from Boris Johnson. But let me take you straight to, it should just be said that Putin has countered that comment with he is making this move to protect Donbass, that NATO crossed a red line. They do not plan to occupy Ukraine. Let me show you what the President of the United States said. This is a readout on one of the calls that we had from earlier. The President is calling it a premeditated war, and the risk is a catastrophic loss of life. The United States and its allies and partners will respond in a united and decisive way. How is that playing out at the moment? If you are waking up, you are looking at this escalating tension between Ukraine, Russia, and the eastern provinces. To the markets, S&P 500 deeper to correction. Evercore warned you yesterday, break 4,200, you're going to plunge by another 16%. So we are exiting risk at a sharp pace across these risk assets. 10-year yields, money flows in and breaks the 1.9 level in the bond market. You're going to have a huge discussion now about whether the Fed can go ahead and raise by even 25 basis points in March. As Mary Daly warned that there would need to be some exceptional reason for them not to go ahead with their move. Absent of significant and negative surprises, gold flies higher, the havens are bid, and that is manifest in the FX board. Let me show you where Euro Swiss is strengthening to the highest level since 2015. On Euro Swiss, bottom left, we're off those highs in Swiss, lows in Europe. You must now divine whether this is a regional conflict with a global consequence in inflation and risk, and that is to the high beta currency of Aussie, where you see this implosion in the Aussie as yields fall by 10 basis points. The Aussie comes under that convulsing. Money goes into dollar yen, and indeed the ruble. Well, the question is this: what level of intervention is happening? You are at a record low on the ruble, and more severe sanctions are to come. Will Russia bring its FX arsenal to bear on the ruble as forces attack targets across Ukraine in what Ukraine's foreign minister has called a full-scale invasion? Equity markets, as I've shown to you, have moved. Oil's over $100 a barrel. Let's bring in